So the TOEFA for PRS should be done by now. I think you guys can. We'll start with the next one. We will start with valuation of inventory. We give more time, people will start texting. Hi, how are you? What are you doing? I am doing fine. Get back. Hey, this much time is sufficient. Yes. You guys are not running a marathon. You are doing a marathon session. Dayan, done. Great, guys. Okay. What I would want you to notice, talking about running it as a marathon. Any runners in the class? Any runners? Any runners? Anyone who runs sprinting or marathon? We have a great runner, but he's not in the class today. We had one guy in Shishadpuram batch. He ran a half marathon, 21 kilometers. Anyone in the class who sprints? Oh, sprint, nice. He's raising his hand. What do? You sprint or you run marathons? Run marathon. Oh, nice. How much fun? 11, 20, 21? 21? Very nice. How much do you think you can, like, what is your speed for an hour? Like, if you run for an hour, how many kilometers? Okay, if I say 10 kilometers, what is your best 10 kilometers? If you run 10 before. You don't remember the time? Ravi, yes, Ravi. How much? Hey, not on Subway Surfers. How much? You don't run. Now, otherwise than the time when the dog was behind. No. Calculate Madi, after speed of oh God. Calculator will say E or something. See, the metrics that we find or the metrics that we use is kilometers and meters. No, 1 kilometer is 1000 meters. How much is a mile? 1 mile is how much? 1.6 kilometers. That is about 1600 meters. Shh, listen. It was till late 1950s that people were trying to run 1 mile in less than a minute. This is a kind of challenge that people pose for themselves. So in less than 4 minutes. They wanted to run 1 mile in less than 4 minutes. That is 1.6 kilometers in less than 4 minutes. People used to take 4 minutes 10 seconds, 4 minutes 15 seconds, 4 minutes 20 seconds, 4 minutes 30 seconds, somewhere around this. But it was very close to 4. So people had this target of doing it for less than 4 minutes. So everyone kept themselves a target to do it in less than 4 minutes. Whenever they tried to do it in less than 4 minutes, people fainted. People, let's say, laid flat on the ground with cramps. They couldn't even complete that entire 1 month. This is what started happening. So this happened with cricket also. No? Starting from Saeed Anwar's 192 not out, 186 not out, 186 not out, 184 not out. Starting from that time, the 200 in a one-day international match is always something which people come very close to, but fail badly. Correct or not? MS Dhoni came till 183. Saurav Ganguly came till 183. Get that? So lot of times, lot of people have come to 175. Chris Gayle did once. So people come till 170s, 180s, but they don't reach that 200 mark. 200 people thought it's impossible in a ODI match. Till the time, Superman of cricket, Sachin Tendulkar did that. So Sachin Tendulkar against South Africa, you know that he scored that 200 in a match. The moment he did that 200 in a match, in the next 1 year, Virendra Sehwag did it. And then Chris Gayle did it. And then, Virendra Sehwag did it twice in fact. And Rohit Sharma did it 3 times. Rohit Sharma went on to score 264 not out. Oh my God. So, but all this 20, 30, 20, 25 odd years of one-day cricket, even when the one-day cricket was 60 overs max, people still couldn't do that 200 in a ODI international. But the first one to break the barrier was, once Sachin broke it, people did 200 in less than 1 year, 3 to 4 people did. You get today, so many people have done it. You agree with me? Similarly, one entire mile, that is 1600 meters in 4 minutes, was an impossible task. Ever since running marathons or long distance running or like this longer runs became famous, people were trying to reach this mark and no one could do. And one fine day in the year 1953, George Barrister is the name of a man. He came up from nowhere of the records. His name was not even in the top 10 runners or top 15 runners. He became a record holder to run 1 mile, 3 minutes 59 seconds. And after he did it, everyone was surprised because he's not even a famous name. Sachin Tendulkar was always a great man. His name was always. And after this, George Barrister ran this one entire mile in 4 minutes. No, the next 1 year, 10, 15 athletes did that because he shared the secret of how he did it. So the entire question was about how could he run a mile in less than 4 minutes. He was called for an interview. Then he was interviewed. Like now, if you search for George Barrister on what to say, just search it on the phone, you will hear a lot of stories. This is a very less spoken about story. You only hear about how he planned. But there is one part of the interview. If you find it rightly on YouTube, you'll find the video of that guy himself talking. This way back in 19. So you'll find that video where he's talking how did he crack that. An amazing video. You should just listen to the way he talks. So if he's been asked as to why is it that how did he make it possible? No? The answer was very simple. He told whenever he saw all the great athletes, his inspiration, people whom he looked up to, all of them when they tried, no, they failed very badly. Number one athlete at that time failed. Athlete number two failed. They didn't just fail. It's not like they tried to finish a mile in 4 minutes and they took 4 minutes 2 seconds. If they tried to finish in less than 4 minutes, no, 3 minutes 40 seconds, 3 minutes 30 seconds, they fell flat on the ground and they couldn't even complete the race. Limping. They couldn't even complete. Such bad. They didn't complete the race. Not completing a race is a very, very bad thing for an athlete. So when this happened, no, when this guy was questioned, he told, I tried to see as to why is it that they're all failing. The problem was very simple. All these people, now you are a sprinter, you are a runner. What would you train yourself on? Run rigorously, to train your ankles, train your paws, to train your toes, train your thighs, to train your spine and then back and then entire lower body. You train it very, very hard. Leg day. How many of you go to gym? Your leg day, one day often, they do leg day every day. So they run in the water. They run in the water. They run with rope tied to their back. So they run with weights tied and then lying on the ground. So they did all possible things to train themselves. But what made them fall on the ground flat without even completing the race when they tried to finish a mile in less than 4 minutes is they not able to grasp enough breath and their heart not pumping enough to say rush into their body to fell flat on the ground, not because they had a cramp in their, or they might have fell because of cramp in the thigh, or they might have fell because their body got completely dehydrated because the heart could not pump energy at that level for that long time. But they didn't focus on the heart. Everyone was focusing to tip of the finger, upper body, the entire lower body, back, the waist, all of this. But that's all waste. Focus on the heart. What he did for the next few days is he focused on breathing. He focused on enhancing his lung capacity. He focused on holding the breath for long and then taking longer breaths. And then he focused on how to ensure that he can control his heartbeat and then calm itself. Focus on how to keep his blood pressure down and then the limits that he can take. He ensured that how can he just take one sip of water and then not drink water for next 5 minutes and then run at that speed. And that made it possible for him to. He disclosed this series that what exercise was needed was not just on the lower body, but it was very much required on how to keep your heart focused. And then right after in the next, people started meditating. People started sitting, going underwater without a certain period of time, and then focusing on their lung enhancement as well as their breath controls. Next one again, next top 10 athletes could do it. Today, running a mile in less than an hour is less than 4 minutes is almost everyone's job. Lot of athletes do it because that training your upper body and then training your lung capacity as well as heart is a part of the curriculum in training. So, what is stopping you might not be what's very much required for the race. So, it might be somewhere else also. You need to understand the problem, what's stopping it. That's when you'll be able to figure out the solution to the same. So, to find a solution to the problem, you might have to go far from the problem. Find solution to a race what you're losing. You might have to not think that the legs are. You need to go far away from the problem to find the solution. That's a little bigger perspective that you would need to have. And one thing that Roger Bannister is known for, or the stories that he's known for, is the preparation. When he was asked how could he do it, no? This part is famous. This when you search, no, this is what you will find. So the story that he says is he had to run 1 mile, that is 1,600 meters in 4 minutes. So first he trained himself to run 800 meters in 2 minutes. Then first he trained himself to run 250 meters in 400 meters in 1 minute. Then he trained himself to run 800 meters continuously, less than 2 minutes. And finally he could do it 1600 meters in 4 minutes. That's what it was. So basically, no target is unachievable. It only has to be broken down into several small pieces from which you can take it. Can I eat you? You say no. No problem is not solvable. I just have to break you into enough pieces from which I can take you into through my mouth. Correct or not? So if I can break you into such small pieces which I can swallow from my mouth, no, I can eat you. So the point is you need to break down the target. You need to break down the target into enough small goals from where it will only become a plan of action. Great. That's a small thing that came to my mind when people told that you took longer than 4 minutes for your BRS. Chalo, let's start with chapter 4, valuation of inventory. Everyone ready? Very good. So, valuation of inventory is another topic which has to be done in the sequence. I totally believe in the sequence when it comes to at least first 5-6 chapters of your syllabus. You need to do chapter 3 BRS, you need to do valuation of inventories. Only and only then you can go to the final account. If you do final accounts, goods center, return of accrual, consignment, and then later do valuation of inventory, it's a very incorrect order. The reason is if you see the accounting cycle, what do? You start with recording of transactions, post them to ledger, then prepare trial balance, take the trial balance and then prepare final account. Do you do that? Okay. If there is a purchase transaction, sale transaction, expense, income, all of this, they would come in journal. From them you prepare respective ledger accounts. Ledger say you take the balance and then post that balance to. Oh, careful. You might break your leg. Exam kaiyallo badi kali genadri. Take care of your entire body till the exam. Okay. Get what? A kali landri exam ki hoಗ್ತೀರಾ. ನೀನು ತಗೊಂಡು ಹೋಗಬೇಕಾ? I am Shahrukh Khan. But Kareena Kapoor will take you like no one will take you to exam or take care of your body, guys. Please. Yeah, don't do long jump, high jump, not till exam. You know, 20 dina. Silent tag, Manal Kutkoli is what I told. What did I tell you? Silent. Kutkoli means so bad, offensive. It's going live on YouTube. Yeah. When they see it live. Now listen. So every transaction will go through journal ledger. But certain things, no, we can't record in journals. For example, you might record purchases, you might record sales, but you cannot record stock in ledgers and journals. Why? Stock are off-book records. Stock is off-the-book records. For instance, no, previously also when we discussed, we told that it's about identifying transactions and events. So identifying transactions is pretty easy. Identifying events is not very easy because events is not a specific activity. Event is a result of an activity. For example, writing exam is your effort. It's like a transaction. The result that will show up in the month of January is your event. Similarly, purchase and sale, what you do is a transaction. As a result of purchase and sale, what results is closing stock. Expenses and incomes are transactions. Result of such are expenses and incomes, profit or loss is an event. For events, there are no journal entries. For events, there are no journal entries. Constantly. Not you. One is all three of you. Please. Yeah. So I'll leave you people by some time. Not so early, but little later. 6 o'clock dot. 6 o'clock dot I'll wind. Dot 6 o'clock dot means akade yenilla anta. I'll leave you 6 o'clock. Okay? Done. So after that it's your time. For now, please listen. Yeah. So events doesn't have journal entries. Events don't have. For example, tell me what is the journal entry for closing stock? What is the journal entry for closing stock? Closing stock account debit. There is no journal entry for closing stock. There is no journal entry for closing stock. So closing stock has to be valued. Whenever you do trial balance will have purchase, trial balance will have sales, trial balance will have expenses and incomes. Trial balance will not have net profit. Trial balance will not have closing stock. These have to be found separately, and that is the reason usually in a final accounts question they give trial balance and they give closing stock in the adjustment. Get this? So in final accounts chapter you will have trial balance with adjustment by closing stock. How do we find that closing stock? How does the organization find that closing stock that they can give in adjustment? That's what we will do in this chapter. So what is answer in this chapter is the question in final accounts chapter. What is the answer in chapter 4 is question in final accounts chapter. In this chapter we will identify how to value our inventory. When we talk about valuation of inventory, valuation means representation in terms of money. Representation in terms of, what are we trying to represent in terms of money? Inventory. What are we trying to represent in terms of money? When we talk about inventory, inventory will include 3 variants. Variant number 1 is finished goods. Variant number 2, work in progress. And variant number 3 is raw material. Raw material is 0% process. And then work in progress is semi-processed, and finished goods is a final product which will be sold. So the final product that will be sold in the ordinary course of operations is finished goods. If our finished goods is a t-shirt, then our raw material is cotton and our semi-finished part is cloth, which is in the process of finishing. See, this thread or cloth is our work in progress and our raw material is cotton. So what I do in my organization is I will take cotton which I will consume and then make thread out of the same, and then from that thread I will make cloth, and from that cloth I will make shirt. So raw material is cotton or wool or whatever, and then our final product is shirt. So other than the raw material and working products, anything in between is basically, other than the raw material and finished goods, anything in between is basically work in progress. Fantastic. So entire thing, how to value the inventory, is part of accounting standard 2. What is it part of? You will read it in detail in CA Inter, but a very small part of it is to be read in CA Foundation. You only try to learn how to value finished goods in this chapter. You're not going to learn how to value raw material and how to value work in progress is not read in this chapter or at this level. So only and only if we find the right value of inventory, we can find the right financial position and right financial performance. If you don't find the right closing stock is wrong, or the inventory valuation is wrong in your books of accounts. Based on that, whatever the profit you find will also be incorrect. Do you agree with me that stock has an impact on profit? With wrong stock value, you will arrive at wrong value of income. Do you get that? Let's see how it works. Now, in an example, gross profit is found as, how do we find? Sales minus cost of goods sold. And cost of goods sold is found as opening stock plus purchase plus direct expense minus. In this formula, if I change my closing stock, my cost of goods sold will change. If my cost of goods sold changes, my profit will also change. Assume that the cost of goods sold is 10,000, arrived at, considering 2,000 rupees as my closing stock. 2,000 is the correct value of closing stock. I incorrectly take 2,500 in the place of 2,000. If I take 2,500 in the place of 2,000, my COGS changes, profit changes. So there is surely an impact of stock on profit. I hope you understand that. Yes, or there is another way of appreciating or understanding. That's by way of trading account. You know that in trading account we start with, what to say, opening stock on the debit. Am I right? Okay, we'll write opening stock on the debit side, and then we'll write purchases after that on the debit, and after we write purchases, we write direct expenses, and then we'll write sales on the credit side, less sales returns and closing stock. Then we'll find gross profit as balance. If any of these items changes, then the balancing figure of gross profit, whatever we find later, will also change. Get that? Yes. Let's see with the help of an example now. Let's say opening stock is 10,000, purchases is 10, direct expense is 5, sales is 1 lakh, and closing stock is 25. Can I say the total on the credit side is 1 lakh 25? The total on the credit side is 1 lakh 25, and items on the debit are available. We quickly count and tell me how much is our gross profit. Gross profit will become 70,000. Okay, 45 plus 10, 55. 55 minus 125. 70, yeah. In case I change my closing stock, instead of 25,000, let's say I write it 30,000. Instead of 25, I write it 30. What would happen to my gross profit in that? The total on the credit side will change from 125 to 130. Because of which total on the debit will change from 125 to 130. Because of which my gross profit will now become 75,000. So whenever I increase my closing stock by 5,000, my profit increase by. Alternatively, let's see what will the impact by increasing your closing. Instead of making 25 to 30, let's see what will happen if you make it. In case I take my closing stock as 20, the total will become 1 lakh 20. Very good. And total on the credit is 1 lakh 20. Total on the debit will also become 1 lakh 20. Then I will find the balance figure 120 minus whatever 55, 65. So with decrease in our closing stock by 5,000, our profit decreased by. You understand this? And what we need to note here is that whenever the closing stock increases, what happens to profit? I want everyone to answer. Okay, whenever the closing stock increases, what will happen to profit? Whenever the closing stock decreases, what will happen to profit? Very good. Now, what we need to note is this morning, again, I actually had Chitrana for breakfast. I got the same for lunch also today. Ravi, don't, I'm not lying. You saw me having Chitrana today? Say, I asked ma'am also, ma'am, what did I have for lunch? Chitrana. This is because some part of her rice yesterday. Huh? Chapati was lunch, Chitrana was breakfast. ಚಪಾತಿ ಇವತ್ತಿದು ಲಂಚ್ ಚಪಾತಿ ಅದು ಬಾಯಿಗೆ ಬರುತ್ತೆ ಜೊತೆ. See, there's one dish now. What you do? That badnekai you take and then roast it on the fire and then just put to buying anka barta. Buying anka that I somehow I don't recall the name. So I remember like buying anka barta means baik baratte. Now listen, everyone get back. This morning, the breakfast at our house was chitrana. Yes. So you are getting a photo. No, you click this instead. So this morning the breakfast that we had was chitrana. This is because last night we had some tanglana. So whenever rice is left over from the previous night, mic is not working. Whenever the rice is left over from the previous night, we make breakfast out of it the next morning. Typical Indian family. So can I say the same logic? If there is closing stock in this year, it will become opening stock of this year. Fantastic. So in the same logic, we just spoke now. We spoke about changes in the closing stock. I can hear people talk. I want you to be quiet. If you want me to finish chapter 4 inventory now and also do a little bit of depreciation, I want your cooperation. If you guys are talking, that makes me feel less important. If I feel less important and I feel bad, I can make you feel. I will not feel bad. I will also ensure that you will also feel. Please don't make me do that. I'm a bad boy. I told you. So we spoke about changes in the closing stock just now. We increase our closing stock little. We decrease our closing stock little. Whenever we increase or decrease our closing stock, this will also impact our opening stock for the next day. And whichever organization wants to make more profit or less profit and play with stock, no, they're playing a bad game. Playing a why? That is not a game with which they'll show more profit. They'll end up getting into the same ditch what they dug up just now. Meaning, whenever we have changed our closing stock, it will reflect in the opening stock of the next period. Let's see. Opening stock of 10, purchases of 40, direct expense 5, closing sales 1 lakh and closing stock is 25. We took 1 lakh 25 as the total on the credit and then posted it to debit. Tell me how much is the GP that we found? Same example. 70. Previously we changed closing stock, no? That is the previous year. Because we changed closing stock in the previous year, it is affecting our current year opening stock. If I change closing stock of this year, next year's opening stock will change. So just in case, if I change my opening stock of the current year and make it 5,000 more into 15,000, what will happen to my gross profit? It will become ulta. 65,000 is what it will become. When we saw with closing stock, what did we realize? When we increase closing stock, profit will. Here, when we increase opening stock, profit will. So last year when you increase profit, that will get compensated by decrease in the profit in the current year. So if you show higher profits because of stock change, no, that will not last long. That will get compensated in the subsequent year. Come on, let's quickly see the next part. What happens if I, instead of making that 10,000 as 15, I'll make it 5. I'll make it 5. I'll decrease the value of my closing. If I make that 5, what will happen to my gross profit? So 1 lakh 25 same. 1 lakh 25 minus 5 minus 40 minus 5. We end up getting. So the logic here is quite different. Opening stock when it increases, profit will decrease. And opening stock when it decreases, profit will. Do you guys get this? Very good. So the summary of the story is simple. Om Shanti Om. Om Shanti. It's like this. Om Shanti Om. You know Om Shanti Om? Not this song, but this song. Make some noise and say. Boys. All cool girls, come on, make some noise and say. No, not enough. Once again, okay? Once again. It's in the evening. We need to generate some energy. Come on. All cool boys, come on, make some noise and say. Come on. All cool girls, come on, make some noise and say. When you say Om Shanti Om, O-S-O. In this particular song, if you remember, no, what happens is every 10 seconds there's a new actor coming in. Saif Ali Khan will come. Then Kareena Shilpa Shetty will come. Kajol will come. Correct or not? So people go on coming into this song. Shh. I'll straight away go to problem. Yeah. So whenever people keep on coming, it is not like they come in just randomly like that. You end up paying money to them, no, for them to come. So in Om Shanti Om, whenever more actors comes, the profits will decrease. OSO, Om Shanti Om, opening stock overvalued. Profits will decrease. OSO, Om Shanti Om, more actors coming, profits will decrease. OSU, it is opposite, no, of the previous one. One letter is ulta. Profits will increase. You will write CSO, closing stock overvalue. One opposite letter from the original one, so profits will increase. And then you write the last one, CSU, closing stock undervalue. Two opposites, opposite of opposite, same thing. So profits will decrease. You get this? So this is a simple logic that you can use or remember to identify the impact of the stock on profit. You guys now get it. How does the profit impact? How does the profit get impacted because of the change in the stock? Yes or no? Great. Come on. So we'll have to do a few problems on this, but we'll not be doing it at this stage. And then financial position is also very much affected because of the change in the stock. Stock is a part of balance sheet. Stock changes, balance sheet asset side changes, net worth of the organization will change. Yeah. And how to value the stock in the books of accounts. This is given in accounting standard. Where is it given? Accounting standard 2. Accounting standard 2 talks about valuation of an. We don't have complete accounting standard 2 in our CA foundation. What we have is only one paragraph. Paragraph 5. Paragraph 5 is basically for statutory compliance. We need to comply, while the value of stock. So as a part of statutory compliance, when we identify our inventory as per accounting standard 2, we need to ask ourselves a question. This valuation of inventory, whatever we do, is it accounting policy or is it accounting estimate? Accounting policy or accounting estimate? How many of you say it's accounting policy? Raise your hand. How many of you say it's accounting estimate? Raise your hand. You need to raise your standard because it's not accounting estimate, it's accounting policy. We discussed it in the morning. Yeah? Answer this question. Is it an estimate? No, it is an accounting policy. As per para 5 of phase 2, inventory should be recorded at cost or net realizable value. Whichever is less or whichever is lower. You get that? Very good. Now we need to understand what do we mean by cost. Cost will include all the expenditure that is in. Get that cost, to get that inventory till the time you bring it to the goal. Any expenditure incurred for purchase, any duty that you pay, taxes that you pay are also to be included unless it is refundable. Unless such a deposit is refundable, you need to include that also. And any conversion cost that you incur to convert it or any expenditure that you incur to bring it to the place, location or condition that you want it to be in. So quickly seeing cost of purchase, it is amount paid to seller after deducting trade discount and discount if there is any. And should it include taxes? Yes, unless it is refundable. If you have the credit possible and refundable, you will not include. We'll do usually a detailed discussion on this in class, but we need to go really quick. And if there is any freight or carriage inwards expenditure incurred, that also should be included. Net of trade discount means we should eliminate the discount that we got on the product. Get that? After eliminating discount, we'll find the cost. Cost of conversion will include several costs. That is converting wool to thread to shirt. Entire expenditure is to be included. And when you say other costs, there are certain costs to be included, certain costs not to be included. Let's quickly see what are included. Administrative overhead, included, not included? Not included. Very good. It should not be included. Full load body, not. Is it included, not included? Not included. Then for losses. You bought 100 units. What? 100 units. The process of transit, no. Some got damaged. 10 got damaged. Only 90 you receive. Will 90, when that loss amount is there, no. You paid for 100, you got 90. For that 10 units, you paid money, but you didn't get the value, units to it. So should we include the 10 bad units cost also in the good units or not? Depends upon the type of loss. Is it normal loss or abnormal loss? Normal loss, the cost will be eaten away by the good units. Cost of normal loss will be eaten away by the good units. Abnormal loss should be excluded and separately taken. What is normal loss, abnormal loss? Normal loss means unavoidable loss. What is normal loss? You can't do. This loss is normal. When you buy 100 kgs of tomatoes and then bring 1 kg will become ketchup. 1 kg will become, you will only receive 99 kgs. Get what I am trying to tell? So you pay 10 rupees per kg. for 100 kgs. You paid 1000 rupees, but you received 99 kgs. So the cost of 99 kgs is 1000, not 100 kgs. Someone asks you what is the cost. What will you say? 99 kgs cost is 1000 rupees. That 1 kg what you lost, that 1 kg's loss is including 99 kgs. Now it is a responsibility of 99 kgs to recover that 1 kg of loss also. Sir, what if you had packed 99 kgs? Then you would have received 98 kgs. Are you getting what I'm trying to tell? That 1 kg loss is inevitable. You can't do anything. Normal loss. We will include such loss in the cost of the good units. However, it is abnormal loss. Abnormal means it can be stopped. You could have avoided that loss. Assume that you packed 100 kgs and sent, only 90 kgs are received. 10 kgs loss, abnormal loss, could have been avoided. So only 90 kgs stock will be valued. 10 kgs cost, whatever is paid, no, that you will take it to P&L. You will take it. It is an abnormal loss separately taken to P&L, not included in the value of the good units. We will be redoing this topic tomorrow in the morning. We will start with consignment. How many of you hate consignment? We'll change the perspective. Please do walk into tomorrow's class. It will become a nice topic. But it's okay. It's a nice topic. We'll do first thing in the morning tomorrow. Okay. Great. Then any storage cost. You silence. Hey, what's wrong? For small pause, you guys start talking on. You guys should control your commentary rating. Storage cost. You bought the inventory. You kept it in the godown. You paid some godown rate. Do we include the godown rate into the cost of the inventory or not? Do we include or not? Depends upon the type of the inventory. Storage of the inventory is part of its manufacturing, like wine, rice, timber. No, when it is cut, you can't use it straight. You need to keep it like that only. It will become hardened. Only then you can use it. Rice, the moment you take it out of the mill, you can't sell it. People can't eat it. It won't be good. So you store it for some time. Wine, sell it instantly, it's grape juice. Yeah, so you have to store. So if it is part of the necessary part of the production, then you actually include in the cost of the inventory. Otherwise, we don't. Interest and borrowing cost is usually not incurred, not included. That's with regard to some small part that you need to know. So then talking about NRV. What do we mean when we use the word NRV or net realizable value? When we use the word NRV or net realizable value, what we mean is what is the money that we will realize if we sell the product right now. Sir, why can't we call it sale price? Why do we call it NRV? The reason is very simple. Whenever I sell the product, the price that I get for selling the product, less the expenditure that I incur to sell the product is my NRV. For example, sale value is 10,000, selling expense is 1,000. I need to pay some commission, I need to pay some brokerage, or to sell the product, the party is willing to buy only if I make some necessary. To which I incur 500, 600 or 700 rupees. The sale consideration that I receive, less the expense that I should incur to make sale for my NRV. NRV is sale value minus selling expense. You guys get that? Great. Good after. So let's quickly see the other part of valuation of inventory chapter. Yeah, there are several techniques in order to value inventory. Depends upon the type of the inventory. The inventory is not ordinarily interchangeable. Not ordinarily, you cannot replace one inventory with the other. Then we usually use a method, specific identification method. If it is interchangeable, considering historical cost, we have multiple methods called as FIFO, LIFO, SAM, and first in first out, last in first out, simple average method, and weighted average method. However, without considering historical cost, it can be valued using a method called as adjusted selling price method. I will show you the examination questions from this topic in the past. Have a look. This is how it is. May 18 and November 18, there was no question from this chapter. Literally zero. Literally zero. The question started showing up from this chapter from May 2019. Wherein 6C, last question may stock reconciliation, that too backward. The date of physical inventory available is some 15th of April or 10th of April. You think that you need to find the inventory as on 31st of March. Such backward problem was asked for only 5 marks. How many marks? 5 marks. Then again 5 marks theory question was asked. A theory question from this chapter can come wherein they'll ask you to for difference between periodic and perpetual method. Yeah, such kind, or what is including cost, what is not including cost. Such kind of a question can come. They once more asked a stock reconciliation forward dated problem, meaning they've given inventory as on 25th of March, they'll ask you to find the inventory as on 31st of March. Such a question had come in December 2020, but See, have a look at this. 2 years, January 21 and July 21, two attempts. They've asked adjusted selling price. And once they've asked weighted average method. That is on December 21st. And recent June 2022 concluded date, they've asked a 5 marks box question. COGS. COGS question is where they've given the inventory at the beginning of the year. They've told purchases, they've told sales, they've given profit details also. From sales, you'll eliminate profit to arrive at cost of goods sold. Then you'll apply that cost of goods sold formula. Opening stock plus purchase plus expense minus closing stock is equal to cost of goods sold. Here you know everything else other than closing stock, and you find closing stock as the answer in the question. Get that? Such a question was asked in the recent attempt. We'll be doing this June 2022 paper complete discussion in tomorrow's class. So now let's quickly complete the remaining part of this topic. So to start with, first in first out. Whatever the inventory which is purchased first will be issued first. Now we have three options. Inventory bought on 1st April, inventory bought on 1st May, inventory bought on 1st June. If you have to issue goods, what will you issue? 1st April stock. 1st April stock. Old stock you issue first. That is first in first out. Last in first out may what you do is you issue the inventory out of the most recent purchase. 1st June is the most recent stock available. We will be issuing from 1st of June's stock. And then we have simple average method and weighted average method. Simple average method and weighted average method may we don't maintain separation as to this was bought first, this was bought second, this was bought third. We don't maintain such bifurcation. What we do is we add all the units, we take the value at average. So how is simple average method different from weighted average? Pointer is very simple. Under simple average method, we take the total of the units, we take the total of the value, and then do total value minus total units to find the average. We do take the this is weighted average. We take the total of the units and write them. The prices are there, no? You take the average of prices, simple average. You add both the prices and then divide them by 2. That's how you arrive at simple average. That simple average price will be multiplied with the units to find the closing value. However, under weighted average method, what you do is you take the total of units, take the total of values. Total value by total units is what you do to arrive at weighted average price. Weighted average price method is more accurate than simple average price. Under simple average price method, no, assume that you bought 100 units at rupees 10. How many units? 100 units at rupees. 1 unit you bought at rupees 50. Average price will become 12.5. Why? The first purchase is at 10, second purchase is at 50. 10 plus 50 divided by 2. 12.5. So entire 101 units will value at 12.5, which will lead to sudden increase in the value of the inventory, which is incorrect. Why? We are never considering importance of the weights of the units purchased. Under weighted average method, you do what is 100 units are purchased at rupees 10. 100 into 10, 1000. 1 unit is purchased at 15 rupees. 1000 plus 15 divided by 101. So it will not have a bigger impact on the total. You get it? So what is more accurate, simple average or weighted average? Very good. So weighted average method में there were questions. We'll do that. So shall we do that now, or we'll discuss further concept and then do the question? Okay, I didn't understand. I didn't hear at all what you told. Further concept. Break up. Will we take a short break? Okay, it is 5, 6. We'll take a very short break because I want to finish by 6. So if we take a break, it will go to 6:15. Okay, take a short break. Come back by 5:15. It's about 9 minutes. 10 minutes break. Come back soon. I'll be starting at 5:15 dot. Yeah, I won't wait. Yes, good evening everyone. Welcome back to inventory discussion. And our tab change up. All tab is not working. Yeah, we were discussing the types of methods of valuing the inventory. We discussed that there are multiple methods: FIFO, LIFO, SAM as well as VAM. I in fact showed the examination pattern also to you all. Everyone keep phones inside. Still using phone, people. So let's quickly finish off the concepts and then do the problems. Once we start the problems, we'll do all the problems from the past examination. Like I mentioned in first out, when there are multiple variants of stock available and when you start issuing stock, you will issue it from the very first variant of stock available. That is first in, first out. If you issue from the most recent variable stock, it's called as loss in first out. When you take the average of the recent price and the price before that, add them up and then divide by 2. Simple average method. When you take the total of quantities, total of the amounts, divide total amount by total units. That's what we call as weighted average method. And I also told you adjusted selling price method. Adjusted selling price method works good when the value of inventories or the quantum of inventories involved is too many. In a retail industry, I can hear people talk. In a retail industry where the number of units involved are too many or variant of stock involved is too many, it is very difficult to physically count the inventory. What you do in this kind of a scenario is you would identify the margin that you have on file. Usually you sell the goods at 20% margin, 25% margin or 30% margin. So in such a scenario what you do is you just identify the value of stock at selling price. Eliminate the margin on that, you will get the cost of goods. It's very easy to identify the selling price of goods. Now if you're selling FMCG goods, you have some what to say washing powder, or you have some bathing soap, or you have some grocery goods, salt, pickle, or wheat, rice, all of this. So when you have it entirely rack here, no, you can easily identify the selling price of this. Price per packet is written, number of packets available. Multiply, you get the selling price. You know the margin. Eliminate 20%, 25% or 30%, whatever margin you have on that stock. You can easily find the closing value of the stock. That's what we call as adjusted selling price method. So adjusted selling price method means sale value will be adjusted to arrive at the cost of the goods. Great. So let's get going. So we'll also be using the COGS formula in this chapter to solve few questions. These spoken about, but little important because the recent June 2022 attempt, what question was asked? Question was asked on. Very good. COGS formula only, and this is important for your final accounts chapter also. When we talk about inventory valuation system, there are two systems. One is perpetual, the other one is periodic. Perpetual is where you maintain proper stock records. That is basically our FIFO, LIFO, SAM, BAM. You write the date wise, you prepare that big table, receipts, issues, payment balance, receipts, issues, balance. You write quantity, rate, amount for each of it. Whatever you do that way, no, that is basically perpetual method. Maintain details day to day. If I tell you the date, on that date you will be able to tell me what is the value of the inventory. That is our this method, perpetual method. Under periodic method, you don't really have that. What you do is you basically use COGS formula to arrive at the value of the inventory. How is it? Very simple. You know last year's closing stock. That will become the value of the last year's closing stock. That is the value of the opening stock. During there, how much purchases are made to identify the total payments, the cash book or passbook, and then you understand the total purchase. Total sales value also will identify sales, money received from clients, and then money to be received from data. So you know total sales, you know total purchase, you know opening stock. You do plus minus logic, you will arrive at the profit. You guys get that? So that's basically what we do under periodic system. And the majority of the questions from this chapter, or the tricky part of this chapter, is from stock reconciliation. Stock reconciliation is you need to identify the value of the stock. Because it is an event, you will not be able to keep the records in the correct way. Madam, you're already late. Please sit. Stop annoying the people around and disturbing them. Yeah. So you need to find the value of the inventory. You might start with the physical inventory. Physically, you will count the inventory to find the value of the physical inventory available. But what you have physically in your godown need not be your stock. Your stock in your books of accounts can be much more than what is there in your physical records or physical inventory. Or sometimes what you have physically in your godown might not be your stock. Because what you think of is ownership, not just possession. Some goods what you don't possess, you might be owner of the same. Some goods what you possess, you might not be owner of the same. So all because of the gadbad that happens in chapter 6. Goods sent on consignment, goods sold on return or approval basis, and all of them. All of such adjustments can come in the chapter of valuation of inventory also. So you take your stock taking not on 31st of March, but a day other than 31st. Practically because it is not viable with the limited human resource and limited time that we have to find the value of inventory as on a specific date of 31st of March. You want to find the value of inventory on 31st of March, but it is very difficult. Why? You, one single person, is serving 100 claims. Can't do valuation of inventory for 100 claims on 31st. Or even if you are serving just one claim, the availability of the client on that day, the client closing down the godown and issues on that day, and you making your presence that day and counting is also a little impractical. So you might take the stock taking on 5th of April, or you might take it on 25th of March. So you use 25th of March stock as a basis to find the stock as on 31st. Or you take the stock as on 5th of April as a basis to arrive at the stock as on 31st of March. When you do this, how do you basically arrive at the 31st of March? Such kind of questions can definitely come in. Now, if I have the stock on 25th of March, because I could not do the stock counting of the client on 31st of March, I did it on 25th March. From 25th March as a base, I want to find the stock as on 31st. How do we go forward from 25th March to 31st? Whatever purchases I did between 25th March and 31st March, I will add. Whatever sales I made between 25th March and 31st March, I will deduct. Basically, add the inflows, deduct the outflows to arrive at 31st. What if we doing backward? Meaning, I know the inventory on 15th of April. Starting from 15th of April's inventory, I am trying to find the inventory as on 31st. Going backward. So usually, if you're going forward from 25th March to 31st March, when you go forward, add inflows, deduct outflows. 31st March. When you're going backward, 15th of April, I am right now. I want to go back to 31st of March. What should I do? Deduct outflows, add inflows. Sorry. Deduct inflows, add outflows. We'll go back. We'll do the opposite. We'll do the opposite of the same. That's what we should be basically doing here. So we'll do problems on this in the class now, stock reconciliation. It is similar to your BRS, except for the fact that what we deal with here is inventory. The tricks in this problem will be goods that is lost, goods that are sold at a profit other than the usual profit, goods that is received or sent on consignment basis, or goods sold on return or approval basis. And remember that whenever they basically give the price of the goods, no, you need to be adjusting all of them at cost price. What is the price at which we should adjust them? If they give at selling price, we need to bring them to cost and then adjust. Why? Closing stock should be valued at cost, but sales will be available at selling price. So we should never take sales in competition of closing. From sales, we should eliminate the profit element, identify the cost of goods sold, and then go forward to find it. So this cost of goods sold, usually we can identify it as relationship between them like this. So if it is 1 by x on cost, this 1 by x plus 1 on sale. It is 1 by x on cost, and it is 1 by x plus 1 on sale. 25% on cost. 25%. Per means divided by. Cent means century. It is 25 by 100 on cost. That is 25 by 100. 25 is profit, 100 is cost. What would be selling price? 125. 25 rupees is profit, 100 rupees is cost. If 100 rupees is cost, profit is 25. Cost 100, profit 25. Selling price will be 125. So when I do profit by selling price, I'll be doing 25 by 125. By selling price is cost plus profit. So 25 by 125 is 1 by 5. 1 by, if it is 1 by 1 on cost, how much would it be on sale? 1 by 2 on sale. If it is 1 by 3 on sale, then it is how much on cost? If it is 1 by 3 on cost, how much on sale? If it is 1 by 4 on cost? If it is 50%, this is 1 by 2, here it will become 1 by 1. 100%. If it is 50% here, this means that this is 1 by 2. Over here it will be, here it is 1 by 4. So over here it will be, similarly it will work for 1 by 4, 1 by 5, 1 by 6, 1 by 4 and everything. So I don't want to waste time on that. I hope you people understand. So only thing that I want you to remember is, always remember that you need to bring down the values to cost when you try to value it. Come on, let's quickly see some questions from this topic. So let's pick all the exam related ones. This is RTP, Sky RTP. Sky question we've done in the class. Yeah, it's an RTP question. 2 times has been asked in the RTP. So this is asked so many RTPs and FTPs, but never asked in the exam. This is an exam paper. Exam question. We had this question also in the material. Pakki Ram and Aditya. Remember Mr. Ganesh? We'll discuss this one. Come on. Fatafat. Exam November 2018 question. So what is this question on? Oh, this is actually, sorry, this is from a different chapter. Wrong placement. Sorry. This Raj Limited. This is part of this chapter only. Shall we do this question number 19? Yeah, this question. Little difficult to read. No? Adjust ಮಾಡ್ಕೊಳ್ಳಿ. No, no option. Yeah. Raj Limited prepared their accounts for the financial year ended 31st of March 2019. Due to unavoidable circumstances, actual stock has been taken on 10th April. I told you, every problem they'll tell similar stories. That they'll not be able to take the inventory on 31st of March. Avoidable reason. Practical difficulties due to some immediate reason, something and all this. But basically, they won't take it on 31st of March. If they take it on 31st of March, your work is simple. Stock is simple. Do only 1-2 adjustments for possession held, not ownership held, but no possession held, plus minus 2 adjustments, then over. But problem will become interesting only when it is taken on a date other than the closing. So what date is it taken here? 10th of April. So we know the stock on 10th of April. We find the stock on 31st of March. We're moving backward. We're moving backward. So all the inflows will be deducted and all the outflows will be added. Purchases will be deducted. Sales will be added. Fantastic. So come to the last line. What is it that they want? Ascertain the value of stock on 31st of March 1000. Fantastic. So can we say the starting point is 1,25,000? So I'll write here only. One lakh 25,000 is our starting point. We'll do all the plus and minus into this items only. Come on, let's read the first one. Sales are entered in the sales book on the day of dispatch and return inwards in the return inwards on the day of goods are received. So when we dispatch the goods, we'll write sales. Sales will be recorded when we receive the goods. Is that what they mentioned? And return inwards on the day when the goods are received. So only when we receive the goods, we'll take it as sales. Customer calls and then says, I'll return the goods. So, okay, this is like this, I get so many calls. I don't care. So second adjustment. Purchases are entered in the purchase book on the day the inventories are received. Whenever the inventories are received. Invoices are received. Sorry. When we receive the invoice, we enter the purchase. We receive the goods. Will we enter? We received the invoice, but we didn't receive the goods. Will we enter? Yes. That is their accounting policy. This is their accounting policy. So we don't have to do anything for this adjustment number 1 and 2 right now. Hey, 2 adjustments down. Let's go to the third one. Sorry, there are 2 adjustments. Marks of 2 marks. So sales between 1st of April and 9th of April amounting to rupees 20,000 as per sales date. How much is sales between these 2 dates? We want the inventory on 31st of March. We want the inventory on 10th April. 10th April inventory is after deducting the sales. After deducting the sales of how much? 20,000. The value of inventory is 1,25,000. So before selling this, you would have this inventory also with you. So inventory before sale will be more. Inventory after sale is obviously less. We need to add back this much inventory to find the stock. Correct or not? But when we add back, we should add it at cost. But this is at selling price. Do we know the cost price of this or profit margin? What do we do? Keep it on hold. Keep it on hold. Or usually in the problem, what it is, we'll write in the inner column. Sales. We'll write in the inner column and then wait. Later, when we identify the profit margin, we'll eliminate the profit margin, identify the cost of goods sold, and then write it to outer column. Let's go to the 4th adjustment. I'll come back to this adjustment a little later. Okay. Now we have free samples for the business promotion issued during 1st April to 9th April, amounting to 4,000 at cost. They have given at cost, so we don't have to worry. We take it at 4,000 rupees. These goods are issued between these 2 dates. After issuing this 4,000 cost of goods as free sample, the inventory that we have is whatever that 1,25,000. So before issuing your inventory would be 4,000 more. So what should you do? In other logic, this is outflow. What is this? So when you go backward, what do we do? And what do we do? As simple as that. Come on, I'll write here only. So okay. We'll add 4,000. Come on, let's read the 5th adjustment. Purchases during 1st April 2019, 9th April 2019, amounting to rupees how much? Okay, but goods amounts to 2,000 not received till the date of stock taking. So listen to me carefully. On what dates do we want the stock? 31st March. On what date do we have the stock as starting point? 10th of April. between 31st March and 10th of April, whatever stock is received, to that extent, our 10th of April stock will be more than 31st of March. We repeat, between 31st of March and 10th of April, how much our stock is received, to that extent, 10th of April stock will be more than 31st. How much is the purchase made? How much is received in that? Why 2000 is not received? When 2000 is not received and 8000 is received, our closing stock as on or stock as on 10th of April will be 8000 more than the stock on 31st. Our stock as on 10th April will be 8000 more than the stock on 31st of March. We start with 10th of April stock and try to find 31st of March stock. What should you do from this? How much? You don't have to worry about that adjustment number 1 and adjustment number 2. Initially, we have the closing inventory. We're taking it on physical counting. Physically, we counted the inventory on 10th of April. 10th of April, we received it, because of which my stock is more by 8000. We will reduce 8000. Simple as that. Sir, should we adjust cost price, selling price? This purchase country. What is this? So I'll do minus 8. Sorry, it doesn't look good. 8 looks good, sir. There is no grip, guys. Hold it. Okay, now happy now, sir. But that second zero on 3rd July. Come to next adjustment. 6th one. Invoices for goods purchased amounting to rupees 20,000 were entered on 28th March 2018, but the goods were not included in stock. What did you do? Invoices for goods 20,000 were entered. It has been entered on 28th of March. Very good. But the goods were not included in stock. You have not included the goods in stock. Why? Maybe you have not received it. Maybe you have. So what do we do now? Should we include or not? Yeah, why invoice? Invoice is received. Invoice says goods have been not received. Maybe like you place an online order for which they gave the bill. You also wrote that, but physically the inventory is not yet. Take time. 15th of April or 20th of April will come. Get that? Can we write it into our books? Yes. Have we written? Yes, we have written on 20th of April. But physically the inventory is not there, so the 10th of April when you physically counted, you have not included it. We'll add this. Should we add it at selling price? There is no selling price, cost price here. Straight away add 20. Ashtel. What do we have after that? Profit is 25% on cost. If it is 25% on cost, can I say 1 by 4 on cost? How much on cost? That will be. Sir, ಅದು ಎಸ್ಸು ಮತ್ತೆ 5. 1 second. It is 1 by 5 on sales. Am I right? If it is 1 by 5 on sales, here we have some sales. Here, how much? 20,000 is selling price. How much is the profit on that? 1 by 5. 20,000 by 5. Deduct 4,000. 16,000 is cost of goods. So what do we do? 16,000 will deduct. Add, sorry. So we'll take this inventory at 1,25,000 to this inventory at 1,25,000. Add 16, add 4, minus 8, plus 20. Khatam, answer. 1 lakh. This is the cost of the inventory as of 31st of March 2000. The questions can actually become more interesting. There can be goods sent on return on approval basis. Unfortunately, not there in this problem. Yeah, come on. Let's see the next exam question. Anyone has any doubts on this so far? No. No. Yes, please. Profit margin on sales. People, whatever percentage you apply that straight. Don't convert. Straight away apply the same percentage. But conversion ಬಗ್ಗೆ ಎಲ್ಲ ಮಾತಾಡ್ತಿದ್ರೆ ನನ್ನ ಹತ್ರ ವೈಟ್ ಕಲರ್ ಹಾಕಿದ್ದೀನಿ ಅಂತ ಹೇಳ್ಬಿಟ್ಟು. Chalo, when is the next exam question on this topic? There can be a question on weighted average method, and I told you I'll discuss one on adjusted selling price. Shall we discuss one on adjusted selling price? Come on, once again, give me a moment. I can hear you all talk. adjusted selling price ಇದೆಲ್ಲ ಆದ್ಮೇಲೆ yes guys, yes, silence. Hey, you guys would have to give me a little bit of silence, okay? If you don't, then it will be very difficult for me. Come on. Have a look at this question. Silence. This is a question on adjusted selling price method, wherein they would be making you little information. They would be giving you little information about sales. They've given you here the information about sales, cost of purchase, opening stock, as well as closing stock at selling price. They want you to identify the closing stock at cost price. So I told you in a practical scenario, what you do is you identify the inventory, count it, you identify the selling price of the same, you eliminate the profit margin on that, and you basically identify the cost. Simple. Selling price minus profit is cost. But life would not be so simple because I told you that profit margin will eliminate. But the question is, what is profit margin? Question might not be so straightforward. In this particular question, if you see, sales is 2 lakh, cost of purchase is 2 lakh, opening stock is 0, closing stock is 50,000 at selling price. Can you guys tell me how much is the cost price of this? 40? How do you arrive at it? See, just by adding, subtracting these three figures, you can't do that. Opening stock is 0, purchases is 2 lakhs. Certain things you need to get straight now. Come on, tell me what is the first thing. This cost of purchase, whatever you have, no, this is at cost price. This is at cost price. However, this 2 lakh and this 50, these two are at selling price. Do you agree with me? Purchases is at cost price, selling price and closing stock is at selling price. Now you tell me, opening stock plus purchase minus sales will be closing stock if everything is at selling price, or if everything is at cost price. Do you know opening stock? Yeah. How much? 0. Purchases 2 lakh. Okay. That is at cost price, no? Very good. Then we have sales. How much is sales? Now, opening stock is 0. It is not so easy as people think it will be. Please stop talking to listen. When I say my opening stock is 0, can I say my entire closing stock is from purchases? Opening stock is 0. Entire my closing stock is from purchases. So whatever I purchased, I would have either sold it or I would have had it. In the morning, I didn't have any chocolates in my pocket. So whatever chocolates I ate today, whatever is in my pocket now, both I bought it today. Correct or not? So we have closing stock of how much? 50,000 at selling price. Correct? Very good. How much is the sales that we made? 2 lakh. Can I say 2 lakh 50,000 is a purchase at selling price? Closing stock is say 50,000 rupees. I made sales 2 lakh. So opening stock is 0. So where did this 2 lakh 50 come from? Purchases. Entire 2 lakh 50,000. My purchases at selling price. At cost price, how much is it? 2 lakh. At selling price, how much is it? How much is the profit? 50,000. If you do 50 by 2 lakh 50, you get profit margin on sales. If you do 50 by 2 lakh, you get profit margin on cost. Now we have our closing stock at selling price. We want profit margin on sales. So do 50,000 by 2 lakh 50. 1 by 5. 1 by 5, 20%. 1 by 5. 20% is the margin. Closing stock is how much? 50,000 minus 20%. 40,000 will be your closing stock. Do you guys get it? I'll show you how to arrive at the answer. See, this is how we basically arrive. The cost is how much? Sales ka cost we don't know, but selling price is 2 lakh. And purchases at cost it is 2 lakh. We don't know the selling price. But we know opening stock is 0 and closing stock is 50,000 at selling price. So because opening stock is 0, can I say entire what? Huh? It is not visible. What is happening? One second. You guys would have to be quiet when you are doing this. You guys can be quiet. Guys, whatever the nonsense business you guys are doing by talking, I want you to be quiet. This session will not go forward with people talking. I can do what you ask me to do, but this won't work. Don't make me yell and scream. Not the point. You guys are civilized. Come down from trees, no? You're walking on the land. Understand the language what humans speak. In human language, when I say don't talk and maintain silence, it means that you don't do chit chat with your neighbor. Then keep quiet. Don't make me get on to my nerves. Very simple. I'm telling you very clearly, keep quiet. I don't want to be angry. Don't make me angry. See, sales at selling price is 2 lakh rupees and purchases, they have not given it to be 2 lakh 50 to us now. And then we know that the closing stock is 50,000 at selling price. So we add this 50 and this 2 lakh to arrive at our purchases as 2 lakh 50 at selling price. Because our opening stock is 0. So if 2 lakh 50,000 is the selling price and 2 lakh is the cost, for 50,000 selling price, how much would be the cost? We just do cross multiplication of 50 into 2 lakh divided by 2 lakh 50 and you would end up with 40,000. This is because opening stock is 0, entire closing stock plus sales if you do, we should get purchase. Get that? So I know closing stock at selling price, I know sales at selling price. I add both, I get purchases at selling price. I know purchases at selling price and I know purchases at cost price. Difference between them is profit margin on sales applied on closing stock. So simple. Yeah, but it can become little complicated as well. There's another question that you guys can actually see here. Or the other logic is because you have cost price and selling price, you can identify the profit. Profit percentage can be found and then removed from the stock as well. You get that? The question can actually become little interesting when we take another one. This is another interesting question which has little bit of other items, 2-3 extra items to it, and this is what we can try. But I would prefer skipping that. So next we'll do a couple of other questions on inventory valuation based on stock reconciliation, or do we go down to the next topic? I would prefer to do another one considering the fact that there will be questions on consignment based valuation and goods sent on return or approval also being involved in the question. I would pick that. To do that, I would just read through the question a little, skim through it to pick. But I'm scared of reading through the first 2 lines of the question because if I don't talk to you people and read to second line, by the time I come to second line, you're talking to your neighbor. By the time I come to third line, you're talking to the person who's sitting 3 rows ahead of you. So what I would do is I should not put my head down here. I should throughout be talking to you people. That's the point. And in the morning, Arun sir was addressing also all of you were like, had your own version of talks going on. So you guys would have to maintain a little bit of silence. Till the time you can't stop talking, no, you can't start listening. It's a very big problem that I see very common with all of you people. Yeah, do you see any question with both consignment involved? This has consignment. This has goods sent on return or approval. Come on, let's discuss this 29th. Shall we? Come on. 29th question. Can you see it on the screen? It's all fine? Yeah. The physical inventory of the stock as on 23rd of June 2016 is available to us. The value of the stock was 48 lakh. So we have the inventory as on what date? 23rd of, that is the date before the year. Now read the question further. The following transactions took place between 23rd June to 30th June. So we have done the physical inventory verification on 23rd June. We want to find the value of inventory on 30th of June. So are we moving forward or backward? Forward. After 30th of June, we don't have time to do the stock count. So we did it on 23rd June. Now we'll be trying to find the value on 30th June using this data. So as we're moving forward, we'll add all the inflows and deduct all the outflows in this process. So let's see what are the transactions that have happened between 23rd and 30th June. So between 23rd and 30th June, out of the out of the goods sent on consignment, goods worth 2,40,000 were unsold. So out of the goods, 48 lakh. Following transactions took place between 23rd and 30th June. Okay, we have done the physical inventory on this date. For the inventory that is there in our godown is how much? 48 lakh. Now, there are certain goods which have been sent on consignment. Is sent or received? Sent. So we have sent goods on consignment. When we send goods on consignment, we are consigner. Who are we? The one who would have received the goods will be consignee. Very good. Now tell me, I am being a consigner. I sell the goods to my agent, and my agent will sell the goods on my behalf. I am the owner, and my agent is the one who is representing me and selling the goods on my behalf. Who has the ownership of the goods? Consigner. We have the ownership. Who has the position? Consignee. Now, in whose godown will the stock be there? In my godown, when I count the stock, will that stock be there in the godown? But do I own it? Yes. Okay. In my godown, the stock is not there. But should it be there in my balance sheet? Yes. So, this physical inventory of 48 lakh here doesn't include the goods that are sent on consignment. Should add the stock that is sent on consignment to this 48 lakh to arrive at my inventory. Got that? What is the information they have given? Out of the goods sent on consignment, goods worth 2,40,000 were unsold. It is not sold. It is unsold stock lying with consignee. It is unsold stock lying with. You tell me what should I do with this 2,40,000 rupees? I should add it. Shall I add it? So I'll write here plus. I should add this 2,40,000. Take a bigger color, better color. Yeah, plus. Brighter. I'll add this 2,40,000 to my inventory of 48 lakh. Whatever the inventory as on 30th June. Because so much stock belongs to me. I own it, but I don't possess it. It's lying in my consignee's godown, but because I have the ownership, I'll add it. However, read the second adjustment. Purchases of 4 lakh were made, out of which goods worth 1,60,000 were delivered on 5th of July. So, how much is the purchases that we made? Between these, when is this purchase made? Between 23rd June and 30th June. Between these 7-8 days only we made the purchases. So, is it our purchase between 23rd and 30th June? Should we write the purchase entry? Should we include this goods purchased into our stock as on 30th of June? Do I own this stock on 30th of June? But have I received this stock on 30th of June? When did I receive it? 5th of July. So, on 23rd of June, when I count the inventory like this, would I have counted this? Why? On 23rd of June, we didn't even purchase it. It's not there in our godown. We didn't even write purchase entry. So, that 48 lakh is without considering this 1,60,000. Now, we should include this 1,60,000. So, what should I be doing? I should add this 1,60,000 into my inventory. Clear? But have they given any adjustments stating that they will include the inventory only on physically receipt of the goods? They haven't mentioned. So we we can assume that inventory will be included when the purchase is made and not necessarily when the physical inventory is received. But have they asked us to find the physical inventory? No, no, no. Everything is perfect. Let's do the next interesting adjustment. Read the C. Doubt idea, Nishkala. 5th July. Oh, sorry, we didn't read it completely. 1,60,000 were delivered on 5th July. So we need 2,40,000 we have to. So the balance, wait. Oh, simple logic. See, listen. So we need to make our accounting policy clear here. We need to make our accounting policy. So there can be two types of accounting policy. Accounting policy number 1. I will record the purchases when I receive invoice. I will record the purchases when I receive invoice. Accounting policy number 2. I will record the purchases when I purchase the goods. When I physically receive the physically received, I will record. So if I am of a policy way, I will record the inventory when I purchase, meaning when I receive the invoice. Between 23rd and 30th of June, entire 4 lakhs worth invoice is received. 1,60,000 worth goods are not received, but entire 4 lakhs invoices received. Invoice for 4 lakh, goods for 1,06,000. Goods for 2,40,000. 1,60,000 rupees worth goods were received after 31st of March. So if I have the policy of recording the inventory when the invoice is received, should add entire 4 lakh. But if I have a policy of including the inventory only when I physically receive the inventory, then I should add only 2,40,000. Did you understand? What is correct? Usually in this kind of scenarios, you would have to make an assumption. For this particular question, I would say add entire 4 lakh, write in the note. The absence of specific mention. Remember the previous problem, they had given their accounting policy. So that policy should be given. If they don't give, we will write. In the absence of specific mention of accounting policy, it is assumed that inventory will be considered when the invoice is received. Purchase of inventory will be recorded when the invoice is received, not merely when the physical receipt of goods happens. In this case, invoice for entire 4 lakh is received. Physical inventory of 2,40,000 worth of goods are there. 1,60,000 worth of goods are received later, but the invoice is. You get it? Okay? Very good. So in majority of the questions they give the policy. If they don't give, we'll do the same. This is a standard policy. What is the standard policy? Purchases are recorded when invoice is received, not on actual receipt of. Yeah. Then yes, you will. You should. Okay. Totally. Ask once again. Ask, will you lose marks? Lose, No, won't lose. Won't lose marks. Yeah. Come on, let's read the next one. So, what about? We will read. I didn't even start with C. We need to make one assumption. We'll make one assumption. Whenever the goods are sold, irrespective of the delivery, we call it sold. Or otherwise is also correct. The question that we did before this, they had given first 2 lines same policy. No, they have not given in this. I am not cooking this up. That is quite obvious. They have not given those policy. We'll have to write that assumption at the end of the. Am I right? Yes. Read the sales part. Sales were 13,60,000, which include goods worth rupees 3,20,000 sent on approval basis. Now listen to me. These goods are sold or sent. 3,20,000. Sold or sent. Who has the ownership? Have we transferred the ownership to the other party? Only possession has been transferred. Read it further. Half of these goods were returned before 30th June. Half of the goods they have returned back. They have returned back to us. Fantastic. But no information is available regarding the remaining. Let us assume that the time period has not lapsed for them. The time period is lapsed, it's a different scenario. Let us assume that the time period has not lapsed for this inventory. So goods have been sent on return or approval basis 3,20,000. Out of this, half of the goods have been returned back to us. Balance half of it, they've either accepted nor returned. You agree with me? Now, as on 30th of June, you guys quickly tell me what is the status of those goods. We need to find the inventory as on 30th of June. No, come on. As on 30th of June, what is the What is the status of such goods? Whom does it belong to? Does it belong to us or does it belong to the other party? One moment. I've done the detailed work in note. If I can't write it also, no, it's like full dancing. Better off show it to you. Didn't do this. No, we did. A moment. This is 24 up. The number is different there. Six five. Already started looking at the clock. I'll leave you in 10 minutes. 10 minutes. 10 minutes. How many minutes? Didn't do this. Okay. Fine, that's okay. I'll explain this part to you. I'll show the solution. Lot of keys are not working. Alt tab is not working. Not able to switch tabs. Okay, let me do another thing. I'll explain the goods sent on return or approval part to you people right now. Keep a note of this. Then we'll finish that in tomorrow's class. I'll understand that I told you I'll leave by 6. Yeah, see, goods no can be sent on return or approval basis. This is a concept where we give the goods to the other party with an option for them to either return the goods or accept the goods. And this will be time space, meaning they have an option to return the goods within a specific time. Within that specific time, if they don't return, we'll assume that these goods are sold to that party. In our present question, what really happened in this case is we have send the goods worth 3,20,000 to the other party on return or approval basis. Out of this, 50% of the goods they've returned back to us between 23rd and 30th. As on 23rd of June, no, this stock is not with us. Why? It is with the other party because it is sent to the other party. But later he has returned some goods back to us. Am I right? How much? Half of it, 1,60,000. The other half, what is the status? Either accepted, not returned. Do we assume that the time has lapsed or not lapsed? They have not mentioned that the time has lapsed, so we'll assume the time has not lapsed. So the stock is lying with the other party. Now, how much of this 3,20,000 will belong to us on 30th June? Entire thing. How much does it belong? Correct. No. Why? 3,20,000 is sent. In that 1,60,000 he returned. Selling price 1,60,000, not cost price. 1,60,000 he returned. What he returned is definitely there with us. What he returned should be there with us. It belongs to us. The other half is lying with him, but ownership is with us. Possession is with them. Ownership is with. So we should include that stock also with us only. So entire 3,20,000 should be included in our inventory. But that 3,20,000 is at selling price. We need to identify the cost price of the sale. Then take it. The cost price, how do we find? Given later. How do we find the cost price? So in 13,60,000, eliminate 3,20,000. What's remaining? 10 lakh. 13 lakh 60 minus 3 lakh 10 lakh 40. 10 lakh 40 is normal sales. What is 10 lakh 40? Fantastic. That 3 lakh 20 completely will belong to us. You get this? Now these goods are sent on return or approval basis. So on 23rd of June, when we count the inventory like this in our godown, will that stock be there in our godown? Why? It is there. Does it belong to us? How much? Entire 3,20,000. Entire 3,20,000 after eliminating profit margin, I'll take it into my stock. 10,40,000 sales between 23rd June and 30th June. 10,40,000. 10,40,000 sales between these two dates. Let's see what information have they given with regard to that. Goods are sold at cost plus 25%. However, goods costing 2,40,000 had been sold for 1,20,000. So this is a very interesting adjustment. Come on, let me show. One moment. Give me little time. Swalpa hari madbidi. I'll show this one last adjustment and then I'll tell you little bit of tips that I told I'll tell and then we'll find it. Little. 5-10 minutes. And you pressure ಹಾಕ್ಬೇಡಿ. T20 match last over ಅಲ್ಲಿ 20 ನೋಡಿಬೇಕು ಅಂತ ಹೇಳ್ಬಿಟ್ಟು ಪಾಪ ಎಲ್ಲರೂ ಓಡಿಸ್ಕೊಂಡ್ಬಿಡೋದು ಅಷ್ಟೀಗೂ ಬೈಯೋದು. Okay, now tell me how much is the sales? Sales is, see, when I say give me some time, that time is completely mine and nobody talks. So in this, how much is goods sent on return or approval basis? 3,20,000, and this entire 3,20,000 is at selling price. Do you agree with me? This entire 3,20,000 will belong to me. Once I identify the profit margin, I'll eliminate the profit margin from that 3,20,000 and balance I'll completely include it in my stock. How much is the sales? Normal sales. In this 10,40,000, there are two variants of sales. How many variants of sales? Two variants. At what is the profit margin that they've told? At 25% on cost, no? How much sales do you make at 25% on cost? Have they told the value? No, usually that is the case, but certain goods costing 2,40,000 have been sold for 1,20,000. This is a special item. Not every item can be sold at profit. Some old, redundant, slow moving stock is there. You might have seen in few other problems. There was something like slow moving stock, old stock. Such old stock is there. Whose cost is how much? 2 lakh. Selling price is how much? So can I say not every unit is sold at profit of 25% on cost. Some units are sold at loss. So how many units are sold at loss? Selling price 1,20,000. Cost price so much. Okay, let's write okay abnormal sales. Abnormal sales, how much is selling price? 1,20,000. This item's cost is 2,40,000, which we have to write here as well. Again, I'll write cost price. How much? This is at loss. Don't worry about the loss. So sales, total sales at selling price is 10,40,000. In that, abnormal sales is 1,20,000. How much is normal sales? 10,40,000 minus 1,20,000, no? How much do we get? 9 lakh? 9,20,000 is sales at selling price. Normal sales at selling price. What is the profit margin? 25% on cost. 25% on cost is 1/4 on cost. It is 1/4 on cost. On sales it is 1/5. Apply 1/5 on this. Eliminate it. You will get the cost price. How much do you get? Should I do it more slow? 7 lakh? 7,36,000 is the cost. So I can easily tell that the cost of the goods sold is 7,36,000 plus 2,40,000. 7,36,000 plus. Let's find the cost of this also. How much is the cost of this? Goods sent on return or approval. 3,20,000 minus that 20% margin. 20%. 3,20,000 minus 20%. Sir, how 20%? So profit margin is 1/4 on cost. 20%. 3,20,000 minus 20%. How much is cost? 2 lakh. 2,56,000 plus 7,36,000 plus 2,40,000 is the goods which were there with us on 23rd of June. But assumed to be sold between this. Let's say, okay, fine, not like that. 23rd of June, when we physically counted this inventory, we physically counted this, it was not there. It was not like that. Wait. This 2,56,000, we can say it was not there with us, but it belongs to us. So I'll add this 2,56,000. However, this 7,36,000 and 9,40,000, it was there with us on 23rd of June, not there with us on 30th of June. So I should return. Shall I repeat? Very simple. Listen to me. They've given us the inventory as on 23rd of June. On what date have they given us the inventory? They want us to identify the inventory on what date? 30th of June. So they've told between 23rd of June and 30th of June, sales is 13,60,000. How much goods are sold? 13,60,000. Usually what we do, sales is outflow. 13,60,000 worth of goods was there on 23rd of June, but not there on 30th June. So what do we do? From 23rd of June, we deduct 13,60,000 to arrive at selling. Stop on 30th June. But unfortunately, 13,60,000 is selling price. We can't do that. We have to adjust the profit. Further, they went down to tell like goods sent on return or approval basis, which are approved, or basically 3,20,000. Firstly, that 3,20,000 should not be included in sales only, because it is not sales. Is it sales? It is only sent. So eliminate that 3,20,000. How much do we get? 10,40,000 to be sales. So is our sales 13,60,000? Sales is 10,40,000. That 3,20,000 is there, no? That's a separate account. That 3,20,000 is not sales. It is only sent. Who has the ownership? Who has the position? Out of that, half of the goods they have returned. Other half is kept with them, but they have not told yes, they have not told no. Whatever we received back, what date did we receive back? Between 23rd and 30th. Between 23rd and 30th. On what date did we count the inventory? 23rd. On what date did we count the inventory physically? But what date stock are we trying to find? So on 23rd, was it there in our go down? When we identify 30th value, should we include it? So we add entire 3,20,000 at cost price. We add entire 3,20,000 at, so add 2,56,000. But half of it is received. When is it received? After 23rd. On 23rd of June. Let me repeat this. On 23rd of June, when we count the inventory in our go down, is this good sent? With whom is this good sent? The one who received. Not with us. Does it belong to us? Should we include? Doesn't matter what happens after that. Sold, accepted, we don't care. Include everything. If it is accepted and sold, then we don't have to. But it is our stock, not accepted. Whether returned or not returned, entire stock is ours. We should include everything. Everyone here with goods sent on return or approval. This will discuss this in detail again tomorrow as well. We have not taught this topic at all. We'll do the topic tomorrow, 6.2. But I'll still take you to it. What if they mention, we'll see later. If they mention, we will change the answer. They have not mentioned, we will not change. If they mention, what if? Okay, what if? 25th of 23rd they return, 25th they return, 29th they return. Same. Between 23rd and 30th they return. Pause. Simple logic. 23rd, it is with somebody else, not with you. So when you counted the inventory, you didn't count it. You didn't count it. 30th, they have not accepted the goods. It all belongs to you. Whether he returns 100% of the stock, whether he returns 0% of the stock, whether he returns only 50% of the stock, 100% of the stock belongs to you. You need to add the entire stock. Return, not return, partly returned, fully returned, doesn't matter. You do the same adjustment. It is accepted. Got that? Now, how much is sales in the other case? 10,40,000 is sales. The 10,40,000 sales, no? This is the stock that was there with us on 23rd. Was it there with us? Yes. We sold it between 23rd and 30th. So we should eliminate this from our inventory. Do we understand? So did you understand this? But we can't straight away deduct 10,40,000 because 10,40,000 is selling price. We need to identify the cost price. Can we straight away take 25% on cost? No. That includes two variants of stock. One, sales at normal price of 25% on cost. Certain items, sales at loss. Selling price is 1,20,000, cost price is 2,40,000. Do you get that? So 1,20,000 is abnormal sales. Total sales 10,40,000. How much is selling price of normal sales? 10,40,000 minus 1,00,000. 9,20,000 is sales at 25% on cost. If it is 25% on cost, 1/4 on cost. What is it on sales? 1/5 is 20%. Remove 20% from that selling price, will identify the cost price. So we know cost price of that normal sales, cost price of this abnormal sales. If we add them all together, we'll identify cost price of the entire goods sold. Correct or not? That will add this. You get it? We'll get better understanding of this tomorrow when we do goods sent on return or approval in detail. So did we even finish this problem? I think we've done with all the adjustments. Yeah, we're done with all the adjustments. I think it's a wrong pick. I shouldn't have picked a question at 6 o'clock. I should have just wounded it up. But I hope you are clear with this. You get this? If in case you have any doubt with this question, you can come back to me tomorrow. If you want, you can take a screenshot of this question. And if in case you have a doubt, you try this back at home again. If you have a doubt, you come back. Yeah? Conceptually, we've done the question right. I want to leave you all with a good thought as you go out. So I want to discuss this. I want to tell you a small tip. I told you I'll share some tips with regard to. Yes? I'll take another 10 minutes. For that, have they given net reversible value? No, that's sold, no. Sold, no. If you include that in the inventory, then we should take NRV or cost, whichever is sold. It's not included in inventory. Got my point? Yeah. I want you all to not talk. What did I tell and share? Capital and revenue. Okay, I'll share that in the Telegram. Is that fine? Give me a moment. This is going to be a small tip sharing. I'm all fine. 10 minutes more. Hey, 10 minutes more. Whoever is getting super delayed now can actually leave. On a true point, I'm telling you. I won't be basically remembering you and then making fun of you tomorrow in the class. Or questioning you tomorrow. I won't do that. I won't do that. Small. I spent a little time making this. Quickly, here's some points that I shared about the exam preparation. Because I want you to go out of the class in a good mood. You did a question like that and then you go home, you will feel little not nice. This is few things that I've observed what a student basically goes through in the exam preparation. I hope this comes in handy. So I was telling you people some time ago that in that George Barrister basically, I would say that runner, the problem was not in the knees or the elbows or the legs, the problem was at the heart. And similarly with us, whenever we are preparing for examination, it's all a specific exercise of brain. Our entire examination system is designed in a way to test our memory and not basically our knowledge. In a simple time, when you be given enough time and enough say mind space, you actually solve a problem. But you've been judged about in 3 hours as to what exactly you did. You did 6 months of hard work, attending classes, preparing for everything. Everything is judged in 3 hours, 180 minutes. What you write answer. So you know the topic really well. In that 180 minutes, you are not able to crack it. You are considered a failure. Get that? That's our education system. Quite easy for us to stand here and then talk about our education system, how bad is it, comment upon it, and then talk like what monumental changes should happen in our education system. But we know that no matter how much a lecture I give about education system, in the next 20 days, you'll be writing your examination. The same education system. So let's not be part of the problem. Let's try to be part of the solution. And the entire community has accepted this. So let us not revolt and then try to see as to how to not train our brain in this entire process, but train our brain to appreciate and then crack this exam. So the entire logic is not to train the brain, but to train it in such a way that you can crack it. Train. So this is considered to be your brain, and the entire session what I'm going to talk about in the next 10 minutes is how not to drain it, but how to train it in the exam preparation. Let's get started. The first important point is target setting. Like I told you some time ago in the same example, any target is very much achievable if you stop dreaming about it and start calling it a goal. So stop calling your targets as dreams, start seeing it as goals. Because when you see it as a dream, like one day. But when is that one day? When you see it as a goal, it's like one day. That is 21st of December. That is 21st of November. You keep a specific day. So you need to specifically decide what exactly is the target that you're basically trying to achieve. And once you fix that target, you need to see as to, okay, now on 15th of December, I should be able to know this much of syllabus. If I should know it by 15th of December, how many days do I have from now to that date? If I have these many days, how many days will go away for law? How many days will I go away for quant? How many days will go away for PCR, BCK, ECHO? These many days is what I'm left with. So these many days left. This much of subject left. Resource allocation. We do it with number of people available and amount of work to be done. Then we divide it among the people. Each person should finish so much of work. That's what happens on the game of cricket also, no? You get that? So this many runs to be scored, this many overs left. This many overs left, this many runs to be scored. Per over you should score like this. So if your required run rate is about 10, you say okay, each over if you get one boundary and ensure that the rest of the 5 balls are not a dot ball, always reaching the target intent. And you should not ensure that we don't lose the wicket in the next 5 overs. We get one partnership, one big part. That's the kind of strategy that we go on the field. Same thing works here also. So you basically identify how much of time is left for the exam, how much of syllabus is left, and by what day should you be finishing. Bring it down. So break that entire target. Now we have a 25 days target. No? Break it down to daily target. Break down the daily target to hourly target. That hourly target should be brought down to minute target. Only then you will be able to do anything. You don't break it down to minute to minute wise target. Assume that today's entire day you need to read 3 chapters. So chill. The reason is very simple. 3 chapters. You wake up at 6, you are chilled. 3 chapters, you have so much of time in the day. Even at 10 o'clock in the morning, you are not worried. 3 chapters, I will do it. Afternoon, you start panicking. And by the time you come to night, you had your dinner, 2 chapters are left, you are already started. And then the entire pressure starts mounting at that point of time. The reason is very simple. We see 3 chapters in a day. We should not see 3 chapters in a day. 3 chapters in a day. Meaning, I should finish my first chapter by 12 o'clock. If I should finish first chapter by 12 o'clock, first chapter has 20 questions, in which I will be solving 15 of them. Why I am just glancing through. So if I have to finish 15 questions by 12 o'clock, I should finish 10. I'm probably taking about 20 minutes per question. So how much time do I have? If I start now, I will finish by 11 o'clock. If I don't start now, I won't finish. So if you spend 15 minutes, next 15 minutes without solving a question, start panicking because you want to solve 15 questions. But if you spend 15 minutes without solving, you can only solve 14. You waste 1 hour, that means you can only solve 8 questions. So you need to break down your weekly target to daily target to hourly target. So this morning when you wake up, you need to know what is the subject that you should study today, how much of it should be done by 10 o'clock, how much of it should be done by 11 o'clock, how much of it should be done by 1 o'clock, how much of it should be done by 2 o'clock. Hourly target should be. Only then you work. If no, there is no fire, even the rocket doesn't fly into the sky. Get that? As simple as that. So a lot of them tell planning. And you say planning is waste of time. Sir was telling in the morning, remember, make a plan. If it's too late also, please make a plan. Everyone tells that because no planning is pakka failure. Make a plan might fail. Don't make a plan, pakka, I will fail only. Because no plan also, no. Even if you fail, you don't even know how you fail. But if you make a plan like this, even if you fail, you get to know where you fail. Simple. Check the plan. What knowledge is what knowledge not. If you have it on the plan only, that you fail. Get what I'm trying to tell? And this kind of a plan is not something that you do in 5 minutes, 10 minutes. You might spend 2-3 hours to do this plan. That's what it takes. Great plans take time. It's not like you start working straight away. No. You need to first have a plan as to what will you do. Only then you start executing it. When you have a perfect plan, no, half the job is done. The rest of the job is just executing the plan that you made. So it's not too late. It's never too late. Please go down home today and then make a day-wise plan. From today, if I ask what are you going to do on 18th of November, what are you going to do on 23rd of November, what are you going to do on 4th of December, have a perfect plan. Tell me subject name, chapter name, unit name also should be able to tell as to what are you going to read that day. Get that? Great. So that's the first important part. And the next thing that you need to note is always remember that in the examination, no, you are a student and not an evaluator. You are a student, sir. Not funny, so funny. Remember that you are a student and not an evaluator. Reason is very simple. Now today, whenever I see people reading math, I see people reading accounts. No, what they do now, valuation of inventory. Maybe if you try to revise today after class, you keep the question, you keep the answer. Wherever you read from, whichever book you read from. You look at the question, you look at the answer. You look at the question, you look at the answer. Like, oh, this I understood. This how did it come? I did not understand. You blank, you fill 2-3 pages, you flip, you see the working, you like, understood. That's it. You do that, so you practice everything like that. Like this, you do every problem 3 times also. Entire syllabus you can finish. You go to exam hall, you go to the question paper, you look at the question paper, you look at the answer. You look at the question paper, you look at the answer. Illa. Remember that in the exam, they won't give answer script and ask you to correct. They'll give answer paper and ask you to write. So if you go on thinking like an evaluator, look at the question and answer, you will not be able to write. Here, it's time constraint, so I do the answer and you see. But when you practice at home, you need to write it. Maybe if you take valuation of inventory as a chapter, there will be 15 questions. You will not be able to solve all 15. I know that. But at least 8 to 9 of them you should solve. Remaining 5 to 6 of them you can glance. Solving all 15 is foolishness. If you solve all 15 questions, you are preparing for May 2020. Let's talk practical things. Let's talk very practically. If you solve all the questions that is there in material, you prepare for May 2023, in fact November 23. So you can't solve all of them. If you skip all of them, if you glance through everything, again you are preparing for May 2023. So if you have to crack it in December, sir, yes, sir. If you write also, you tell it's not possible. If you see also, you tell it's not. So you should do a combination. You need to pick certain questions you will solve, certain questions you will glance. Even the day before the exam, the same thing should work. You should solve some questions the day before. But I'll tell you the ratio. Now, out of a 15 question chapter, you need to pick some 3-4 questions and delete them, saying these 3 questions I'm not seeing. I'm not seeing. 15 questions is an example in a chapter. 3 questions will eliminate. Maybe because they are super easy, or maybe because they are super difficult and not examination required types. Eliminate them. Do exam standard. Don't do something like I will become or I'll become like I'll launch myself as a rocket, score 450 marks out of 400 in the exam. No. Remember that 400 marks is the exam. Don't do questions which are beyond examination. Eliminate. That are all these theory classes for conceptual knowledge. So most difficult and then most easy question you eliminate. 3 questions you eliminate. Out of 15, now you have how many? 12. In that 12, now when you're doing first reading, you will solve maybe 8. You will solve 8. You will see through 4. 4 questions you will just glance through the answer. You will see what is to be. 8 questions you will solve. When you solve all that one, in this 12 now, you need to pick what questions should you do in the second revision. The day before the exam, what questions should you solve? You should pick that right now. Today you need to make a note saying that the day before exam, I will solve question number 8 and question number 12. You need to write it in a book or write next to that question. The day before the exam, if you want validation of it, you should know what questions. So I kept myself around. I should solve 8 and 1 and I should look through 4 questions. So the day before exam, you will not be solving all that one. Or you will not be even be solving 8. You will solve 2 questions, you will look into 4 questions. So 6 questions and 15 questions are there in the chapter. 3 you did in the class. That's the end of it. 12 questions are there. In the 12 questions, first reading may 8 questions you will solve. 4 questions you will glance through. Glance through the answer. Second reading or the day before the examination, you will solve 2 questions. You will glance through 4 questions. Remaining 6. You do everything like that. You will do mastery in 3 chapters for the examination. Unfortunately, exam is for 10 chapters. You get it? That's what we should do. So remember that you are a student and not an evaluator. Every day write and practice, including law. Including law, you always read and practice. You should write and practice. A lot of them say law when they read they feel so good, but when they write the exam, first mock test they write on exam on law. That's when they realize that, sir, I kept the pen on the paper, but I'm not able to express. As if you're writing a love letter. So that's what you end up saying. So that first mock test on law hits you hard. That is because you go blank in writing. So now I'm not telling write and practice. If you write every entire law and practice, you'll never be able to finish again. Again, you're preparing for May 2020. So what you should do is, if you study for 8 hours, minimum 1.5 hours in the day you should spend writing law. Whatever you read, just go on writing it and then try and practice. So that's the point on whether you are a student or evaluator. Ask yourself that question, prepare for it like you are a student. So the next thing is, a lot of you have this question. Sir, should I read it in the night or should I read in the day? Mom says read in the morning, 4 o'clock, Brahmi Murta, and then my brain says morning 4 o'clock, I am very sleepy and I can't study. I open the book at 4 o'clock and I will be dozing off in the book only. And in the night, I am a night reader, sir. I can stay awake till 4 o'clock but not wake up at 4 o'clock. In the night, you start reading, but unfortunately, mom woke you up at 4 o'clock. In the night, you are sleepy, so night also you didn't study. So basically, you are not studying. So the answer is very simple. Should we read in the day or should we read in the night? We should read. We should read. It doesn't matter day or night. Whenever you day and night you read, not day or night. Day and night. But very important point. See, this is important at this stage. But when you are attending classes, it was a different thing. I think no one is sitting here who is attending. Everyone is December 22. Yeah. So when you are attending classes, I would have personally pushed you to wake up at 4 in the morning and study, because your day is packed with college and classes. When you are if you are a night reader, after college and classes, you are very tired when you sit to read. When you start reading in that tired phase, no, your studies are always bad. So I used to force you to use that fresh part of your day to study. So considering the fact that your examinations are done, your classes are done, and I would say study at any point of time. Study in the day, study in the night, I don't care. But remember not to sleep between 2 to 5. Few people study all night and then between take a power nap in the afternoon because you're awake all night. Don't do that. 2 to 5 is your holy hour because your examinations are 2 to 5. Remember that you keep yourself mentally as physically awake in 2 to 5. 2 o'clock to 5 o'clock every day. You need to sit and write. 2 to 5, no lunch. 2 to 5, no washroom. 2 to 5, sit and write. You ensure that those 3 hours in the day. Don't tell me about tomorrow. After tomorrow, every day 2 to 5, no lunch, no washroom. You will sit and write for those 3 hours. You do that for next 20 days, no? Your body clock will get adjusted. Every day 2 to 5 when you sit and write, your body will feel comfortable. Not every day you have food at 2. Exam day you have food at 12 because you need to go to exam hall by 2. At 2 your stomach starts growling. You get that you have food at 2 o'clock, 3 to 4 you sleep, 4 o'clock you go to washroom and then do your business. So all the nonsense things you did between 2 to 5, exam day 2 o'clock you feel hungry, 3 o'clock you feel sleepy, 4 o'clock you feel like going to washroom. Exam go in the. So don't do that, okay? So after tomorrow, every day 2 to 5, you will sit and read. No washroom, no eating. And also try and write entire 3 hours. Whatever it is, mathematics, statistics, logical reasoning or accounts or just economics or BCK or law, also start writing answers. 2 to 5 every day if you write for next 15 days, no? Trust me, exam may will never complain saying the time was short. A lot of them will again feel the shortage of time in the exam because when you are attending classes, we make you write way too much. We make you write way too much. Your hands are like very good in writing. But this 15-20 days of gap what you get after the classes are over, before your exam, you start becoming evaluated. You read. I'm not telling you waste time. You spend time. You read and you analyze. You don't write and practice. Because of which last 15 days these fingers have not moved. All of a sudden this finger writes for 3 hours. You feel like, sir, this is paining. I'm feeling numb here. I'm not feeling it. So all that will happen. So ensure that you write for 3 days at least for last 15 days before the exam. Write and practice. Whatever that writing is left in the day, do it between 2 to 5. And that will help you do a lot better. And I have a couple of more tips to share. I think we can hold it for tomorrow. Shall we? Yes. So meanwhile, I have a couple of questions for you all today. Did you guys learn anything new today? Yes. Was it a day full of learning? Yes, sir. I put in a lot of effort all day. I hope you people appreciate it and then it was of great value. I couldn't sleep properly last night considering the fact that so many people would make it up here today and I didn't want to waste your time. I wanted to give every minute of your day to be filled with some knowledge and every second in that minute to be filled with some subject. I didn't realize how is it that even I stood up here for so long. I only sat during the breaks and I stood here. But that was all possible because you people were listening. Even for a minute, if I start thinking about something else, that reminds me that it's like a minute of 300 people sitting in this hall whose time I'm wasting. So I hope you people will show up with the same energy even tomorrow. I want you to be a little better tomorrow with regard to one thing. Come back in time after your breaks. Breaks, where it is meant to be 15,000 is 15 minutes. 15 minutes is 15 minutes. You don't come back after 30 minutes. Get that? Everyone, most of them. And then try to decrease your passive breaks. Washroom breaks, try to decrease them. I'll give a break, take it only at that point. Or even if you do take a break, come back on time. Don't take very long casual breaks. Yeah? That's the message for today. Tomorrow, see you all at 9 a.m. And today, end of the day, I'll share the links on the rest of the topics, TOFA, whatever we did today. Please do take them up before you come to tomorrow's class. Tomorrow, we'll start with an important topic, whatever bothers you. Let us not do depreciation as first thing in the morning tomorrow. Maybe we'll start with consignment because a lot of them are finding it difficult. Maybe once we finish consignment, then we'll do goods sent on return or approval, final accounts, NPO partnership, and then finally do company. At the end of the day tomorrow, we'll also have a paper evaluation of the previous attempt discussion. I'll share the rest of the tips for this also with you. And finally, go through the one of the past examination students' answer paper in detail and see where did he get marks and where did he lose marks. Got that? Huh? We'll do that June 22 paper in that amended cash. That's it, guys. Did you learn anything new today? Yes, sir. You guys have little fun today? Yes, sir. Remember, life is not a battle to be struggling, it's a game to be enjoyed. Till the time you learn something, you are having fun. It's all good. The day you guys either stop learning something, you stop having fun. Trust me, you might start. Because you might be in a battle. Some rule to stay happy is pretty simple. It is to stay. One last time on this day, I have just one simple question for all of you. Are we in the game? Yes, sir. Are we in the game? Yes, sir. On to the top. top of your voice. Are we in the game? I see you all tomorrow in the morning at 9 a.m. Till then, bye. Take care and get lost. Bye, guys. A very good morning once again to all of you people. Welcome back to CA Foundation face-to-face marathon by Vishis Academy. Good that people are showing up on the second day, though it's not your usual place of what to say visiting. That shows your determination in reaching with. Got it. Great, great. I hope everyone's comfortably seated and I hope everyone's had breakfast. 9 o'clock session, you should have breakfast and then come. Don't expect a breakfast break at 9. Yeah. So in yesterday's session, we did chapter 1, 2, 3, and 4. So we have chapter 5 depreciation to start with, but we will not be starting with chapter 5. We will start with something that I asked yesterday how many of you are comfortable with, but not many two of you are comfortable. Meaning, we'll start with chapter 6, unit 3, consignment. Then little later statement we'll do depreciation. Depreciation is also important. I won't say any chapter to be less important or not important. It's just that we'll do consignment in the morning because you people don't like consignment much. Is what I heard from you people yesterday. And consignment is a topic which should be understood pretty well because if the question comes from this topic, it will come for good amount of in marks list. 3 to 10 mark question, 12 mark question. Yeah. And this is again a chapter which you cannot say, okay, in the exam, no, I'll apply my brain think and write. No, you need to do a lot of concepts. You need to know a lot of concepts. Unless and until you know these concepts, you will not be able to solve any problem from this chapter in the examination. So, shall we get started with consignment account? It's a special transaction chapter from chapter 6, unit 3, because it is unlike your normal usual purchase sale transaction. There are few new terms into this. So there are new parties, the way the transactions are dealt with is different, the way the transactions are accounted is different. So considering all of this difference in the accounting that's there in this particular unit now, you would have to be more cautious with regard to a lot of aspects. So let's get started. As you can see, consignment accounting. Everything's functioning, just this not functioning. Okay. Yeah. So we are going to discuss the topic of consignment accounting. I told you that this is unlike a normal sale transaction. How does a usual normal sale transaction work? A normal sale transaction works like this. So there is a seller, there is a buyer, and the seller gives the goods to buyer, and buyer gives money to seller. End of the story. This is how it works. Seller writes the sale entry, buyer writes the purchase entry. Seller writes the receipt entry, buyer writes the payment entry. End of the story. If in case max to max, there can be sales return and money returned back to the buyer. Correct or not? In a consignment transaction, no, it is not just seller and buyer who's there. Seller cannot directly reach the buyer for whatever reasons it might be. Maybe because if the seller has to physically reach the buyer, he is restricted to only few buyers. He is restricted to only a specific geographical location. He wants to reach out to buyers beyond one geographical location. That's when he will take help of a lot of people. You get it? If seller has to usually go meet every person and then sell it, it's highly impossible because humans have restrictions as to number of hours in a day, number of hours they can work, and number of years they need. Get that? So he starts using the other people who stay in the plant. So he is our seller, and then the one at the end, right end, whoever is of people, they are buyers. So in between these two people, seller and buyer, comes an intermediary. Get that? That's what makes the entire topic of consignment interesting. The one who's sending the goods is consigner. One who's sending the goods is this guy sends the goods, and the one who receives the goods is not the buyer. The one who receives is consignee, and this consignee will sell the goods to customers on behalf of the customer. So the person who sends the goods is the consigner. The person who receives the goods. Canada for receiving we say is code. What do we say for receiving? The one who is holding the goods have EE in their name. Consigner, consignee, the one who has EE. Drawer, the one who draws the bill. Drawee is the one who receives the bill when he signs. So drawer, promiser, the one who makes the promise. Promisee, the one who receives the promise. The one who keeps the hand at the bottom. Promise, to take promise. So like that, promiser, promisee, drawer, drawee, consigner, consignee, transferer, transferee, all that. So we know. So the one who's sending the goods is the one who's sending the goods is the one who's receiving the goods is and consignee is an agent who sells the goods on behalf of the consignor to its customers. And once he sells the goods, he will collect the money on behalf of the consignor. Consignee will collect the money on behalf of the. Once he collects the money, he has to transfer this money back to consignor. But sir, it's like wholesale retail. The first day is wholesaler, second day is retailer, and finally you have customers. No. In the case of wholesale retail business, no, the retailer has to buy the goods from the wholesaler and then sell. You can buy it at any price from anyone. You can sell it to anyone at any price. You can sell profit, you can sell loss. He has a choice. He has the will to decide whatever he wants to do. But in the case of consignment, no, the first person is the owner. The second person never buys the goods. Remember, so this first person, whoever is there, no, is consignor. Who's he? This consignor will transfer the goods to consignee but not sell the goods to consignee. Will never ever buy the goods. Consignee will never ever. Consignee is only an agent. In case of wholesale retailership, retailer buys the goods and then sells. He is the owner of the goods. Where consignee only has mere possession of goods and consignee will never have ownership of goods. So goods are owned by somebody else. Goods are held by somebody else. You get it? Goods are owned by somebody else and held by somebody else. That's what makes this very interesting. Okay, have a look. So this guy, consignor, whom are you talking about? Okay, consignor is a principal. Who's consignor? PAL Allah. PAL is the one who's at college. This is PLE. What do we call him as? Principal. He is principal. Once you finish your CA inter, you get into articleship. Yeah. Whom do you work under? Principal. You don't call them boss. You are not employee. You are not slave. You are not laborer. You are a, what to say, article, and they are your principal. Same is the case here also. Here it is principal and agent relationship. Principal and so the one who sends the goods, the consignor, is the principal, and he is the owner of the goods. He has ownership. What does the principal have? Very good. But what is it that he doesn't have? Possession. What is it that he doesn't have? So he owns the goods, but he doesn't possess the goods. He owns the goods, but he does not possess the goods. However, he, whenever he sends the goods, no, it is not sale. It is only sent. We say goods sent on consignment. Don't say goods sold on consignment. We say consignment sales. Meaning I give the goods on consignment to consignee. Consignee can sell the goods. Consignee can. The sales are made by consignee. Sales are not made by. So when consignor gives, it is only transfer of possession. It's only transfer of. So whenever we sell the goods, what do we create? Invoice. We create one invoice. If the tax is applicable, we call it tax invoice. We generate one tax invoice and then give it to the consignee. To the person who buys. But here in this case, we don't sell the goods. We are merely transferring the possession of the goods. Can I give an invoice? No. If I give an invoice, it means that I have sold the goods. If I give invoice, it means that I have sold the goods. I have not sold the goods, so I cannot give invoice. Right or not? So this is like sale. This is like sale, but not. So we give something which is like invoice, but not invoice. Invoice tara, but invoice Allah. We have a format of invoice. The person who is receiving their address, amount, value, quantity of goods, everything will be there. Not invoice. Get that? So this is something which he gives along with the goods. This paper which is sent along with the goods, prepared by consignor, sent to consignee, what we call as invoice format. Like it's in the format of invoice. Format we call it as pro forma. We call this pro forma invoice. What do we call it? So whenever consignor sends the goods to consignee, along with the goods, it also sends a description note. It will have a description of the goods sent, what is the value at which you need to sell it, what is the price of that goods, how many goods are sent, everything. You write all that details and then send. And such a document is called as pro forma. So this is pro forma invoice. Tell me who prepares pro forma invoice? Whom is it given to? Very good. Now, is it sale? It is like sale. Fantastic. Answer this question for me. Read what are the contents of pro forma invoice. This pro forma invoice. No? Is this pro forma invoice? Okay. Can you please read and tell me what are the contents of? Only few people can see. Rest of you can't see. Do you see text there? It is there. Why can't you see it? See, come on. Pro forma invoice. What are the contents of pro forma invoice? Start with first one. What is the quantity of goods sent on consignment? How much goods are sent by consignor to consignee? It gives number of units sent. It gives value per unit. It gives all the details of goods sent on consignment. It doesn't just stop there. Along with it, it will also give. See, consignee is an agent. Who's consignee? Agent means what? Whatever you will tell, I will follow. If you tell me to sell, I will sell. If you tell me to throw, I will throw. If you tell me to put it in dustbin, I will put it. So whatever you tell, I will follow. So consignor will ask the consignee to sell the goods. Right? So consignee will sell. So consignor should also tell at what price should consignee sell the goods. Consignor should also tell at what price should consignee sell the goods. So this is the only document that is there between consignor and consignee. This is like an agreement, term sheet. All details of the consignor should pass on to consignee. No, it will be only in this sheet. Other than this, there will be no other document. There will be no other document. There will be no other evidence. So this is the document in which consignor will mention the consignee as to what is the price at which the goods are supposed to be sold. What is the consignor's expectation? And then the next piece of information is why is consignee doing all of this? Why would consignee sell the goods on behalf of consignor? That's his only source of income now. He needs to sell the goods on behalf of the consignor so that he gets some. Very good. Such a commission what the consignee is entitled to. You should know no, how much commission. The consignor said first sell, later we'll see. Not possible. First we'll see, later we'll do. Right? So tell me how much commission. I will think if I should go or not, sell or not. So what is the commission that the consignee is entitled to for sale of these goods? Will also be mentioned in this pro forma. The next information that will be mentioned in this will be what to do if the goods are not sent, should we send it back, how to collect money, which bank account to deposit in, and all those other details also will be address, all other small details which we are not worried about our accounting for. Pro forma invoice will consider, will have a lot of other information, but what I showed it to you there was the information what we need for the purpose of accounting exclusively. So okay, consignor is the owner, he doesn't have the possession, he'll send the goods to consignee, he'll prepare a pro forma invoice, send it along with the goods. Now when these goods go to consignee, consignee has to sell the goods. Consignee has to. Does the consignor get to know how much sales the consignee has made? He gets to know when consignee will. He gets to know when the consignee will. Consignor cannot do like this. And like okay, fine, I'm seeing this. No, not possible. So consignee should call and tell, boss, I sold these many goods. Okay, thank you. So that's the only way in which consignor will get to know how much sales is made by. So to inform consignor, consignee should keep a record. Should inform no to consignor what sales have been made. So consignee should keep one record as to how many units are sold, what is sold, everything. So when you keep all of this, what are you keeping record of? Sales. What are you keeping record of? What is the place where we record all the sales? Sales account or sales book. Sales account or sales. So now tell me, if he has to keep an account of the entire sales, what should consignee prepare? Consignee is an agent. Consignee is an agent. What should consignee prepare to record, keep a record of all the sales? A sales account now. Why account sales? Why not sales account? The reason is the sales are made, true, but is it his goods? No. Someone else's goods is selling. How can he call it as sales? You cannot call it as sales. So consignee doesn't have ownership of these goods. Consignee doesn't have. What consignee has is only possession. What consignee has is only. When you don't have ownership but have only possession, you cannot call it your sales. It is sales to consignor. Sales entry should be recorded by consignor. Profit should be booked by consignor. I am after working for. All that I get is commission. So what do? I prepare a document which gives complete details of sales to my consignor for him to record all the sales. I prepare a document and then give it to him so that he can record sales. But this is not sales account. This is like sales account. Sales account tara, but sales account alla. This is like sales account, but it is not. We will give all the information of sales account using which our consignee can write interest. Our consignor can write interest. But It is not sales account. So we call it account sales. What is it? Account sales is the document. See, have a look. Account sales is the document sent by consignee to consignor. Consignee will sell the goods, collect the money. After he collects the money, he should send the money to consignor. He is sending the money. Look at the money. Next to money, along with the money and all you keep 2,000 rupees, 100 notes, rubber band you put no. Along with the rubber band you keep for paper and send. Yeah, how much money you kept, how did you get the money, and everything. That paper what the consignee prepares, sends to consignor is called as account sales. What is it called as? Come on, let's see the details of account sales. Now tell me who prepares account sales? Very good. Whom is it given to? Now what are the contents of account? You have some expectation. Come on, let's read it properly. Account sales. What we have? Number one. Number of units sold by consignee. Very good. Next one. Selling price. See, expected selling price is quoted by consignor. Consignor has told, I want the goods at this price. But as a consignee actually sold at that price. We should know. We don't know. We are consignor. Who tells us? Consignee should tell what is the price at which he sold the goods. Then the third point. See, consignor will send the goods. Consignee cannot sell the goods just like that. No, consignee will also incur some expenses. Some transportation will be there. Some storage will be there. Right? Correct or not? And whenever he sells the goods, packaging might be there. Delivery cost to customer will be there. If the customer says that this good is little damaged, you would have to clean it. You would have to do some problem thing. And then whenever he keeps those goods at go down rent he has to pay, electricity he has to pay, water bill he has to pay. Go down watchman, if it is the watchman salary should pay. You get that? If the goods are at go down, if he has to protect it from fire now, he should take insurance. For that insurance premium he has to pay. There are several expenditures, but the consignee will also incur. He gives all the details of the expenditure. The reason is consignee is an agent. Consignee is an agent. Is he the owner? Who's the owner? Who's owner? Consignor. Consignee is in. I am after all an agent. Working for consignor gets profit. Consignee gets only. Should consignee pay for all of these expenses? No. These are expenses of whom? Consignor. Consignor should pay good. Consignor should pay or say watchman salary. Consignor should pay insurance premium. Consignor should pay electricity. Consignor should pay water bill. Consignor should pay packaging cost, repair cost, transportation, delivery. Every expenditure, the process of consignor should actually be borne by consignor. Why? He is the owner. He gets the profit. One who gets the profit take the expense. One who gets commission gets only commission. Why? There are instructions that he should execute. He executed the instruction. He got the commission. Over end of story. So now tell me an important point. Expenses on consignment should be borne by who? Expenses on consignment should be borne by who? What if consignee pays it? Consignee can recover it from consignment. Consignee can recover it from, for every small expense, consignee cannot call. Okay, consignor, you need to pay electricity 120 rupees. Yes. Now. And then suddenly someone will come, okay, consignor, give me 10 rupees. Why? Someone have come in the morning. Yeah, they're clapping. Fine. So you can't really do that. Okay, scan. Okay, QR code, please. Like you scan and then there consider very good, not one. You get that? So a lot of expenses. He is agent. So what he does is consignee will pay on behalf of consignor. Consignee will pay on behalf of and later no. And again he doesn't have to collect that money from consignor. Consignor's money is with you. Consignor's lot of money is with you because you sold consignor's goods. So in that money, before you give that money to consignor back, you take all your expenses. You keep all your expenses. Balance. Take it. Can I get it for you? So next is now. You throw pencil, shirt, jacket, pencil. Yeah. No. Listen, consignee is just an agent. So consignee will not bear any expense. He might pay, but he'll pay but recover that expenses back from the consignor. How will he recover? Yes, consignment says money what you should give back to consignor. No, he'll deduct his expenses, commission, anything that he has paid from that money, and only the balance he'll pay back to consignee. Now, got that? Yeah. So expenses incurred by the consignee will be written here. And what about the entire activity? Why does the consignee do all this? For the sake of, he will deduct his commission. He will not give entire sales money. Okay, take entire sales money, and then he'll give like this. And later ask, please give me commission. He won't ask. Out of the entire collection, he will take his money, expenses. He will take his money, commission, and the balance money. So it will give like that. So consignee from the collection made because of sales will deduct his expenses that he has incurred on behalf of consignor. We deduct his commission that is supposed to be recorded from consignor and then pay only the balance money back to. You get that? Finally, we give the description of what is the amount that is sending. Get that? So that notes will be there, no? Along with that notes, one CD will be there. In that CD, sales 1 lakh. Less my expenses 10,000. Less my commission 40,000. Balance money 50,000. Correct or not? 2,000 notes into 25. 2,000 rupees notes to 25. 2,000 into 25 is 50,000. We'll give such a description of data to consignor. You get that? Hope no doubts. Very good. So now we've understood conceptually as to how this works. Now we'll spend a little time on understanding commission. Shall we? Okay. So already we've understood one important point that all expenses on consignment, whether incurred by consignor or incurred by consignee, should be borne by. If it is already paid by consignor, no problem. If it is paid by consignee, it should be reimbursed by. Very good. Now consignee is an agent working for commission. Let us see how to compute commission of consignee. The money that is retained with the consignee. Okay, sit. Understand? So consignee is entitled to commission. Now let us see what types of commission can the consignee get. The types of commission that the consignor will pay to consignee or what consignee can take from consignor is called by 3 different names. How many different names? Number 1 is called as ordinary commission. Number 1 is called very good. Number 2 is called as del corridor commission. What is number 2? The third type of commission is called as overriding commission. Third type? Overriding. Let us see ordinary commission. Let us see. Okay. Ordinary commission means for the ordinary operations that it did. What is the ordinary responsibility of consignee? To sell the goods. If he has sold the goods, for that we pay commission. So ordinary commission is the commission paid for goods sold. Ordinary commission is the commission paid for goods sold. See, this is a very trick part. Okay, a lot of them end up doing these small mistakes in a small part. There can be a short portion on consignment chapter. They can give a 4 mark or 6 mark. They give a 4 marker and a 6 marker. They might ask you to compute commission exclusively. Such a case, no. Just imagine. I'll give you some data. You tell me what is the commission. Goods sent on consignment 100 units. How much goods sent on consignment? 100 units. Commission for consignee is 10 rupees per unit. 10 rupees per. How much is the commission payable to consignee? Very good. Wrong answer. Consignee is entitled to commission for goods sold on consignment, not on goods sent on consignment. Get that? Consignee is entitled to commission for goods sold on consignment, not goods. If the goods are sent and the commission is given, I will become consignee today. He will give me 10 rupees commission. Will say send 1 lakh goods. No, send 10 lakh goods. Or send 1 crore units. Right? Sends it to my get commission. I don't have to sell. So what is the point at which the commission will get computed? Sale. What is the point at which commission will get computed? The goods have to be sold by the consignee. So the commission will be always computed on goods sold by the consignee, not on goods sent on consignee. And whenever this particular sale is happening, it can be 2 1. Either it can be on per unit basis or it can be on per percentage. It can either be on per unit basis or per percentage. Per unit basis meaning I will give you 10 rupees per unit. So you sell 1 unit, 10 rupees. You sell 2 units, 20 rupees. But this might not be a very exciting thing to consignee. Because what if the goods are supposed to be sold at 100? Consignor, when he gives the goods, no, he will tell expected selling price. Expected selling price is 100. Consignee sells it at 150 rupees. Consignee did a good job, but he still get 10 rupees commission. If he sells at 100, how much commission consignee gets? If he sells it at 150, now consignor will become more happy when the goods are sold at higher price. But consignee is not happy because it's not making a different payment. Get that? So will consignee be excited to sell the goods at higher price? Not really. So if consignee is not excited to sell the goods at higher price, consignee will not sell at higher price. Consignor might not make that additional. So consignor will tell, okay boss, you don't want per unit basis, you don't want per unit basis, I will give you percentage basis. Percentage basis, what I do is I give 10%. Then we sell at 100, you get 10 rupees. Sell at 150, you get 15 rupees. Sell at 200, you get 20 rupees. You make me rich, you also become. You make me rich, you also become. So commission can be kept as a percentage of sales. This is left to the agreement between consignor and consignee. Whatever is mentioned in the pro forma invoice, That will become our basis for the computation of function. Whatever they give in the question, if they give per unit, we do per unit. If they give percentage, we do percentage. Our ishta. You get that? So ordinary commission can be computed on per unit or percentage basis. But a very important point to note is commission is computed on units sold, not on units sent. Right. Let's go to the next commission. What is the next commission? Then a credit commission. So this has a backstory. So whenever consignor sells the goods, consignor sends the goods, consignee has to sell these goods, correct or not? So he gave the goods and asked me to sell it at 100 rupees. He told he'll give you 10% commission. I started selling the goods at 150 rupees because I want more commission. If I sell at 100, how much commission do I get? 10 rupees. If I sell at 150, I get 10 rupees commission. Maybe assume that the cost to the consignor is 80. What is cost to consignor? If he sells it at 80 rupees cost of the unit, if I sell it at 100, how much profit does he get? 20. In that 20, how much commission does he give? 10 rupees. How much money that he gives? 10. If I sell it at 150, selling price is 150, cost price is 80. How much is profit? 17. In that, how much does consignee get as commission? 15 rupees. What does consignee get as commission? 15 rupees. How much consignor gets? So consignor's profit is increasing. Consignee profit increase, but merely by small amount. Get that? Now, consignor's wife, she's posting all fancy pictures on Instagram. They both are going on holiday. They're going to every restaurant every month. So all this fancy. Consignee's wife is jealous. See, look at that consignor is making so much money. What are you doing? Selling everything, but not making any profits. Consignee starts thinking of an idea. I want to make money. He starts thinking. Starts manifesting money. Now, how does he make money? Consignee is an agent. He only gets commission. How does he make money? He needs to make more sales, correct or not? More sales in the sense, either he needs to sell at higher amount, or he needs to sell at, he needs to sell multiple. He should sell more units, or he should sell more value per each unit. Only then he can make money. Now assume that consignee will push the sales really high. So consignee used to sell 1 lakh units. This month he made 2 lakh units sales. He sold more number of units. He sold, when he increases number of units by such high rate, he actually make more money. But when consignor makes 5 rupees extra commission, consignee makes 45 rupees extra money. For every 5%, for every 10% that you earn, consignor is earning 90%. So if these people go to Dubai for a holiday for 2 days, they go to Dubai for a holiday for 10 days. If these people go to a 3-star restaurant for dinner, they go to a 5-star restaurant. More rich consignee becomes, even more rich consignor becomes. And consignee's wife problem is consignor's wife being more rich than consignor. So, and he understands that, okay, fine. To an extent, I can increase number of units that I can sell, but not beyond a point. Now, assume that you are selling TVs. How many TVs can you sell? Now, assume that you sell TV to everyone in Bangalore. After that, for next 5 years, you can't sell TV. Why? Everyone is using TV. Unless there is a cricket match happening and then India goes to Pakistan, people fit the TV. Only then new TV will be sold. For the next 4 years, so no one will buy TV. Right. Okay, fine. Each idiot will sell 3 TVs. One in washroom, one in kitchen, one in office. After that 3 TVs, it's a saturated market. So you can't really sell it. So what do? Consignee comes out with a beautiful idea. Consignee will sell everyone. Yeah, I have an idea. I'll give goods free. I'll give goods. If he says free, everyone will stand in a long queue asking for goods. But how can you give free? Consignee has an idea. He will tell everyone. He'll call everyone like this and then say, I am going to give you all goods free. Who wants it? Everyone will listen. Then someone will raise and say, how can you give it free? I say, it is actually like free. Free tara, but free meaning I will give the goods to you. You should call it purchase. I will call it sale. Like somebody, hey, we don't want to buy. Like, no, it is sale tara, but sale Allah. I will sell it to you. You tell me that you will pay the money after 3 months. Then someone again raises and say, I don't want to pay. I don't want to pay. You don't pay, but tell that you will pay. Tell that you will pay. Later you don't pay. Pakka, pakka. You won't ask. I will not ask me. I will write off as well. And everyone is happy. So sales increase by 200%, 300%. You can increase sales like you say free. So consignee increase the sales, called everything like they called the consignee and told all the goods sold in 2 days. The seller is so excited. Oh my God, so many units is sold. Yeah. Okay, fine. I'll send you extra. Extra minutes, everything sold. End of the month, consignee is paisa. A lot of money will come. So consignee will send only 1,000 rupees for account sales. In that is cash sales 1,000. Credit sales 99 lakh. So rest of the money is what? Credit sales. Consignor will okay, fine. What did you do? Credit sales. Credit sales, if you do such big amount of sales, you have to do it on credit only. Okay, fine. When you collect the money, you give it. Then consignee will be like, but my commission. Okay, fine. You take your commission. So consignor will in fact pay cash to consignee as commission. So you made 1,000 rupees as cash sales, 99 lakh rupees as credit sales. So consignee has taken commission also on this. Then okay, fine. At least next month consignor will expect money, no? Then consignor will ask for money next month. Consignor will say, oh sorry man, bad debts, bad word. Everyone did pay money. Everyone did not pay. Bad debts is expense. Am I right? Not only you should pay bad debts. Any expense on consignment, whether incurred by consignor or incurred by consignee, should be borne by. So entire expense of bad debt should be borne by. Consignor will pay the complete expense. Consignor will pay the consignee is happy. Again next month sales. You increase sales free and they will tell her will give goods, he'll charge commission. Gave goods free to people, people are happy. He took commission, he's also happy. The one who's crying is consignor is like fully depressed, full loss. He's sitting on what say bar, number 3 bar, PW, he's sitting and then he's crying. Then his friend also will come. His friend is like very happy seeing new business open, lot of profit. Then he asks what business does he do? He sells the same units what the consignor is selling. Then he says, hey, these units are like I also deal with this product. Where do you get it from? Then this guy says, no, I don't actually buy it, I get it free. Like how free? Yeah, I get it free so I can sell it at any price. If I sell it at 1 rupee, 1 rupee profit. Like how the hell is it possible? Then that friend will tell the consignee thing. So, small word. So consignor sends the goods to consignee. Cost price 80 rupees. Cost price, he sends it and asks him to sell it at 100. Consignee will sell it at 150 rupees. Credit sale. But he gives it free to that person. But that person doesn't pay money later. That person gets it free. He sells it in the market for 50 rupees. Because of this, you know what's happening? People are buying goods from that consignee's customer, not from consignor. Why? Consignor straight away also if he sells at 100 rupees. But that guy is selling at 50 rupees. And moreover, that unit is free, no? For consignor basically didn't receive any money. So he lost the unit, he has to pay commission also and is losing his direct sales also. So ella kadinda three problems. Problem number 1, he doesn't get any money against the goods. Problem number 2, he has to pay money to commission to consignee for these goods. Problem number 3, that one who takes the goods free from consignee, no, he's selling the goods at a cheaper rate than the cost price. Because of which consignee is losing his direct market also. Totally. You get that? Consignor is at great loss. Consignor understands this. So consignor will call consignor in Chennagi, kill it, and then he says, see, you want commission? You ask me. I give you more commission. Don't do this all nonsense and then like make me go into such big losses. So then consignor will say, okay, take additional 15% or take additional 10% commission. And this commission, it's not ordinary commission. Call it? We call it. But from now, if there is any bad debt, I will deduct it from your commission. So if there is bad debt, such bad debt should be deducted from consignee's commission. Because it is consignee's responsibility now to ensure that the goods are sold. It is not whose responsibility? But that the goods are sold to the right party and money is collected. If the money is not collected, it is his responsibility. The consignor has to look into every idiot who consignee will sell goods. Whether that person will pay or not, is it great worthy or not. Consignor will do it himself. What is the entire objective of appointing consignor? To what is subordinate to one, no? So whenever del creditor commission is paid, who will bear bad debts? If del creditor commission is not paid, then who has to bear bad debts? Very good. So del creditor commission is the commission paid by consignor to consignee to pass the risk of bad debts. Now tell me, how do we compute? What is our ready commission? It is commission paid for transfer of loss of bad debts. Get that? Now, how do we compute consignee's commission? Del creditor commission. It can again be on per unit basis or percentage basis. It is per unit, units sold into del creditor commission number of del creditor commission per unit. It is percentage basis, percentage of del creditor commission into sales made. I have a question for all of you. Tell me, on what do I compute our del creditor commission? Is it on cash sales? Is it on credit sales? Is it on total sales? It is never on credit. It's always on total. It is never on. It's always on unless specifically. Now you say, sir, del creditor commission is given to compensate for bad debts risk. Bad debts will arise because of credit sales, not cash sales. Then why don't we give consignee our del creditor commission only on credit sales? If you give him deliberate commission, or say deliberate commission only on credits, you will never make cash sales. Cash sales for 10% commission. Credit sales 10% ordinary commission, 5% deliberate. Now, if he comes to me and then asks me for goods, he's giving cash. What would I say? If I take the cash, I'll only get 10% of it. They'll say, no, keep the cash with you. Give me tomorrow. Give me why? If I collect it tomorrow, it will become credit sale today. So on whatever he gives tomorrow, same money. That's why you're making him pay one day late. So because of this, consignor's collection will get delayed. Now, now tell me, as a seller, you want the money instantly or you want to collect the money later? And the customer is paying, will say, no, pay tomorrow. Pay. Okay then. Sana please, yeah, will you say that? No one tells that. No one tells that. So basically, consignor, good consignor, thoughtful, intelligent, smart consignor will always give deliberate commission on total sales, not exclusively on. However, some dumb people might give the commission that deliberate commission only on credits. Then we will compute it. Yeah. So it can be on per unit or percentage basis, but remember, deliberate commission always on total sales, unless specifically mentioned. Read the last line. If deliberate commission paid, then won't buy. Fantastic. Now, let's see the last commission. Overhead commission. Now, consignor will ask the consignee to sell the goods at a specific price. But I also told you that consignee can sell the goods at a price higher than that. Whenever the consignee sells the goods at a price higher than that price mentioned by consignor, get some reward. Get some reward. As a reward of that, as a reward for that, consignor might say, I will give you over and above this ordinary calculator, I will give you some higher percent. Such money that is paid by consignor to consignee for sales at higher price is what we call as overriding commission. What we call as overriding. This is usually computed on surplus only, meaning expected selling price 100, actual selling price 150. Only on that additional 50 rupees will give higher commission. Get that? Because if this is not there, if you give 10% of sales as commission, what will happen if you sell at 100, 10 rupees commission. If you sell at 150, 15 rupees commission. So previously consignor's profit was 10. You sold at 100, cost being 80, 20 rupees profit. Consignor's commission 10 होता है, consignee's commission 10 होता है, consignor's profit is almost. If he sells at 150 rupees, sells at 150 rupees, profit will become 70. In the 10 rupees, 15 rupees consignee's commission. Balance is almost 55. So consignor is earning at a higher rate than consignee. Am I right? So next time consignor comes to me, consignee will come in BMW. Then consignor will say really nice cars. Then consignor will say if you work really hard, I'll buy one more next. But when we consignee buy, consignee also should buy. So consignor will tell, okay boss, on surplus that you generate, take 20%. Still commission 10%. Deliberate commission 5%. Overhead commission 20%. Overhead commission 20 in the sense, will overhead commission be computed on 150 or 100? 50. We computed on 100 is normal selling price or expected selling price. 150 is actual selling price. How much is the extra value at which is generated? 50 rupees. On that 50 he gives 20%. On that 50 he gives. Always remember, overhead commission is computed on surplus. Overhead commission is computed on what is surplus? Actual selling price minus selling price that is mentioned in account sales is actual selling price. Selling price that is mentioned in pro forma invoice is expected selling price. Let me repeat. Selling price mentioned in pro forma invoice is very good. Selling price mentioned in account sales is these two differences there. No, on that you will get this overhead commission percent. What if there is no surplus? Then no overhead commission. There is no surplus, no overhead commission. Got it? Great. Come on. So let's quickly see some rules that we already know. Shall we? Okay, I'll show the rule. I want you all to read it and I want you to remember these rules. Come on. Rule number 1. These rules are on expenses. These rules are on expenses. Okay. Come on, read rule number 1. All expenses, whether paid by consignor or paid by consignee, is to be borne by because he has the ownership, he gets profit. Consignee is after all an agent only for commission. Very good. Then read the rule number 2. All expenses computation now. When you want to compute consignor's profit or consignment, you should consider all expenses, whether paid by consignor or paid by, because all expenses are against consignor, isn't it? There's something in the bracket. Please read what's there in the bracket. So, in order to find profit in the case of normal business. We prepare trading account, P&L account. In the case of consignment, we prepare an account called as consignment. What account do we prepare? So all expenses, whether paid by consignor or paid by consignee, should be borne by consignor and they should all be debited to consignor. All be debited to all expenses, whether paid by consignor or paid by consignee, should be borne by consignor and should be debited to consignor. And this consignment account may be debit expenses which are selling as well as non-selling. Now the question is about what is selling expense, what is non-selling expense. This is decided by the stage at which the expense is incurred. Now, consignor, when he sends the goods, he has to pack them, he has to wrap them, he has to load them, he has to transport them. For that, consignor pays expenses. Consignee, once he receives the goods, he has to again unload them and again load them and then bring it to his godown. Once he brings it to his godown, after that he should do unpack them, arrange them, pay godown rent, pay watchman's salary, pay electricity bill, pay water bill, pay insurance premium for safety of goods in the godown, and then after that customer comes and then buys the goods, delivery charges to customer to deliver it at the customer's place. Might incur some expense, the goods are damaged there, he might have to do some repairing. So all these expenses have to be incurred. All of these expenses together are categorized into two. One, expense incurred till the time goods reach consignee's godown. Expense incurred after the goods reach consignee's godown. What is the line? Expense incurred till the time goods reach consignee's godown. Second one is expense incurred after the goods reach consignee's. Any expense incurred till the time the goods will reach consignee's godown is called as non-selling expense. Any expense incurred till the time the goods will reach consignee's godown is called as. Once the goods reach consignee's godown, any expense incurred is called as. Very good. Non-selling expenses should be included in the cost of the. Non-selling expenses should be included in the. Selling expenses will be charged to consignment account. See, I have literally made you right there. Selling and non-selling expense both should be debited to consignment. Everything is charged, but non-selling expenses are included in computation of stock, but selling expenses are not included in valuation of stock, like direct and indirect. Direct expense we write in trading account. That will impact our closing stock. That will impact our GP. But non-selling expenses, we write it in P&L account. It will impact our profit, but not impact our closing stock valuation. Yesterday we discussed something similar in case of valuation of inventories also. Come on, read the third one. Only non-selling expenses are very good. Only non-selling expenses are considered in valuation of unsold inventory. Non-selling expenses are called as non-recurring expenses. Selling expenses are called as recurring. Recurring means matte. You should be incurring. Godown rent every month you should pay. Watchman salary should pay every month. Premium when the goods are at the godown, you have to pay every month. Electricity bill, every water bill every month. But taking the goods from the consignor's place to consignor's place every month. Against the goods, those expenses will incur only once. So the non-recurring expense is part of our stock. Next, come on, rule number 4. But this is with regard to commission. This is with regard to. Come on, everyone. Start reading rule number 4. Goods sold, not on goods. Very good. Goods sold, not on goods sent. Rule number 5. Bad debts are to be borne by consignee when debt credit commission is by. Very good. What if the debt credit commission is not paid? So that's what we discussed now. Debt credit commission is paid to transfer the risk of bad debts. Discuss that. Very good. Come on. Rule number 6. Yeah. Unless this specifically mentioned, we compute debt credit commission always on total sales, not exclusively on. Fantastic. Come on. The last rule on commission. Yes, it's always computed on surplus. Surplus is actual selling price minus. This is how we compute commission. Now, let's go to loss of goods. See, not every unit of goods that is sent might not be issued by consignor. Let's sell 100 units. Consignor will sell how many? Will send how many units? 100 units. Consignee might not receive entire 100 units. There might be some loss in transit. There might be some. Whenever there is loss in transit, how do we treat it? How do we treat it? This depends upon the type of loss. This depends upon the. So, goods loss can be categorized into. Number 1, normal loss. Number 1. Number 2, abnormal loss.
Normal loss means this loss will happen no matter what you do. You can't avoid it, you can't stop it, you can't restrict it. No matter how cautious you are, this loss will definitely happen. Get that? You cannot mitigate this. That is normal loss. Unavoidable. What is it? You cannot do anything. However, abnormal loss it is not normal. You can actually restrict that loss. You can make that loss zero. Because of sheer, what to say, incorrect practices or incorrect procedures, this loss is there. So that's what we call as abnormal. Now tell me what is avoidable loss? Abnormal loss can be mitigated by timely precaution measures. Very good. So people usually think normal means avoidable, abnormal means unavoidable. No, not like that. Normally this loss will happen. When you buy 100 kg tomatoes, 1 kg tomatoes will become ketchup. You can't do anything of it. Get what I'm trying to tell? However, you bought 100 kgs, you received only 90 kgs, 10 kgs got lost. Why? Kappa payment is too many. That are when every speed, or say speed breaker when you jump, 1 kg fell down. So that can be actually stopped. You can go little slow, or you can close something on the top. But 1 kg that's becoming ketchup, that's because of the weight of 99 kgs on that 1 kg. You can't avoid it. That 1 kg is at the bottom. Can you avoid it? Simple, sir. Take that 1 kg, keep it on the top. Take that 1 more kg will come down. No, sir. That also you take at the kg. Something has to be there at the bottom. No, sir. You keep one plank and on that plank. Hey, gravity and only there. That the weight will be falling. So 1 kg will get squared. You can't really do anything. Or even if you bring that 1 kg, no, that would have some kind of bruise on it. So when people are buying their it's better. They'll take it out and they take only it. So all that leftover, one with like a little bit of mark on it or one with squash types. That 1 kg at then nobody buys. 99 kgs only people buy. Remaining 1 kg would have to just put it to play in tomato machine. Correct or not? Yeah. So now see, let's understand how to treat this. Shall we? Okay. Now per unit cost will be there. No? For each unit price will be there. Now when you buy 100 kgs, assume that each kg is bought at 10 rupees. Kg is bought at what price? Whenever there is normal loss, in our example, 100 kgs are bought. We received only 98 kgs. How many kgs did we receive? 1 kg is lost. We paid 10 rupees per kg, 100 into 10. That 1000 rupees will now become the cost for 99 kgs. We will not say 10 rupees kg. No. That 99 kgs kg price is 1000 rupees. So, whenever you do 1000 divided by 100, 10 rupees per kg. Whenever you do 1000 divided by 99, you get 12.1. So, what is happening? Per unit cost is increasing from 10 to 12.1. Right? 100,000 divided by 99, how much? 10.1. It increased, no, the cost of per unit cost increased from 10 to 10.1. 10 paise per unit it increased. Why? To compensate for such lost unit. So per unit cost will increase. Per unit cost will for what? For good units. Bad unit are gone. Because of bad unit, the good units cost per unit will increase. However, in the case of abnormal loss, there will be no change in per unit. Will there be change in per unit cost? Change now. There will be no change. Next, journal entry. Can you pass a journal entry for normal loss? No. We'll adjust it with number of units. If the number of units will increase the cost, so we'll not write any separate journal entry. However, for abnormal loss, there is journal entry. For abnormal loss, there is journal entry. Very good. And for normal loss, there will be no insurance claim. For abnormal loss, there will be insurance claims. Then adjustment. What do we adjust? Adjustment. Which one? Normal loss. For insurance claim also we won't get. However, for abnormal loss, there is no adjustment business. We need to properly account it. We need to properly. Yesterday when we discussed all those one-sided errors, what did we do? Adjustment. But if it was two-sided errors or errors after terms, we accounted it. You get it? Great. Now let's quickly see how does it work with regard to normal loss and abnormal loss statement. Shall we? Okay. Read this example out for yourself. I'll give you 20 seconds. Read it out for yourself. Try and understand this. Understand the question. Done. So many kgs of tomatoes are said. What is the rate per kg? Okay, how much did consignor spend on this? Consignee should have received 100, but how much did consignee receive? How much is lost? Is it normal loss or abnormal loss? The source was very clearly in the that it is normal loss. Let's see how will this be accounted. Yeah, see we take goods sent on consignment is how many? 100. Rate per unit? Value will become 1000. We had consigners expenses. Yeah, non-selling. How much is it? When you add 200, total value of this 100 kgs will become how much? 1000. 1200 rupees is for 100 kgs. 1200 divided by 100. 12 rupees is the rate per kg. Very good. Now, how much is the normal loss? 1 unit. 1 unit is lost. Out of 100 kgs, if 1 kg is lost, what is the remaining kgs? 99. But the value will remain at 1000. So previously we incurred 1200 rupees for 100 kgs. Now 1200 rupees is the value for 99. Now we'll do 1200 divided by 9. Rate per unit will increase from 12 to 12.1. So 1 unit or 1 kg is bad stock. 99 kgs is good stock. For normal loss, the cost per unit of good stock will that 99 kgs which are good, whose value was 12 per kg will now become 12.12. Everyone understood? Very good. Now let's take another example. See the second example. Can we see if there is a switchboard is somewhere here or there? Have any switchboard there? Yeah. Turn on the switch there. Laptops both are running out of charge. And then you shall switch off. There are plugs there. Is it there? Yeah. Yes. Thank you. Thank you. What's your name? Ranit, thank you. Were you there yesterday? Hey, how many of you were not there yesterday but was made it to the session today? Today is day 2, no? For how many of you is today day 1? Okay, 1, 2. Raise your hand straight so that I can see. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. Any reason? Not aware? How many of you did not know that yesterday was day 1? Did not know. Date change like ಗೊತ್ತಿರಲಿಲ್ಲ. Oh. How did you get to know later? You still thought today is day 1 and you came. Oh, you went to Jayanagar, they sent you from there. Which batch are you part of? Oh, nice. Nice. Unacademy, somebody all written for. Good. Again? But you're not interested. How did you get to know the date change at that place? How did you get it? You went to HS and then came. But nice because their schedule was 8 years, it is 9 correct times. People there? How did you get to know? You went to Jayanagar and then you came. Oh, okay. How did you get to know first time? First information in the second. Same place we would have got the second information also. Yeah. Okay. I am sorry for those of you who are not informed that yesterday was day 1 and today is day 2. Very unfortunate. And people who had come yesterday but absent today, raise your hand. They will feel left out. No, I asked people who are absent yesterday. You are not raising. Okay, fine. You keep your attitude. I'll keep my question. Come on, let's see the next question. But thank you for making it. Yeah. On behalf of your friends who's absent yesterday but who's present yesterday but absent today. But I'm surprised. Today the topics are more intense than yesterday. But maybe absent because they know these are too lazy to know. Okay. So what did we discuss lastly? We were discussing abnormal loss. Read the second part of the question now. Consignor sent 100 kgs of tomatoes at rupees 10 per kg. How much is the expense of consignor?
Very good. Then what do we have after that? Consignee received how many kgs? That 1 kg is now treated as. See, previously when we treated it as normal loss, the way we accounted for it was completely different. Now we'll see how will we account it if we treat it as abnormal loss. See, units sent or goods sent is how much? 100 units, 100 rupees 10 per unit. That comes to. Very good. Now, we'll rate consignment expense. How much is it? Very good. When we had 200, can I say the total cost comes to 1200 for 100 kgs? For 100 kgs, it is 1200. So what will we rate? 1200 divided by 100. That is 12. Now we are going to deduct our abnormal expense. What is abnormal expense? Very good. 1. Previously, what we did was we did 100 minus 1, wrote same 1200 and did 1200 minus 99 kgs. We changed per unit rate. We changed only per unit rate. We didn't let our value get affected. Here, we are not going to do it that way. We are going to identify the value to that abnormal loss and write it to our P&L account. We pass a general. Previous case we saw there was no amount against normal loss. Normal loss was adjusted in terms of units only. Normal loss was adjusted in terms of units only. But now we want to adjust it not just in terms of units, but we'll also adjust in terms of value. However, let me read. Abnormal loss. 1 unit into 12 rupees per unit. 12 rupees. This will go to our P&L account. So for 99 units, what is received by consignee, still rate per unit will be 12. And the value remaining will be 1188. So rate per unit will still remain the same. Whatever the loss is there, we give the value to it. If I have to show in the previous example, there was no value. Have a look. See here, there was no value against normal loss. We didn't write any amount. Why? Are we passing general entry for it? No. What we did here is adjustment. What we did here is we don't write any value to it. But whenever we basically do with regard to abnormal loss, we give or we assign a value to it because we're going to write journal entry for the same at a later stage. Now, let's quickly remember some rules with regard to normal loss and abnormal loss, whatever I just taught you. These are the rules to remember for consignment. With regard to losses. Rule number 8. Please read rule number 8. Normal loss to be adjusted in next column. Very good. No accounting entry for the same. Right? Very good. Then, what about abnormal loss? After abnormal loss, cost per unit will remain unchanged. Here, cost per unit will increase because good units will take the loss credit because of the bad units. Very good. So, by this, we finish the basics of consignment. If you want to consignment, now we'll start accounting. What we discussed till now is, now we will start. Very good. Let's see how should the accounting be done with regard to consignment. Shall we? Accounting for consignment. This has to be done from two perspectives. You can learn it from the perspective of consignor and you should also learn it from the perspective of consignee. So both have to maintain books of accounts. Both have to maintain and the questions can come from both the perspectives. Learn how to prepare accounting in the books of consignor. You also learn how to prepare accounting in the books of consignor. Consignee is simple. Consignee books with is only one ledger that they can ask. What ledger? Consignor amount. Only one ledger will be asked in consignee's books. What amount? That also you prepare consignee's account in consignor's books and keep it in front of the mirror. That will become consignor's account in the books of consignor. One thing will be there. Buy 2 you should change. That will look buy only. That will look only. Debit credit will look swapped in the mirror, but you need to keep it in front of accounting. Fine. Let's get started. We'll understand now consignment accounting. But before we understand consignment accounting, few things that you must remember. If you don't remember these things, your consignment accounting will become difficult. You could not understand some journal entries. Who has ownership? Okay, consignee doesn't have. Who has possession? Consignee has possession, not consignee. Then tell me who makes the sale? Consignee. But who should record profit? Ownership nanatra. Ownership nanige. Profit nanige. Sale. Get what I'm trying to do? So I have the ownership. You have the. You will make the sale. I will record the. Get that? Yeah. Come on. Let us start seeing how the accounting needs to be done for consignment of consignor and consignor. Shall we? Okay. So in the books of consignor, in the books of consignee. So simultaneously for every transaction we will discuss journal entry in both books. Shall we? The first transaction, entire consignment transaction starts with consignor sending goods to
Entire consignment starts with consignor sending goods to journal entry for goods sent on consignment. See, listen to this, okay? In order to identify the profit on consignment, we prepare consignment account. Everything, goods sent, goods sold, expenses incurred, income, everything will be written to consignment account. Anything and everything will come in only one letter. What is what? Consignment account. Whenever goods are sent on consignment, consignment expenses is increasing or consignment value is increasing. So consignor will debit consignment account. Get that? And it has to be deducted from my purchases. Because as a consignor, I bought 100 units. I am not selling 100 units by myself. Sending some 40 units on consignment, remaining 60 I am trying to sell here. So those 40 what I sell, I will have to deduct from my purchases. Because that 40 will not be part of my trading account. That 40 I cannot sell because I have sent it to somebody. So I have to eliminate it from my trading. If I don't eliminate, no, my closing stock in trading account will increase, because of which my trading profit will go down. So I will eliminate it from my books because it is sent on consignment. You agree with me? So the consignor will pass the entry. First one, this entry we will not write it yet, but I will tell it to you. We will write goods sent on consignment to purchase. Goods sent on consignment to correct or not. When the goods are withdrawn, you will write drawings to purchase. When the goods are given as free sample, you write advertisement to purchase. The goods are given to employees, you write salary to purchase. When the goods are given on consignment, you write goods sent on consignment to purchase. The goods sent on consignment is debited, it will be credited now by debiting consignment. For the goods sent on consignment, journal entry to be passed by is goods, consignment account debit to consignment account debit to. What is the entry to be passed by consignee for receipt of this goods? What is the entry in the books of consignee for receipt of this goods? Why? It doesn't have ownership. You only has when you only have possession but you don't have ownership. What is the entry that you will pass? What is the entry that you will pass? No entry. Salman Khan, Anil Kapoor, Vipasha Basu, Lara Datta. Katrina Kaif is also there. No. Lara Datta is there. Golzila. Wait. So, for the goods sent on consignment, what is the entry? Consignee? No. Okay. Now, goods will not go like that. No, see, you pack all the goods and then you keep it. You pack all the goods and then you keep it. And then the consignor will say, go. Go, no. Will it go? The goods go? No. Goods will not go. Goods won't go. Goods won't go. You need to send. Consignor has to pack it. Consignor has to load it. Consignor has to send it on consignment. So for that, no, he's not your uncle. He'll not do it free. You'd have to pay money. Correct or not? Uncle means mama. Correct. You need to pay money. You need to pay. When consignor pays the expenses or incurs the expense, what should be the journal entry? We already discussed one rule on accounting. Remember, what is it? All the expenses on consignment should be debited consignment account. What are we paying? Cash credit. Entry will be consignment account debit to consignment account debit to usually we rate expense to cash. No, here all expenses will be debited to consignment account. So the entry is consignment account debit to cash. What is the entry? What is the entry to be passed by consignee? Why? He is the owner. He is paying expense. Why do I rate entry? Why do I rate it? I won't rate it. So again, no entry. Get that? Yeah. Then now consignee will receive the goods. Consignee has to bring it in his godown, keep it in his godown, pay salary, pay rent, pay electricity, whatever color expenses. Consignee also should incur. For all the expenses incurred by consignee, what is the entry? Consignor should pass. No entry. Why? No entry. No. Why it is he paid? Hey, he might have paid. Whose expense? My expense. Who should pay that expense? I should pay. So for all the expenses, whether selling, non-selling, incurred by consignor, incurred by consignee, should be debited to which account? Consignment account. So previously we wrote, yeah, we can write consignment to cash when you pay. No, you did not pay. He paid. You have to repay him. You have to repay. So you will write consignment to consignee. Consignee will write consignor to cash. Because he has to receive from you and he is paid on your behalf. Simple guys. What is the entry for consignment expense paid? Consignment to cash. That is when consignor pays. Consignee pays. No. Consignment account will be in consignor's books. Cash account credit will be in consignee's books. Consignment account will be there in whose books? Consignor's books. Two cash account will be in those books. Consignor bookali consignee credit, consignee bookali consignor debit. Have a look. See, consignor will write consignment to consignee. Consignee will write consignment to. So meaning he paid on behalf of consignor. Artha aita? In consignor, consignee, consignee, consignor. If you cancel, it will be consignment to cash. Same entries. Yes or no? Very good. So that is the entry for expense incurred or paid by consignee. Let's see the next transaction. Next transaction is normal loss. Goods are lost. You send the goods, but they can be lost, no? The goods are lost. What will be the entry by consignor? By consignor. Consignee might be consignor also no entry. Both also can't pass entry. But amount is not there. We didn't find the amount. We adjusted it with the cost of good units. So for normal loss, it is no entry in the books of consignor. About consignee, consignor only didn't write entry. Consignee write entry. I will also not. No entry in both. However, if it is abnormal loss, what will be there? Will be entry for abnormal loss? It can be two cases. Insured, not insured. Not insured means going on loss. Should credit over P&L. Will write P&L account. That will decrease our consignment stock. Previously, when our consignment stock was increasing, we debited consignment account. Now our consignment stock is decreasing. We will credit consignment account. So the entry will be P&L account debit to consignment. P&L account debit to consignment. For what is P&L account debit to consignment entry? For abnormal. What is the entry in the books of consignee? He doesn't have ownership. Why we think pass entry? You guys sticking to the same thing. No entry, no entry, no entry, no. See, 4-5 transactions over. He wrote only one entry for the expense that he paid. Obviously, he'll write entry only for the transaction that will affect him. Okay. What if it is insured? If it is insured, insurance company has to pay us money. We are supposed to receive money from insurance company. So we will debit insurance company account. We will not write it to P&L account. Insurance company account debit to. Very good. Insurance company account debit to consignment. Very good. Consignment account. And consignee will not write it. Consignee write an entry. Consignee will not write any entry. Very good. Let's see the next set of transactions. Consignment sales. Consignee has sold the goods. Consignee has he sold it for cash. Sold it for the consignee sells the goods for cash. What is the entry consignor should pass? Consignor received cash. Consignor received cash. He didn't receive cash. Did receive cash. Usually, what is the journal entry for sales? Cash account debit to. Did consignor receive cash? Can he debit cash? Not debit. Who has received cash? From whom should I receive cash now? So I have debit consignee. I debit because I have to recover money from consignee. Two sales, but I will not write sales here. Why? I didn't write purchase. Why will I write sales? Instead of purchase, I wrote consignment account. Now instead of sales, also I should write consignment account. When I previously wrote consignment account debit, my consignment stock increased. Now when I write credit, my consignment stock will decrease. So the entry that I should be passing is I should write consignee account debit, consignment. Consignee account debit to consignee account debit because I need to recover the money from consignee. Consignment account credit because my consignment stock is fantastic. What is the entry in the books of consignee? See, we usually write the entry cash account debit. Does the consignee receive cash? Yes. So if you write cash account. But is it his sales? This money you should give to. So you write cash account debit to. Basically because this money he has received on behalf of. You should pay this to. Simple. Sales yaadi. Consignor. Cash receive on consignee. So consignee will write cash account debit. Consignor will write sales account debit. Sales in the sense consignment. So consignee books may will write consignor books may will write consignor. Consignee has received money on behalf of consignor. So it's a liability to him. So we credit consignor account in the books of consignee. And consignor as an asset receivable from consignee. So we will debit consignee accounts in his books. Okay. So what is the entry for sales in the books of consignor? Consignee account debit to the books of consignee. This is cash sales. This is how different will the entry be if it is credit sales? How different will the entry be if it is on credit, if it is credit sales? See, to consigner, it actually doesn't really matter. To consigner, it actually doesn't really matter. Why? See, cash sales means cash is collected by you. Consigner. Credit sales means cash is to be collected by you. If it is cash sales, I'll collect money from consigner. If it is credit sale, I'll collect money from consigner. In both the cases, I have to collect money from consignee. So to consigner, there is no difference. Consigner, there is no difference. You write consignee to consignment. Consignee to whether it is cash sales or going to be no difference. There's going to be, however, in the books of consignee, in the books of there is going to be. What is the difference in the books of consignee? See, previously consignee wrote cash to consignee. Why he received cash? Now he has not received cash. He also should receive cash. So he will actually maintain debtors records. Debtors records should be maintained by whom? Consignee. Consignee will keep records. If he can keep track of debtors, if he can collect money from himself. Why would he appoint the agent? So all the debtors details have to be maintained in the records by consignee. Consignee will write the entry, statement debtors account to consignor account. Okay, then he should collect money from consignment debtors, asset to him. He should pay such money to consignor liability. Consignment debtors to, you get this? Paka. Very good. So this is the entry for credit sales. Next thing, after the credit sales, you collect the money from debtors. Yes or no? When consignee collects the money from debtors, what is the entry he should pass? What is the entry he should pass? Cash out. No entry. No entry. No entry. Consignor will not pass in entry. Why? Who will collect the money? Consignee money will. Consignor will not write it. He will write only when he receives the money from. Very good. So consignor will write no entry. Consignor will write. However, should consignee write an entry? Yes. Consignee has received cash. So consignee will write cash account. What will decrease? Consignee's debtors will. So consignee will credit his debtors. So consignee will write the entry cash account debit to consignee debtors. Correct? Only that's it. So in the books of consignor, no entry. In the books of consignee, cash to. Very good. So understood till here? No doubts? Let's see the next part. Now there can be bad debts. What if some consignment debtors don't pay money? What is the entry for bad debts? Usual entry for bad debts is bad debts to debtors. What is the entry for bad debts? Bad debts is an expense. Bad debts. Debtors will be credited. Debtors will decrease. But treatment of bad debts depends upon the fact whether debtor commission is paid or not paid. Treatment of bad debts depends upon the fact whether debtor commission is paid or not paid. Now, what if del creditor commission is paid? Who will pay the expense? Bad debts debit should be consignee. Consignment debtors are kept by whom? Who has the records of consignment debtors? Consignee. So debtors records are also with consignee. Bad debt expense also should be borne by. So what is entry in the books of consignor? No entry. No entry. No entry. Consignor will not entry. Why? Bad debts, you die. You die, you collect. You don't collect, you pay. You collect, you pay. You collect, you pay. You don't collect, you pay. I don't care. Correct or not? So there will be no entry in the books of consignor. But consignee should write it. What is the entry consignee will write? Should write bad debts to debtors. But not write bad debts because it's not his bad. It's consignment debtors. So you write P&L account debit to consignment debtors. You can actually write bad debts to consignment debtors, but that will be little incorrect. Business illa, ownership illa, sale illa, bad debts. How can you make bad debts without sales? Correct? It's difficult to understand. But yeah, so we'll write P&L account debit to consignment debtors. The next case, what if del creditor commission is not paid? What if del creditor commission is not paid? Who should pay bad debts? Consignor should pay bad debts. But consignment debtors record is kept by consignee. So consignment debtors, consignment debtor records are kept by consignee. So expense should be booked in consignor's books. Consignment debtor should be decreased in consignee's. So we'll write bad debts account debit in consignor's books. Consignment debtors account credit in consignee's books. So consignor books में consignee credit, consignee books में consignor debit. Let me repeat. Bad debts expense is booked in whose books? Consignor's books. Consignment debtors is credited in whose books? So in consignment debtors account, like in consignor's account, we credit consignee. In consignee's account, we debit. Yeah. Okay. Have a look. What is the entry in the books of consignor? Bad debts to consign. Bad debts he will debit, but he doesn't have debtors record to deduct. Say consignee, you credit. Consignor will say, consignor, you will debit, and they will credit consignment. Entry in the books of consignee will become consignor account debit to consignment debtors. But this, everyone, fantastic. And after this, last transaction, last but one we can say, commission due. What is it? Who should take commission? From whom should we take commission? What is it to consignor? What is it to consignee? Now, expense to consignor, all the expenses should be debited to consignment. All the expenses should be consignment account debit. Consignment account debit. But am I paying cash? I am supposed to pay this to consignee, liability. So I'll credit consignee account. Consignment account debit to consignee account. Entry consignment account debit to. Very good. Now, how about in the books of consignee? To consignee it is income. Consignee it is. If it is income, what should consignee do? Credit. What should consignee do? So he will credit commission account. But as he received, no, he is yet to receive. From whom is he supposed to receive? So let consignor account debit to commission. Consignor account debit to reserve account for commission payable by consignor to consignee on consignment. Now let's see the ledger account. Shall we see how the ledger account should be prepared for consignment? Yes or no? Okay. See. Only people there are like feeling. So let's make everyone feel safe, conscious. Yeah. Yesterday we were sitting there. Why did you go sit your place? Not comfortable. But it looked fancy. But we don't happy, type me, keep. Today when you go, what do you pay? You let us now see lecture account. It's a very rare possibility that they will ask you to prepare. That actually set also looks like this one. Jackie shop will come and then ask, okay, here they come and call. We applied this oil like this, nothing happened. Sorry, everything happened. There's pain window. See that? Don't see such things. They come and then ask, oh, yeah, I had very bad back pain. I can't sit at work. Like this, what I applied for. I'm feeling great. Now I can get techniques. Okay. Great. Let's now quickly understand how the account has to be prepared for consignment, because the possibility of journal entry based questions in the exam is very what's asked in the exam is ledger based question. And I didn't show you the paper pattern in the past exam. Not sure. Please do remind me, I'll show you. Yeah. So to start with, consignment account. These are ledger side, and I'll let debit side, credit side, obviously. I want some silence. I can see people there talk. Yeah, silence. Come on. Consignment account. Initially, there can be a possibility that this is not the first time we're sending the goods on consignment to that particular consignee. There is a possibility that we had already sent. If we have already sent goods to him on consignment, such goods which are remaining with consignee will be our asset. We will write it as balance brought down on the debit side. Write it as balance brought down on the. So this is unsold stock lying with the consignee. Unsold stock lying with the consignee if you have sent on consignment previously. You get that? This is the opening stock. And freshly now we'll send the goods on consignment. For which what is entry consignor should pass? Consignment account debit to. Very good. So in consignment account, I'll write 2 goods sent on consignment. To send these goods, consignor will incur expense. And consignor incurs expense. Consignor will write the entry consignment account debit to. Very good. So we'll write 2 cash on. 2 cash on. Very good. So this is for expense incurred by consignor. If consignee incurs expense, let him write consignment account debit. Credit will be. So we'll write 2 consignee account. 2 consignee account. This is for consignee section. So the next entry. For basically the sales made by consignee. What is entry? Consignee to consignment. Credit sales, cash sales. It doesn't matter. What is entry? Consignee account debit to. So stock and then value of the stock increasing debit. stock decreasing. When you sell the goods, stock is decreasing, we credit it. What do? We credit. So on the credit, I write by consignee account. So because the goods are sold and the money is supposed to be received from consignee, money is supposed to be received from. Fantastic. After this, what if there is some what to say bad debts and delivery commission is not paid? If delivery commission is not paid, this bad debt expense borne by consignor, all the expenses and items increasing the value of the goods should be to consignment account. So rate to consignee account bad debts and delivery commission is not paid. If delivery commission is paid, then no entry. Consignor will not write any entry should be done by whom? Consignee only. Because consignee will not pay. Still recover that money from consignee. So consignor will say bad debts. I don't even tell me that there is. It will be better because you are headache. I don't want to know. Next up, if there is any abnormal loss, if the goods are insured, insurance company should pay money. If the goods are not insured, credit to my P&L account. Either ways, my consignment stock is decreasing. There is my consignment stock is decreasing. So I will credit my P&L account or insurance. We'll create our insurance company account or P&L account. You get that? So that's the entry for abnormal loss. And lastly, any commission that needs to be paid to consignee, their creditor, ordinary, overriding, whatever. Is again our expense. Credit consignment account debit to consignee account. And after I get all of this, all the units are sold by consignee, very good. Some units are still not sold by consignee. This is still part of our consignment stock. So should write it in consignment account credit. Don't write, we don't find the correct profit. So once we write opening balance is on the debit side, to balance product. Similarly, we write buy balance carried on the of consignment. We write that balance figure that we find will be our consignment. Consignment profit we found as balance. What if it comes on the credit side as balance figure? Then it will be consignment loss. So debit all expenses, debit all items that are increasing cost of credit all incomes and credit the decrease in the cost of consignment stock or outgoing of the consignment stock and balance remaining. That is like opening balance asset debit side, closing balance asset credit. Get what I'm trying to tell? Consignment account behaves like nominal account. Like nominal account, not exactly nominal. Consignee is personal. And debit will be opening balance, credit will be closing. Like we do trading account. 1 minute. So this is like our trading account. So if you observe, what we do here is debit side opening stock, credit side closing. Purchases is goods and consignment. Direct expenses is to consignor, to consign cash bank or consignee we go to those expenses. And then now usually deduct the loss from purchases. From deducting we wrote on the credit. Closing stock credit, profit you find as balance. Very similar to trading. In fact, trading account only. But the only point is I don't sell it directly. I ask someone else. So every entry will get broken into two parts. Usually write cash to sales. They will write cash to consignee, consignee to sales. So it will get broken into two parts. That's the only difference between a normal sale and consignment sale. Consignment is not a chapter that should be difficult to you people. But that the entire effort is to make it. Yeah, look. You should write it here. You written here by balance character. That is our stock. That's consignee. We can either ask him to return it to us, or we can ask him to not sell them. We can ask. Closing stock, no journal entry. We should include it in our consignment account to determine our consignment profit. Like closing stock written in trading account to 5 GB and should be added to our closing stock in balance sheet. Whenever we prepare balance sheet, we need to identify the value of inventory. We cannot count it obviously on 31st of March. We take some other dates counting, make this we count. For the physical inventory in the total months we count. We add the consignment stock remains with consignee. We add it. If we are consignee, we eliminate it from our physical inventory. Do you get what I'm trying to tell? Once again. Did you understand what I'm trying to tell? So if we are consignor, we physically count our inventory at the end. To this inventory, we add the inventory that belongs to us, but lying with consignee. But what if we are consignee? Physically count the inventory. From that inventory, whatever the consignment stock that we have received from consignor, which we don't have ownership, we eliminate it from our stock. And that after elimination or addition is when we find the value of inventory to be returned to our balance sheet. Get it? Yeah, Sachin first and then Simple. You write insurance company account. How much are you supposed to receive? How much is the insurance claim receivable? How much is the cost of the goods? You eliminate the stock. Consignment account, you should eliminate the stock for 2 lakh. 2 lakh worth of stock is destroyed. You will write 2 lakh insurance company. If insurance company gives entire 2 lakh, you will write cash to insurance. Insurance company gives more than that, credit P&L. If insurance company gives less than that, debit P&L. You got that? There is a possibility of insurance company paying more also. Very rare possibility. But there is one problem also wherein insurance claim is more than the cost of the goods. Don't try to account for such profit on consignment. Why? Such profit is not profit on consignment. That is very abnormal profit. We write it in our P&L. Write it in our. For instance, I'll add on. If the cost of goods lost is 1 lakh, what is the value of the goods lost? Or let's say damage 1 lakh. Insurance claim is 1 lakh. Insurance claim is you will write here by insurance company account 1 lakh. By insurance company account, you wrote that. Now what do you write? Consignment account, sorry, insurance company account debit to consignment 1 lakh. 1 lakh is supposed to be. But later when you write cash account debit, you are debiting 1 lakh 20. But the 20,000 extra we received, that is P&L. We write it in P&L. Don't try to book such excess money received on consignment, abnormal loss from insurance in consignment account. Don't have to. That will adjust it. Okay. Can I answer your question? Darshan. P&L account debit to consignment data. No. Consignment account will never be debited in consignee's books. Now tell me, what point number 1? Who's consignor's books? Consignor's books. Transaction. Bad debts period journal entries, consignment account debit to consignee account. Bad debts debit. And bad debts should be then you should write consignment to bad debts again. Sorry. You should book it to consignment account. Debtors is not maintained by consignment. Consignment account will write the debtors. All the expenses you debit it to consignment account. You write bad debts, no. You write one more entry consignment account debit to bad debts. Or straight away write it to consignment. Sorry. Then I'll change it. I made last night. Yeah, that I wanted to do it for every chapter. If I would have done it for all the chapters, see, no, correct or not. But with the time available, whatever was possible. But the process is there. What I believe is very simple. See, you are never complete. You are never complete. You never reach your destination. It's always a journey. Like now I feel like okay, this is done, it's all done. But later I feel like once this is done, I should do something else for some other chapter only then it's done. So and then once everything is ready, it's only making it feel more better. And then I want to put the question answer also into this presentation. So it can run very smooth. So that's the point. Your juniors will get complete all chapters ka presentation. But your batch we did 1 to 5 it's there. Then chapter 6 with 2 units it's there. Then chapter little starting it's there. Yeah, we'll do it eventually for the rest of it all. Anyone else? Any doubt on this part? No? Great. Let's go ahead. So that's what we account for in the books of consignor. It's consignment account. Let's now see consignee account. Consignee account also needs to be prepared by consignor. Sometimes they do ask, prepare consignee account. Prepare consignee in the books of consignor. So consignee is a person to whom the consignor should pay money. Correct or not? Such an account what we open is like a personal account. And it's like whatever money is supposed to be receivable from consignee and whatever money is supposed to be paid to consignee should be recorded. From consignee, consignor should receive money for goods sold. Correct or not? So receivable, debit or credit? Debit. Or other way around. Tell me what is the entry for consignment sales? Consignee to consignment. So in consignee account we'll write debit side to consignment account. Consignment sales money. This much money is receivable. We should collect this much money from our. We should collect this much money from our consignee. Then, so will we receive this money? No, we will not receive this money straight. We will get deduction from for some money. Some money will be deducted by what money will you deduct? We will deduct his expenses. We will deduct his bad debts. If delivery commission is not paid, we will also deduct his commission. After he deducts all of this, whatever the balance is there, he can pay to us by cash, check, or bill. All this we receive now. Cash account debit, bank account debit, bills receivable account debit. To whom? Consignee. So when the entry is cash debit to consignee, consignee account will write by cash. And if it doesn't pay this, it will be balance carry. It will be balance. The green color slate should have come first, then the rest. Is it fine now? You get this? This is how we prepare consignees account in the books of consignor. Some questions they will say, consignee send the balance when the account says. Then we write that balance if equal to cash, bank, or bills, whatever form they say. If in case they say nothing, then what do we say? So much money is still receivable from consignee. We'll write it to balance. You get it? When do we write to balance carry down and when do we write it to cash or bank? Money receivable from consignee to us it's an asset. Asset closing balance credit side. Get it? Right. So that's how we account for consignee account in the books of consignee. Till now everyone understood? Clear? Pakka? Great. Let us now go ahead and then understand another part. This is what we call as invoice price. This is because whenever consignor sells goods, no, consignor's complete margin is disclosed to consignee. Consignor's complete margin is disclosed to. So what if the consignor doesn't want to disclose his complete margin to consignee? Because whenever you tell your complete profit to the customer, he'll be jealous. Then he might start actually repeating your business or copying your business or becoming your competitor. So what can we do to avoid it? So we don't want to disclose our profit. Usually what we do is we sell it at what price. That's what we sell. We tell the expected selling price. We'll also mention the cost. Now what we'll do is we'll not mention the cost price. We'll mention some price called as invoice price. What will we mention? This invoice price can be selling price but need not be selling price. Get that? So cost price plus load equal to cost price plus load is equal to invoice price plus the disclosed profit margin to our consignee, the selling price. So the cost remains cost and your selling price remains selling. This load and margin is there. Load plus disclosed margin together will form our profit. So consignee will be able to see only the disclosed margin. Load is the hidden profit. Load is the profit that we make. Our cost is 100. We'll tell the consignee cost is 120. And he sells at 150. So consignee will think we are making 30 rupees profit. But actually we made 20 rupees also. 20 rupees also. Plus 30 what we do. Together our profit is 50. That's how this works. So this is called as selling. Selling price is the price at which the consignee will sell. Cost price is the price that is hidden from the consignee. And invoice price is the price at which the goods are sent to consignee. Got that? Right. Now let's see how to prepare the ledger consignment account when invoice price is involved. Tell me. This side over. That side now. That side also over. Over. This side over. Not over. I don't like. Or I can do like this. No, we'll start from here. Hi guys. Your turn again. Maybe later we'll do it with phone. Okay. So now let's start with consignment account with invoice. Shall we? Same old consignment account what we discussed some time ago, but now it will have invoice price. Which will be a invoice price. Hey, don't relax. The topic is old. Hey, I am standing. And I am talking, so you are sitting. Huh? Sitting is problem. This is soft. This is not. You stand with me, you understand. My God, I feel very young. In the day, oh my God, later I understood. Okay, you don't understand when you stand for so long and then talk when the entire mind is on the subject. Later, end of the day is when you feel. Great. So, let's get started. So, opening stock will come in the consignment account debit side, and the goods sent on consignment will again be on the consignment account debit side. After that, any expenses incurred on consignment, if we paid, will write to cash or bank. If consignee pays it, will write to consignee. Correct. And after that, the goods are sold by consignee, we'll credit it in consignment account as consignee because we are supposed to receive money from him. And commission will write it as debit after that, and then if there is abnormal loss, credit, and then finally balance carried on credit. Correct? I'll give you a moment. Have a look at this. This is the entries, and then we find our profit as balancing figure. Correct or not? So these are the items that was there in our consignment. So there are few gaps in between. I hate that gap. So I'll tell you what is that gap for. But have a look at this and then understood consignment account. Numbers are missing. Numbers are same as what, sorry, the items are same as how it was before. Yeah, let's make the case a little interesting. To make it a little interesting, till now we used to write balance brought up or stock with consignee at cost price. Or we used to write it at the cost price. And the sales was at selling price. Opening stock is at cost price, goods and consignment is at cost price, expenses are recorded, sales is at selling price, and profit as balance. So the case becomes interesting because you write the opening stock not at cost price, but you write it at very good. When we write opening stock at invoice price, stock at we cannot find the profit correctly. See, we send it to him at higher price. Pro forma invoice quotes an higher price. So I recorded at invoice price in my books. But if I write at invoice price, no, the opening stock, goods and consignment, and the closing stock, the profit that I'll find as balance in consignment account will be only that disclosed margin. But what about that load? Is also my profit? Yes or no? See, if I write 100 rupees as cost and I write 150 rupees as sale, I'll book 50 rupees as my profit. Now, 100 rupees is cost, 120 rupees is invoice price. On the debit in my consignment account, if I write 120, on the credit, if I write sale as 150, I end up finding only 30 rupees as profit, which is. So, what should I do? I should not write invoice. Not write, I should write cost. I should write, but in invoice, in pro forma invoice, what have I put in? Invoice price. So, I cannot change. I have to end up writing invoice price. Because I cannot deduct it from that invoice price. What will I do now? I write it on the credit side. What would I write on the credit? Write less stock reserve. Or what would I write? Buy stock reserve. This will be load on our opening stock. This will be load on our. Similarly, we have said goods sent on consignment. That goods sent on consignment or the debit in our consignment account is again at invoice price. That is again at it should have been at cost. If you write that at cost, then you can find profit correct value. Now, if this is at invoice price, we should reiterate this to cost. I should deduct it from this. Can I deduct? No. So instead of deducting from the debit, I'll write it to credit. I'll write on the credit side by load on goods and on consignment. By load on goods and on, and I'll write that load amount on that invoice price of goods. Get that? After that, next we have closing stock here by balance carrier. This is again at invoice price. This is again at. I should not write it invoice. My correct profit. This should be at cost price. So in order to reframe it to cost price, what should I do? I should deduct load from this. I cannot deduct it from the credit. So I will write on my debit side stock reserve. What will I write? The load amount. Very simple. Get that? But an important point that you need to remember is on the opening and closing balance when we remove load, we use stock reserve. On the opening and closing balance, when you remove load, we use stock reserve. On the goods and consignment, we will write just load on goods. In case the goods and consignment were returned, we will write goods and consignment returned and load on goods and consignment. We use the word stock reserve only for opening and closing stock. Why? Because this opening stock is part of previous year balance sheet. This closing stock will become part of our balance sheet. The balance sheet also should write at cost. The balance sheet also should write at cost. But unfortunately, balance sheet will be there at invoice price. So we should deduct no. So stock will come on the asset side. Stock reserve is a liability. However, we will not write on the liability side. We will deduct the stock reserve from the asset side to reiterate the inventories in the balance sheet asset side to cost price and not write it at cost price. You get this, everyone? Fantastic. And this is how we prepare account in the books of consignor for consignment with invoices. Now, I hope you don't have a problem if the question asks you to prepare consignor account in the books of consigning. You will go after consigning. That I did not do. But throughout, whenever we discuss this, in the entire thing, we mentioned closing stock value root. But how do we find the value of closing stock? There can be questions on that. Or even if you ask a normal 10 marker question, that 10 marker question might require you to compute. So shall we understand the last part of this chapter, how to compute the stock remaining with me? Consignee might have some goods here. So consignor sends some goods. This is a consignee sold to the customers. But some stock might be remaining with consignee. Okay, Sorry. So now that unsold inventory lying with consignee. For that, what would be the computation? How do we arrive at that value? Shall we see that? Yeah. Remember, whenever we're trying to find the value of consignment stock, should we take consignor's expense? Yes. Should we take consignee's expense? Yes. But should be only very good. Non-selling. Selling expense incurred by consignee should not be included in value of stock. Value of stock. It should be only included in computation of profit. We already written it in rules. We'll solve it. Great. Let's get going. So now let's now quickly see. We'll do it similar to our normal loss, abnormal loss computation. In fact, no. The question has normal loss, abnormal loss, and it also has what you say our consignment unsold stock. You don't have to prepare two separate working notes for the same. In our working note, no, normal loss, abnormal loss, unsold inventory, everything will get computed simultaneously. Same working note if we extend, here only we can find normal, abnormal loss. Here only we can compute the unsold inventory. Get that? If you have access to our class sheet, that's how we compute it. Yeah, come on, let's quickly see this. So, firstly, goods are sent on consignment. Great, how many units are sent? At what rate is it sent? What's the value? Correct? Now, to this you add consignor's expenses. Selling also will add, non-selling also will add. Correct? Only non-selling will add. Selling expenses will not be added because selling expenses will not form part of the. Sir, but consignor can pay same. Yeah, who's stopping you? Who's stopping you? Consignor can pay selling expense. Consignor can pay non-selling expense. You will. आधा घंटे आधा घंटे What's the time? You don't know. I told you not to wear the watch for the same reason. What time did we start? 9. You want break now only, the other 5 minutes. Can you go tell him? The 5 minutes will break. You tell him not to come back. Don't feel bad. You will finish this. Another 5 minutes. Yeah. Now listen. Stop talking. Yeah. So selling expenses will not be returned, but only non-selling expenses will be correct. Yes or no? Next. With regard to normal loss, we'll adjust our normal loss in units only. We'll adjust our abnormal loss if there is any in terms of units and in terms of value. And whenever we adjust normal loss, abnormal loss, hey, I have a question for all of you. Tell us, should we adjust normal loss and abnormal loss before adding consignee's expense or after adding consignee? Is it after adding consignee's expense or before adding consignee? Depends. Totally, loss can happen in transit, loss can happen in consignee's. If the loss happens in transit, and already expenses for transit is paid by consignor. So first you add consignor's expense, then you deduct transit loss, then you identify the expenses that is incurred later. What if the expense is incurred in transit from consignee's city to consignee's godown? Add consignor's transportation, add consignee's transportation expense, then deduct normal or abnormal. So it is at the stage at which it will happen. Like chronology samjhiye. Get that? It's about the chronology. Whatever chronology may come, say we deduct. If it is in transit, we deduct now. In transit, we deduct now. If it is not in transit, if it is in consignee's godown, then we'll add consignee's expense also. What do we add? Which is incurred for the purpose of non-selling. Yeah, non-recurring expense. Add that. Then after adding that non-selling expense of consignee, then we'll deduct our normal, abnormal loss, whatever is there, because it's incurred in the consignee's godown. After we deduct all of this, we'll basically arrive at the stock that is there at consignee's godown. From this, we'll adjust our sales. How much is the consignment stock sold? We deduct that, we get the consignment unsold stock or unsold stock lying with consignee. So that will be the value of the stock that will take into consideration. Get that? Yeah. That's the end of consignment.
Conceptually, we covered everything. Did we? Yeah. Shall we see the marking schema from this? A comprehensive. Huh? The presentation was comprehensive, What parts were not there in this? Consigner account in the books of consignee was not there. Other than that, that's it. Yeah, nothing much. Everything else is covered. You had not seen this full, no? In your class when we did only part of this presentation. Journal entries was not there. Rules was there, that's the end. Hey, the break hasn't started. Please stay in the class, don't go out, stay, I'll tell you complete announcement and then you leave. Without knowing anything, if you go, where will you go? Yes. Very good afternoon, everyone. Welcome back to post-break session. So in the pre-break session, we had discussed introduction to consignment. We saw the entire consignment impact, accounting also, except for the fact that we did not discuss problems. The rest of the consignment topic, can we say it's done? Yeah. So here is the assignment as to marks assignment as to how many marks was the chapter of consignment came for each of the attempts. So you can see that consistently it's come for 10, 10, 10 whenever it's been asked, except for a very weird case where December 20, where it was asked only for 5 marks. Otherwise, this was part of question number 2 and 4 initially. But if you see last 2 years, no, every time whenever there is question on consignment, it is question number 3. The other questions that will come, question number 3 will be usually average due date or account current. Average due date or account current usually comes up with 3. So if in case you skip account current and average due date and consignment, you can skip that question number 3 completely. You have to do rest of the entire syllabus. But you want to attempt average due date question, you want to attempt account current question, you are confident with those 2 topics. But if you skip consignment, no, you will in the examination the first 15 minutes, 1:45 to 2 o'clock is going to put you under a lot of pressure. Because 1:45 to 2 o'clock, whatever time you have, your question paper will be given to at 1:45 p.m. You start writing answers at 2 p.m. At first 15 minutes is the time period wherein you choose which is the question that you want to leave in choice and what is the order in which you need to write the question. I don't know what people do. Like few people might have this habit of reading the question and solving it, writing some numbers on the question paper, so that when the answer paper comes, you start writing. I would tell use that 1:45 to 2 p.m. Don't use it to read any question completely. Don't use the time to read any question completely. That's a very holy time. You know that your examination pattern is 6 questions of 20 marks each, 120 marks. Whereas internally there will be one choice in question number 3 or question number 5. Now, question number 1 is compulsory, which will have 6 true or false questions, and other 8 marks will be some theory question from chapter 1 or any other chapter, short note based questions will be asked, or they can ask a very small, easy numerical problem for 4 marks, 2 questions of 4 marks. That's how the usual pattern is. That's 2 short note questions of 2 marks and 1 4 marks are small competition. So that's why you don't have an option. You have to write that rule. That is the reason I also stressed on you people to say not to skip any topic, any topic. Might
not be comfortable with consignment. You might not be comfortable with things. Might not be comfortable with partnership, company accounts, whatever your chapter you are not comfortable with. Don't skip true or false from that topic. You need to do true or false from all the 10 chapters because you don't know which chapters how many marks will come. That is the reason I made the true or false comparison for every chapter. So that first 12 marks is always yours. That first 12 marks is definitely yours. The remaining 8 marks, we stressed a little on accounting concepts, conventions yesterday, standard, provision, contingent liability. And each of the chapter we spent little time, theory, credit commission, all that. All that together will cover up the 8 marks. 20 marks compulsory question. We right now, whoever has attended both the days from yesterday till now, or read little assignment, things we didn't discuss in class, but I've shared it to you by Google form to take up the test on board first. So we've done so far that first 20 marks is assured very much. So we have remaining 5 questions, out of which you need to write only 4. You write only 4. What you need to do in the first 15 minutes of your examination is you need to pick what is the 4 questions that you're writing, what is the 1 question that you're not writing. Right? So it's sometimes a little difficult choice because now maybe question number 3, the split is 10, 4, 6. You know 10 marks question, you know 4 marks question, 6 marks question you don't know, or you are not confident. There's another question, 8, 8, 4. In that 8 marks question you are confident, 4 marks question you are confident, another 8 marks question you are not. So you need to do this weightage. So in each 20 marks question, which question I have better chance, which question I have not a better chance. Sometimes it might so happen there is one question of 20 marks. If you are good at speed, maybe you should know your speed. You should know your speed. Are you up to examination speed level? Are you not? Just now, no, before starting this part, I was standing there, no, Trilok was talking to me. He was telling us to, he wrote one paper in the morning today, January 2020, write up to 62 marks in the 3 hours. And he took 3 hours 25 minutes and then wrote up to 81. Is that right? So that's what he was telling. So you should know how speed are you. In a 3 hour time, are you able to write 60 marks? Are you able to write 70 marks, 80 marks? That experience in the examination should not be your first hand experience. Before you go to exam, you should know, are you more speed than what's required? Are you slower than what is required? You should, based on that, you should decide in the examination whether to take up that one big question of 20 marks or 3 short questions are there in one, that one question has 3 subparts. Should you pick up that? So you might have to do that. You might have to decide it that way. And once you decide which question to skip, which question to solve, considering time, considering your speed, considering your what you say the preparation level, or what chapter is your favorite and most confident chapter. Once you decide these as to what to skip, what 4 questions to write, you need to next decide what sequence are you going to write this for, which is the question that you're going to write first. So the concept is very simple. You do maximum possible marks in minimum possible time. Whatever is there, you do that first. Whatever question can be solved, you get maximum marks in, but with minimum possible time, you do that. Whichever question you're most confident with, you attend that first. That's something that we need not even tell you. From the school times, you will be reading that one. Have first birth or very few. So whichever you know that you will start with. So you also decide upon the entire order. Which question are you rating first? And then you will start with your examination rating. Couple of important tips regarding your answer sheet. And you can write question number 3 and then write question number 2 and then write question number 1 and then write question number 5. You can write any order. 1, 2, 3, 4, 5, 6 is there. You can write in any order. Sir, I don't know whether to write 4th one or 6th one. Confused. I know both, but I don't know both completely. You want to write both, you write both. They will choose best 5. They'll choose best 4 out of 5. First one is obviously compulsory. They'll choose best 4. And writing 120 marks in the examination is impossible. CA foundation, accounts exam, 120 marks is highly impossible. Not impossible, but it's difficult, very difficult to do. Very rarely people achieve that feat of writing 120 marks in 3 hours. It's very close to impossible. So if you really think that you cannot choose between 2 questions, but you know both half, then write, don't worry. You'll choose the best of the 4. You don't have to scratch anything. But a very important point is you cannot change the internal order. You can write third one first, then first one, then 4th one, then 5th one. If you take up 5th one, you need to write 5A, 5B, 5C. You cannot write 5C, then 5A, then 5B. No, not good. You cannot write 5C, 1D, 3A, 4B, 2A. No, evaluator will go mad. You can't do that. Once you pick one main question, you need to write all the 3 subquestions. Sir, I don't know 5A, sir, but I know 5B and 5C. Then you will end up wasting time, 15 minutes on 5A, which you are not confident, which you don't like. Before writing 5A, you can't write 5. Write simple thing. Sir, skip 5A and then go. Problem with skipping 5 and going to 5A and 5C is later you will never be able to write 5A. So what do you do in this case? Very simple. Write 5A, leave one page space. Don't waste time. Don't waste time in writing the answer what you are not confident about. Write 5B, write 5C. Then write all other questions. Then if you have time, come back and write 5. If you don't have time, don't write. Okay. Don't waste quality time on answering a question that you are not confident in. Is getting this? Yes or no? Okay, and in the first page of your sheet, you need to tick the questions that you have written. There is another important thing. There will be question number 1, 2, 3, 4, 5, 6. There will be one place to put the tick mark. Then there is A, B, C, D, E. 1A brother, 1A tick. 2A brother, 2A tick. Question number 1 if written, one next one box only you should tick. Put A, B, C, D tick, where is the right marks? That A, B, C, D below that box that is there, that is for them to write marks. A few people put everything but tick. Then they don't, that is for the evaluator to put marks. The place where you should put tick is right next to that 1, 2, 3, 4. There's only one box. If we ordered only one seat, still only one tick mark. One A, one tick, one B, there is not, it's not there. That A, B, C, D column is for marks. I'll show the answer sheet to you a little later. So people will put tick in that also. So don't do that. And few people are smart. They'll take one red color pen to exam. After they write their answer, they'll only put tick mark and write 10 marks. So that evaluator think is correct and then you put the total. No, that will not work. It's going to be digital evaluation. It's going to be digitally valued. Hard copy of your paper will not be sent to evaluator. The answer scripts, whatever you write, will be packed and then sent to ICI. ICI will scan it and then upload it to server. And it will automatically, statistically, it gets shuffled. Previously, it used to happen like all of them wrote from Bangalore. Entire Bangalore's one set of bundle used to go to Jodhpur, Indore, Patna, Chennai, say Cochin, Hyderabad. In a specific city, everyone's paper used to go. But it's not like that. Now you 5 of you are sitting in the same examination or same classroom. Your paper will go to a different city. Your paper will go to a different city. Your paper will go to a different city. That will happen. And when it all automatically gets shuffled and then goes to the people who are evaluators, no? Evaluator will have username and password. Once they enter their username and password, in their account, certain number of papers will. They would have to correct that paper. Not writing like this. So what they'll do is they will have a screen. So they'll basically take their mouse here, click here. They'll get option tick mark into mark. Tick mark they'll put. Below one more box, marks they'll type. Enter. Automatically marks whatever they type total. You get that? So tick mark into mark, everything clicking. Mouse click they do. And they also put the marks by way of you say typing the marks. Get that? No writing. And type once it is typed, no page total is manual. Sorry, automated. It's not manual. So there is nothing like totally error at everything, and it will automatically come. And this is the reason why if the question is on account current, the question is on 3-column cash flow or something, you cannot change the orientation of the paper. Cannot. You should write the paper like this only. Date, particulars like this, so we cannot change the orientation. Class, a lot of them in the practice, I tell you not to change the orientation in class because exam you will be feeling like doing. And next thing is, few people do free flow. They'll start from left side, this page there, this answer, this side they write debit side, this side they write credit. Can't do that in the exam again. Why? When they scan, no, they'll scan one page. The next page will come below that. It will not come next to it. So at least when it is manual, evaluator could have seen like this. But now one page will be the below the other. Get what I'm trying to tell? So don't try to write the answers from one side to the other. Margin you will leave empty. Why? Margin is where the evaluator will put tick mark and then assign marks. Leave some space for him now. If you don't even leave space for them, then they'll say Jaga illa. Put marks, right? Next time will give marks next time. So don't do that. Don't do that. Get what I'm trying to tell? And whenever you write answers in your answer sheet, after journal entry and narration, you leave 2 lines you leave. One journal entry on it. The exam when you write items, don't write right below the other. Leave one line after each lecture item. Leave one line after each lecture item. The reason is if you pack everything close, no, one next to the other, one next to the other, if you write no, assuming that one amount is wrong, you scratch that amount in the amount column. You don't know where to write. So even if not after every item, after some 3-4 items, every lecture before you close, leave some 2-3 lines. Before you write balance calculate, leave 1-2 lines. After rate balance program, before rate rest of items, leave 1 line or 2 lines. This is just in case if you identify that you've done some error, have some scope or space for correcting that error. Very unfortunate thing is where you identified an error but you are not able to correct yourself. Correct it because you yourself have not left you any room to correct that error. You guys get this? Yes or no? Yeah, that's preferably the point.
And look at this. Usually 10 marker questions come. They not ask any journal based question. They ask ledger based question. Ask you to prepare consignment account and consignment consistently. The question has not come on invoice price method. The last question that's been asked in the June 22 attempt was basically on del credit commission. Del credit commission was paid by consignor. So in that case, bad debts, how do you treat? That was the basis of it. Easy one, easy one. You see that June 22 paper a little bit. You see it, you would understand better. Now, shall we start seeing questions on consignment? Or shall we go down to discuss the rest of the topics? Considering the fact that it's already one. We'll just see the questions and we'll discuss the adjustments. We'll not discuss the answer in detail. Shall we see what sort of questions had come before? If I do complete solution to the question, we might not be able to finish in time. And I'm sorry for this little delay that we had about an hour. Again, that was not planned for. Yeah. So this is a question from May 2018 paper. Have a look. Ganapath of Nagpur consigns 500 cases of goods costing 1,500 each to Rawat. Ganapath is consigner and then Rawat is consignee. Read the last thing. What do they want? Draw up the consignment account and Rawat's account in the books of Ganapath. Consignment account to identify consignment profit. Rawat's account, there is nothing but consignees. Okay. So what now do we have? 500 cases, 1,500 each. So 500 cases into 1,500 is goods sent on consignment. Am I right? Yes or no? So we'll write goods sent on consignment 1,500. What is the page? Question number 123. See, 123 is because I don't believe in page number. See, material to material, version to version, page numbers will change. So what I did in this material, what I'm going to share with you people later is, first chapter there are 20 questions. Second chapter it will be question number 21. So you don't have to remember page number at any point. And the questions will be free flowing from chapter to chapter. Get that? So answer numbers also will match very easily. I don't know. The other exciting reason is it's different from the rest of the materials. No? There we go. 123. How many units were sent? 1,500 units into 500. How much is that? 1,50,000. Okay. 7,50,000. Then what do we have after that? Have a look at the next part. So the following expenses are paid in connection. Who paid it? Gadapath. Consignor paid it. When consignor pays the expense, several entries, consignment to cash. What are the expenses paid? 3. Carriage, freight, loading. 15, 45, 50. Can I say together 60, 75,000? 75,000 where will we write? Consignment account debit side. See here, consignment account debit side we have written 75,000. Any doubts? Okay, let's go to the next one. What's after that? Rawat sells 350 cases at 2,100 per case. So sales is how much? 350 into 2,100. How much will you get? 7,35,000. This is consignment sales. Consignment stock will reduce. Journal entry is consignee account debit to consignment. So consignee should pay us money. In consignment account I have written by consignee. Who's it? Rawat. How much? 7,35,000. Done. So what's the next thing after that? Then they've told us that certain expenses what the consignee has incurred. Clearing charges, warehousing and storing charges, packing and selling charges. Now clearing charges is selling or non-selling expense? Non-selling expense. What about warehousing and storage? Selling expense. What is the last one? Packaging and selling. Selling expense. So treatment of selling and non-selling expenses are different. When I say selling expense is 18 but non-selling expense is 32. Sorry. Non-selling expense is 18 but selling expense is 32. Tell me, what do I debit in my consignment? Everything. All the expenses will be debited to consignment. However, if I am computing the value of my closing inventory, unsold inventory at with consignee, but then I will not take all. I will take only the non-selling expense of 18. So now shall we take everything together? How much is it? 42. That is 50. Okay. We'll be writing 50,000 as consignment account debit to consignee account. Consignee has paid this expense and we are going to repay this expense to consignee. Am I right? Okay, what is the next item in the question? It was found that 50 cases were lost in transit, which is an abnormal loss. Where was it lost? In transit. So that is before consignee will clear it. So when we find the value of this stock lost, we should take proportionate expense incurred by consignor, but not expense incurred by consignee. Why? Before the consignee incurred the expense, the goods are lost. So please take this 15,000, 45,000, 60,000. Together is how much? 70. 500 into 1,500 was how much? 7 lakh plus 70,000. 8 lakh 20,000 is a cost for how many units? Is a cost for how many units? 500 cases. Divided by 500. How many cases are lost? 50 now. 50 into 50. You understood, no? Cost of goods sent plus consignor's expense divided by total cases, get per case value. Multiplied by 50 cases which are lost. How much do we get? 82? 500 is the goods lost, abnormal loss. Is there any insurance claim? No. So shall we write on the credit side in our consignment account 82,500? 82,500. Goods lost in transit. 50 cases. There's another way to arrive at this. Shall I tell you one more way to arrive at this? Per case value, we know it. How much is the value per case? 1,500. What we did, we found the total value, added total expenses, until divided it, found it per case value. Simple. Per case cost, we know 1,500. Expense incurred totally 70,000. 70,000 is for 500 cases. So 70,000 into 50 by 500. 75,000. 75,000 is for 500 cases. How much is it for 50 cases? 150. 150 is total. 150 per case. No. Per case 150. Yeah. Did you do 75,000 divided by 500 or did you do 75,000 into 50 by 500? If you do 75,000 by 500, you get per case value. If you do 50 by 500, you get total value. You did by 5,000 or into 50 by 500? Into 50 by 500, only 500. Then add the cost 1,500. 1,650 per case multiplied by 50. Do not understand? 75,000 is the total expenses incurred. This is for 500 cases. Divide 75,000 by 500. You get per case value. 75,000 divided by 500. No calculator? Very good. Okay, how many of you have not got calculator? Accounts class, in this you get calculator. Yesterday was surprise. Yesterday saw it's a one way. Didn't get anything. Movie go to what is chocolate also will take, but every time you find a new way to take chocolate to. I put it inside the flask container. Flask will put chocolate around the flask open. Flask water. Let you flask. Don't try this next time. Next time you take some food and all in flask, you get caught, they'll take everyone's flask. So, but a secret tip is if you want to seriously smuggle something to the theater, you can put it in the flask container. What do you say? Happy New Year. They take it in the flask. They take diamonds. That is just, they say like I'll keep it here like this, but in reality they'll put it to dustbin and they say no, it doesn't. How do they take finally? Put the movie and there, come on. You understood now 150 per case. Add the 1,500 per case. 1,650 multiplied by 50 cases, you'll find the abnormal loss. Come on. What's after that? And another 50 cases were in transit. Transit means what? These goods have not reached the consignee. So we cannot write them in balance caravan. You write this just above balance caravan. You write this just above balance caravan. What do you write? Geeta. See here, 50 cases in transit. Same. In transit, 50 cases. 1,650. Sir, how did we get 1,650? Same thing what we did here. We did no. Oh, sorry. He found no. Goods lost. Goods lost, we did 1,650. No. Same thing for in transit also. For again, these goods which are in transit, we will not include consignee's expense. Why? Consignee will incur expense for the units that he has received. And how many units did we send? 500. In that, how many are sold? Sales kotidara. Rawat is illi kotidare sales. Rawat has sold 350. So 500 may if we sell 350, 150 will be remaining. 150 may 50 is lost.
100 days limit. Either 50 is in transit. Finally, closing stock is on. For the 50 cases, we need to find the closing value, or say closing stock value. Don't do it to 1650. Wrong. You know why? Because 50 cases are with the consignee. We should include proportionate expense of the consignee also. How much is consignee is not selling expense? Cleaning charges is there? 18,000. Now that 18,000 also should be included. Now tell me how many units did consignee receive? We sent him 500. The 50 got lost. 50 are still in transit. 50 are still in transit. He received only for 400 cases. How much expense has incurred? 18,000 divided by 400. 45. Before that, goods which are in transit or goods which have come, 1650 are plus 45. 1695 per case value. How many units are there in closing stock? 50. Do it to 50, that is your closing stock. Once you put the closing stock, you can find balance figure as profit. You can find balance as profit. Have a look. See here 1695. 84,750. Once you write this, your commission madilva. How much is commission? They told commission is 10%. On the sales of 7,35,000, when you find commission, it will come 73,500. Balancing figure is 36,250. That's the end of the story. They have also asked you to prepare Rawat account. That is very simple. Wherever you written by Rawat in consignment, they write 2 consignment. Written 2 Rawat, write by consignment. Ashte. Moving to problem. Easy. This was an easy question. 10 marks. 10 marks. Twice Allah. Pere. 50 cases irodella onde agibirodilla. 50 cases lost. 50 cases in transit. 50 cases closing stock. Muru bere. There's one more exam question. Raj of Gwalior. We've done this as well in the class. This is part of our material. You guys know this? Raj of Gwalior consigned 15,000. I don't know why you guys are talking. Raj of Gwalior consigned 15,000 kgs of ghee at rupees 30 per kg to his agent Siraj at Delhi. So Siraj is consignee, Raj is consigner. What do they want? Come to the last line. You are required to compute the amount of abnormal loss. Okay. Value of stock at the year end. Okay. Prepare consignment account showing profit or loss on consignment. If Siraj is entitled to 5% commission on sale. They don't have to ask this abnormal loss on stock at the year end separately. If they ask for consignment account, in consignment account preparation, we will find abnormal loss. We will find the value of unsold consignment stock. Correct or no? Yes or no? Yeah, that's all part of it. Correct or not? Yeah, let's read the question. Consigned how many kgs? 15,000 kgs at rupees 30 per kg. So what is the goods sent on consignment? 15,000 into 30. 4 lakh 15. Second time I've seen. I want you to listen. If not, get up, sit somewhere else. Let him listen. Don't talk. 15,000 into 30 is how much? So write in the consignment account on the debit. Tell me. Okay. Observe, in your consignment account on the debit you will have yeah, 4 lakh 50. 4 lakh 50. Did you understand? 2 goods sent on consignment. So what do we have after that? After that, what we have is he spent 5 rupees per kg as freight and insurance and sending the ghee at Delhi. Ghee at Delhi. Ghee to Delhi. VCR होगी last year. Yes, Delhi no VCR. They should have read, but fine. Surprising. 5 rupees per kg into 15,000 kgs. How much is 15,000 into 5? Consignment expense paid. What is the entry? Consignment account debit to cash. Consigner's expense. 15,000 into 5 to cash account. 75,000. Done. Then what do we have? On the way, 100 kgs of ghee was lost due to leakage, which was to be treated as normal loss. Now don't argue with them. No, ghee can be packed in such a way that it will not get leaked. Don't fight. Don't fight. We are not here to revolt and then like take the opposite side. Whatever they've told, shut up and follow. We are after all accountant. If the rest of the department says it's normal loss, normal loss. If they say abnormal loss, accounts department will not put their nose and then fight. Yeah, you just do what is a postmortem job. See, it's all someone is already dead. You just identify how they are dead. That's it. Get what I'm trying to do? So abnormal loss. Sorry, normal loss. So will we write entry in consignment account? No, we will not write. We will not write. We have to do some small computation and then adjust this. You agree with me? Okay. Next, how many kgs are lost? 100. And 400 kgs of ghee was destroyed in transit. Oh my God! What are they doing? 400 kgs. Did you understand? Just imagine you jumping into one 400 kgs ghee like this. Oh my God! Mungali, baili, ella tuppa. Tuppa, beka, tuppa. Oh, okay. Next, after that. So basically 500 kgs damar. 14,500 kgs are remaining. Okay. 9,000 was paid to consignor directly by the insurance company as insurance claim. How much was paid to consignor? 9,000. How much is the loss? How much is the loss? 500 kgs, no? 400 kgs. On the way. Oh, 100 loss. 100 kgs no claim. 400 kgs ke liye this is claim. So shall we identify how to compute this working note madana? Madla torsla. I'll do it. This will be last question on consignment. Next we'll go to another chapter. Stop talking. I told I will do. I didn't ask you to do. Now tell me, how much is the cent? Cent is, what is the value per kg? Can I say 4, how much? 4 lakh 50. I can still hear people talk. I am not stopping anyone. If you are not interested, you want to talk, you can walk out of the place. I am seriously not stopping you. Don't make me throw you out of the class. Yep, 4 lakh 50. Then we'll add proportionate expense that is incurred by consignor. How much is consignor's expense? 70. Consignor incurred this expense. Then the goods got lost in the transit. Am I right? So firstly there is normal loss. So 15,000 I'll write like this only. Here it will become 5 lakh 25. How much is 5 lakh 25 divided by 15,000? 30. Okay. Now there is normal loss, there is abnormal loss. Which one should we treat first? First normal loss or first abnormal loss? Depends upon the question. It can be either this. What if abnormal loss is in the transit, normal loss is in the godown? Then first abnormal. So don't go with any pre-mindset that okay fine, first normal loss. It's not in it. It can be other way around. But you would not have come across a question where we adjusted abnormal loss first and then normal loss. But let that not be the reason why you will think like okay first normal loss ಮಾಡಬೇಕು ಯಾರು ಹೇಳಿಲ್ಲ ಅಂತರ. There is no such condition. Okay. First we'll deduct our normal loss. How many units are lost normally? 100. We'll write less 100 units here. When we do less 100, number of units will become or kgs will become 14,900. This will be 5,25,000. What will be the value? 2, 3. Now we will adjust our abnormal loss. Abnormal loss is again in the transit, no?
Okay. Abnormal loss is how much? 400 kgs. Value I'll write 35.23 per unit. If I multiply, how much do we get? 14,900 14,092. Zero nine two. This is the loss. How much is the insurance claim? Okay. So now tell me what is the journal entry that I should be writing? Some amount is P&L. Insurance company 9,000. Balance will be 5,092. So in my consignment account, I'll write credit side by P&L 5,092 by insurance company 9,000. Get that? And this is not a separate working note. What we can do is we can actually extend this working note. We can actually extend this working note to find our closing inventory also. Now what will I do? I'll write here 14,000 at 35.23. Multiply and write the amount here. Write number of units sold you deduct. Once you deduct number of units sold, you will get number of units that is still there with us. For that number of units what is there with us, no. For number of units that is there with us, you multiply by 35.23 and you will easily identify how much is your closing inventory. It will become quite easy. Let's see what is the next adjustment. But did you understand abnormal loss? In the consignment account credit side, what you write? By P&L account 5,092, by insurance company account 9,000 rupees. Clear? Okay. 5,000 and 9,000. 14,000. Now round off madidare. 35.23 is there, no? They have rounded off. They got 5,000, 9,000 and 5,000. They didn't make it 14,092. They have taken it as 14,000. 35.2 madada baratatara. It is okay. Don't worry about 92 rupees. Don't worry about 92 rupees. Yellaru 100 ರೂಪಾಯಿ ಕೊಟ್ಟರು 92 rupees ಗಿಂತ ಜಾಸ್ತಿನೇ ಆಗುತ್ತೆ. So many people are there, no, here. ಏನಪ್ಪಾ 35 ತಗೊಂಡಿದ್ದಾರೆ, round off ಮಾಡಿದ್ದಾರೆ. Don't worry. Next, let's go to the later part of the question. What is the given after that? Then to consider directly by the insurance company, sold how many kgs? 7,500 kgs at rupees 60 per kg. How much do we get? 7,500 into 60. 4 lakh. This is sales. Journal entry is consignee account debit to consignment. Consignee account debit to in consignment account where do I? By consignee on the credit side. Instead of the amount of there 4 lakh 50,000. Commission also will be computed on this only. Then what else is there in the question? Spent advertising and recurring expenses so much? 33,000 is spent as expense. 33,000 selling or not selling? Selling expense. It will not be included in the valuation of our inventory, but it will be included in computation of our profit. We will write it in consignment account debit side as expenses. That will determine our profit. However, when you find the closing inventory value, you don't have to take that into consideration. Am I right? Yes or no? Okay. Concentrate on advertising expenses, which is selling, which will come in consignment but not come in unsold inventory. You are looking at the girl who's coming. If she comes, hey, you haven't you ever seen any human being walking? Don't you know? Papa. Yeah, Yavaglu, one person will get up and then go to washroom. Till the person gets out of the room, you'll be like this. No day, Consignee's account, advertisement, recurring expense, 33,000. Will not impact our stock valuation. What else is there? Ashte. Question mugiti. How many kgs were sold? 7,500 kgs are sold. Here, they are not taking 35.23. They are taking everything at 35. Shall we also take 35? Now, closing stock matra will just find the same figure. How many units? 7,000. 7,500. Sales is 7,000. Sales is 7,500. Closing stock will be 7,000. It will be valued at 35. You do 7,000 into 35, you'll get closing value. How much? 2 lakh. Hey, abnormal loss. Any other expense is there? Something is there. 80? 80 rupees is adjust agid. Yeah. So 35.2 ಅಲ್ಲಿ 80 rupees ಜಾಸ್ತಿ ಇದೆ ಇಲ್ಲಿ 80 rupees ಕಡಿಮೆ ಆಯ್ತಾ 2,46,690. How much did we get? 2,46,750. 610 80 rupees ಅಲ್ಲಿ ಕಡಿಮೆ ಇದೆ ಇಲ್ಲಿ ಜಾಸ್ತಿ ಇದೆಯಾ okay. Once you write that, you will find commission ಕೊಟ್ಟಿದ್ದಾರೆ 5% ಅಂತ ಹೇಳ್ಬಿಟ್ಟು. You will apply 5% on 4,50,000. You will get this commission. Profit is balancing. Easy one, difficult one. They haven't asked you to prepare consignee account also in this question. That's simple. Only thing is they wanted abnormal loss, which is almost part of your consignment account only. They don't have to even mention separately. They mentioned the commission in separately third point. We search for it entire question. They've given the third point. They need consignment account if consignee is entitled to 5% commission. That's it. Got that? Then the next examination questions are also something similar to that. The recent June 2022, they had given calculated commission. What was it? The consignee is entitled to, and there is bad debts. Simple thing. Ignore bad debts. Don't read it in consignment. Don't read it in. Even you know, madak hoಗ್ತೀರಾ marks full. ಬರದಿಲ್ಲ ಅಂದ್ರೆ ಬಚ್ಚು. Ignore bad debts, we get full. So that's with regard to this topic. Then I'll give you a quick heads up about bills of exchange, and then we'll go to average rate account current. Shall we? Bills of exchange, a topic what is basis for several other topics that's there in your syllabus. Then we'll do goods sent on return or approval. Easy to do topic. You think it's easy and you skip it. Easy, that's the reason you should basically do it. Lot of marks come from this chapter in the exam. So bills of exchange. Let's quickly understand what exactly is a bill of exchange. See, whenever a transaction has to be settled, it need not be settled immediately in cash. It need not be settled immediately. It can be settled later. Just to ensure that they put it on a paper, the person who's supposed to pay the money and the person who's supposed to receive money, to write it on a paper. This is a copy of a bill of exchange. I haven't shown in class before. Sorry. So this is a copy of a bill of exchange. Long terms. When 1880, 4 7 9 handwriting is ಸರಿ ಇಲ್ಲ ಸ್ಟೈಲ್ ಆಗಿ ಬರೆದು ಬಿಟ್ರೆ ಕರೆಕ್ಟ್ ಅನ್ಕೊಂಡ್ಬಿಟ್ಟಿದ್ದಾರೆ. Yeah. So there are parties to transaction that you need to know. Remember. Listen. Hey, listen. You don't have too much time. There are parties to transaction that you should know. So I am a seller, you are a buyer. I am a seller, you are a. I have sold you goods, you should pay me money. So what I will do is I will draft one document and then give it to you. You should sign it and then give it. I should draft the document, give it to you. You sign it and then return it to me. So I am drawer because I drew it on the paper. And whenever I draw, I place an order. I unconditionally order you to pay me money. Right? I unconditionally order you to pay me rupees 10,000 on this date or at the end of this period. I'll write and then give it to you. It's an order that I'm making and it is unconditional. Meaning you can't change date, you can't change the amount, you can't change anything in that document. Only place in that paper where you can keep your pen is writing the answer. People over there, hang on phone. Guys can go. The door is open at any point of time. Don't waste your time. If you think you can do something better, not staying in the classroom, you can always go home and take some extent. Travel so much time, spending here, coming here, sitting on phone, playing it, definitely not good. It distracts me also. When I stand here and then see, I want all the years to be what I tell and not anything else. To do something else, it means two simple things. One, what I'm telling is not interesting or I'm not telling right. So I usually think that I'm not telling it in interest. And I start cursing myself. If I curse myself, trust me, I can make it. Don't test me in that specific. Yeah. So what I was trying to tell is, I draw the bill and then I make an unconditional order to the drawee. So I am drawer, the one who prepares the document. The person to whom I give the document is drawee. That person doesn't have an option but to accept that order by signing at the end of it. And he returns it back to me. To me, it is a bill receivable. To me, it's a bill receivable. To the other person, it is bills. Yeah. Bills receivable and bills of exchange. Is it same? Is it same? A bill of exchange can be a bills receivable or a bills payable. Depends upon the person. Can I say all bills of exchanges are bills receivable? Can I
I say all bills receivable are bills of exchanges? No. Bills receivable will include bill of exchange as well as promissory note. Bills receivable will include bill of exchange as well as so bills of exchange. Whenever you say bills receivable in the balance sheet asset side, include bills of exchange as well as promissory note. I'll talk about promissory note little later. But for now, when I give the document, you sign and then give it to me. I have made an unconditional order. You have accepted. I am drawer. You are drawing. I am drawer. You are drawing. To me, it's an asset. Bills receivable. To you, it's a liability. Bills payable. And that bill that we entered into, there are certain things that you should know about that bill. Number one, date of drawing. What do you mean by date of drawing? The date on which that bill is drawn by me. The date on which I have drawn that bill is date of drawing. Next one is date of acceptance. Wait, I have a better file to show. I'll use our class file. Can I? Next batch, when I'm doing marathon revision, I'll keep all that in the form of presentation ready. Tell your juniors, and I really hope that you shouldn't be attending it, and you should be no use to you. Yeah, so bill of exchange is an unconditional order made by drawer, accepted by drawee to a specified sum, either on a specific date or at the end of a specific period. Okay, we discuss this. Now tell me, what is date of drawing? It is a date on which the bill is drawn. The date on which drawer prepares the bill. Then comes date of acceptance. Date of acceptance is a date on which drawee signs. It need not be the same, but it can be the same. Can it be before date of drawing? No. It can be either date of drawing or date after. Now, then we have something called as bill date. Bill date. What do you mean by bill date? Bill date is a date on which bill will come into force. Bill date is a date on which bill will come into force. Now, bill date can be date of drawing. Bill date can be date of acceptance. Bill date can be date of drawing. Bill date can be date of. It totally depends upon what is the type of the. If it is bill after date, then date of drawing is bill date. The date of drawing is. If the bill is bill on acceptance or bill after sign, meaning it will become a bill only when the drawee signs it. Only when the drawee, then our date of our date of acceptance will become our bill date. Meaning whenever we mention that bill period of 20 days, 30 days, 90 days, 100 days, 2 months, 3 months, from what date do we start counting that date? That is from bill date. Bill date can be the date of drawing or it can be date of acceptance. It can be the date of drawing or date of. You should be a little careful. And people are planning to skip entire bills of exchange chapter. It's a little tricky. Because if you don't do bills of exchange and don't know what is date of drawing, don't know what is date of when to take which date. Average due date account current mein, there are questions where you will come across bill after date, bill after site, bill on acceptance, bill on site, bill on presentment. When such a question comes, you don't even appreciate the difference between each of the lines. So that's a small reason why you should do basics of the chapter and never skip the chapter. Yeah, wise decision. Considering the amount of time that the chapter involves and marks involved, it is wise to skip. But it is not smart to skip. You get what I'm trying to tell? But that is the reason whenever I take class, I never tell students as to which chapter comes for how many marks. If you have not noticed, and if people ask, I yell at them so that they won't have guts to ask next time. They will ask next time also. So see, bills of exchange has come only 3 times in the examination so far. May 19, December 20 and December 21. 5 marks, 10 marks and 10 marks. So renewal retirement with insolvency. There is one bill which was renewed, one bill got renewed and then there were 2 bills. One bill got renewed, one bill got retired. The renewed bill got, that person became insolvent. We've done the same question in class. This first one is renewal retirement insolvency. We've done it. It's about 5-6 journal entries, very easy. And next one is accommodation of bill. That one bill was accommodated on the maturity date, that guy could not pay money. So the drawee drew one more bill on the drawer, that new bill was accommodated and then they shared the proceeds on the maturity date, that guy failed to pay. Entire money was paid by drawee and insolvency, bad debt retribution rate. We've done this question also again very similar. This again is 6 to 7 entries only, but this has 10 marks. Again, one more question that was asked recently was retirement and renewal. There were 2 bills, one bill got retired, other bill got renewed. And interest and rebate has to be computed on both. It's actually very easy. It's actually very easy. And this works as foundation for our average due date, account current, and consignment also a little bit will come, but not much. Average due account current ke liye, this is the base. You saw the marks allocation. Maybe if I had have shown this in class, you wouldn't have let me do the chapter. No?
Credibility. Andre, when I do, if you don't understand, like, ah. Yeah. So you understood bill date. Next we have the concept of due date. Due date depends upon the type of the bill. Usually people will make due date, sir, that bill date plus bill pay. Not necessarily. Bill date competition is only little tricky. Take date of drawing or date of acceptance depending upon the date. So that if we add the bill period, we'll arrive at due date. And is due date and maturity date same? Need not be. Usually maturity date is 3 days after due date. But in certain cases, due date and maturity date are same. When? If it is bill on site or bill on present bills. Meaning there are certain bills where or bill with specific date only. Certain bills there will be no bill period. We won't write 30 days, 90 days, 2 months. We don't write like that. We'll write on the bill only this bill will mature on 20th of December. 20th of December is Sunday. Nobody cares. Is the date 20th December written in the bill? 20th of December is date. 20th of December is maturity date. There is no date before that, date after that, nothing. So you also do that date before, date after, no? Yeah, known holiday, unknown holiday, all that needs to be done only if it is bill with specific period. I told you, bill can be, when you prepare the unconditional order, you can write it after 3 months. Or you can write on 20th of December. If you write on 20th of December, that is bill with specific date. You written the date of maturity in the bill. Certain case we write 30 days. When we write 30 days, we should count our due date. And then if we count our due date, from that date we give 3 days time for maturity. The maturity date falls on a holiday. The maturity date falls on a, then what should we do? We should check if whether that holiday is a known holiday or unknown holiday. If it is a known holiday, the day before. If it is an unknown holiday, the day after. Different people tell different things. But a very important that you need to remember is no Christmas, no Bakrid, no Ramzan, no Pongal, no Ugadi, no Sankranti and all. Holidays are only 5. All Sundays. Independence Day, Republic Day. Then you have April 1st and 30th of September. So going Fool's Day Allah, beginning of financial year. 30th of September is half yearly closing. And 15th of August, Independence Day, every year same, no? Change agodilla. And 26th of January, Republic Day same. Sir, Gandhi Jayanti, October 2nd, have a love for Gandhi here. Don't write it on the paper. On the paper, they mention in the question. If they mention in the question, what? Have Gandhi here, no sir, have Gandhi here. Note. Sure, God. Listen. So, listen. One second. Hey, listen to me, please. So, October 2nd, 25th of December, you celebrate, okay? But you consider that as a holiday only if they mention in the question. If they mention 25th of December and then mention it as Christmas, there was a holiday because of Christmas, then you take it as what? Known holiday and then the day before. You get what I'm trying to tell? Yes or no? If it falls on an unknown holiday, then not next day, next working day. When is it? Next working day. So, till now, all the exam questions you take average, you take account and bill suffix in. No question 25th December, 2nd of October, even in CPT scheme, it was never there. Yeah, but taught you at some place in class, so don't get confused. Get what I'm trying to tell? Pakka. And Sundays should be mug up, sir. Do you mug up Sundays? No. Don't have to mug up Sundays. Don't have to mug up Sundays. They will tell in the question. So, no, sir, I knew that 16th June was my girlfriend's birthday, Sunday. It is okay if you know, but don't use it here. If they mention it is Sunday, it is Sunday. If they don't mention it is not Sunday. You get that? Very good. So, entire thing is here. And then types of bill I just mentioned, no? Bill after date, bill after site, bill on date, bill on site, bill on presentment, bill with specific period, bill with specific date. I have touched all the topics to you. And whenever they say months is not equal to days. When they say 1 month, you don't do 30 days. 1 month means 1 month. 30 days means 30 days. 30 days is not equal to 1 month. 1 month is not equal to 30 days. So if they say bill is signed on 18th of November for 1 month, don't add 30 days. 18th of December. 18th of very good. So when they say 1st of January bill is signed for 30 days, don't say 1 month, 1st of February. No, add 30 days. 31st of January. 31st of. And you know when to take next month first day? I issue a bill on 28th of February for 1 month. 1 month. February end, no? Last date I issued the bill. So due date will be last date of March. Am I right? No. 28th of February say 1 month is 28th of March. 28th of February say 1 month is? If I issue the bill on 31st of March for 1 month, 31st of April, 1st of May. No, 30th of April. Why? 31st of March I gave the bill for 1 month. 1 month is 31st of April. 31st of April is not there. So last date of that month.
last date of that month. Okay, but then you add 3 grace days if you want. You get what I'm trying to tell? Yeah, due date falls on 15th of August. What do you do? Due date for 15th of August is the problem. Maturity date 15th of August is the use. Get that? So we don't care about due date falling on holiday. It should be maturity date falling on holiday. Nagi. What's wrong with you all? It's easier confuse Akira. Here you're sitting very comfortably having brunch at 11 o'clock. Now only your brain is like ding ding ding. Exam at 2 o'clock. Anxiety, pressure, everything. And the person sitting next to you is asking 2-3 additional sheets. And your mom has already given you one warning. I will also see how much you will get in the exam. Because every day in the morning you are torturing mom. Don't give me any work. I'm studying for exam. You don't know how difficult is CA exam. One of the most difficult exams in the country. You tell all that big dialogue. So mom also will tell, no, I ain't pass. So that pressure is also there. Papa is coming, dropping you to the exam hall and then going. Or some parents know, even I don't know, some parents know, in the name of care, they put so much pressure. I've seen parents. I used to go meet students at the exam hall previously, pre-COVID. I used to go 4 exam centers, 5 exam centers. I used to visit single day. Now I'm married. Yeah. So, sir, adu idu ಏನು ಸಂಬಂಧ ಗೊತ್ತಾಗುತ್ತೆ ನಿಮಗೂ ಆಗುತ್ತಲ್ವಾ ಅವಾಗ ಗೊತ್ತಾಗುತ್ತೆ. Now listen to me. Yeah, listen to me. Yes. Today, no, yesterday, by the time I went home, wife had some alno. I should go to dentist, but I have class today. Yeah, so I should take tomorrow, or I should go with her tomorrow, or not. If not, none alno baratte. Actually, very understanding. She told very clearly yesterday, see, I'll go to dentist the day when you have class. Like you have class Monday, no, you take class on Monday, I'll take off on Monday. Why to waste our common time at dentist place? That's what she told. But somewhere, whenever all this is happening, no, somewhere you know, okay, fine, strike one. Okay, anniversary was the first anniversary. I took class, strike 2. Birthday will come next month. I should take holiday. If I don't take holiday, because it will be towards the end of the West. Strike 3. Actually, very understanding, but still you feel bad that you are not giving anything into the relationship and then spending time with people who won't listen and then sit in the class talking to their neighbor, using phone, playing game, taking break for 15 minutes after 1 hour, 15 minutes. I don't eat dinner together. I tell, okay, fine, it will be late by the time I come, you have dinner. And then you people, that is what makes me angry. Because I was not sacrificing much to take class. But now I sacrifice. And you people don't appreciate that. Yup. Heda country. You must be other Nanu one Sapale. Yeah. Come on, let's go ahead. So once the drawee receives the bill, once the drawee signs the bill and drawer receives the bill, drawer has 3 options. How many options does drawer has? Option number 1, he can hold the bill till maturity date. He can hold the bill till. Option number 2, they can discount it with the banker. When he wants the money immediately, take the bill to banker, give the bill to banker. Banker will deduct a portion of it towards discounting charges. What amount will the banker deduct as discounting charges depends upon the value of the bill, percentage of discounting charges, and the period that is left before the maturity. If the bill period is for 3 months, higher discount. If the bill period is for 1 month, lesser discount. Because that's the period for which banker has to wait now. Longer the banker has to wait, will charge more amount of commission. So balance money, what we receive, will keep it with us. On the maturity date, banker will ask the money from drawee. If the drawee fails to pay the money, then banker will take money. Now, for example, there is a bill of 2,100 rupees. 100 rupees was deducted as discounting charges, and 2,000 rupees was paid to us by the bank. On the maturity date, banker will ask the drawee 2,100. If the drawee fails to pay 2,100, then banker will deduct from our bank balance. How much will the banker deduct? 2,100. Banker will deduct full value. Banker will not deduct only the X interest part. Why? Banker wants full money. That is the reason no banker waited for so long. And the last one is endorsing of the bill. Endorsing of the bill is like this. So I purchased goods from someone and I sold goods to someone. The one to whom I sold the goods gave me a bill. I kept it with me. Now the one to whom from whom I purchased goods is giving me one bill which I should sign. So if I sign and then give, I should pay him money that will become my bills payable. I should receive money that will become my bills receivable. I don't want to tally my balance sheet at higher amount. So
So what I'll do is, I bought the goods. Along with the goods, he's drawing one bill on me. I'll say, wait, 2 minutes. And then I'll buy these goods. I immediately sold the goods to this guy. This guy should give me money. I will draw one bill, give it to him, get it signed. I'll keep that with me. Instead of this guy raising a bill on me signing it, I will say, you take this bill. You collect money from him. Get what I'm trying to tell? But amounts might not be same. Meaning I purchase goods for 10,000. I sell part of the goods for 5,000. So 5,000 rupees worth bill I'll give, remaining 5,000 I'll give cash. My profit will be there, but it will not be complete settlement. So what I did is, bills receivable what I received, I gave it to my creditor. Get this? This is called endorsement. What is this called as? Endorsement. Now I am here. This is my customer. This is my supplier. Me. Okay? My supplier. And my customer. So whenever there is my supplier, me and my customer. Get what I'm trying to tell? So I am drawer. Who am I? I draw the bill and my customer accepts. My customer is drawee. My customer is drawee. So I am drawer and then drawee. I keep this bill with me. I give it to my creditor. My creditor is calling the bill from me on endorsement. So he is endorsee. Who's he? Endorsee. I am endorser. I am giving the bill. Endorser. He is receiving the bill. Endorsee. I am drawer. I am giving the bill. I give him the bill. He will is code. He will give it back. I give this guy the bill. They are like God, like giving here, giving here. Yeah, drawer and endorser. Drawee, endorse. Endorsee looks like some bad word, no? Yeah, you can actually become. You can call this our accounts words. Like you can use all this to what is this called a fellow commerce student. Hey, avunillo inna bandila andre avun budi endorse nan maga barode. People around will not understand. So it will become our own way. We can use it to scold each other. Nice, no? Drawer. Yes, endorsee. All this. Now, listen. We will be required to know journal entries in each of the cases. The books of drawer and the books of drawee and the books of endorser, endorsee. Banker case mein books are not asked. But we'll see the same bills discounted, no? From the perspective of the banker, the entries will be seen in inter. Can you see it? See intermediate. Come on. Let's quickly discuss the journal entries. When the goods are sold, I'll tell the heading. All fine. Where were you sitting? I thought you were sitting somewhere here. You changed. I can place here also as to where our Ravi Teja was sitting there yesterday. Ravi Teja is sitting now there. She was sitting here, that corner yesterday. Now you're sitting there. And my mind is little. Yeah. Oh my God. These two people were sitting there yesterday. And then his friends didn't come. 3 people, you ate them. Fragility, yeah. Oh, you saw a friend. Oh, sorry. One more. Fragility. You didn't understand. Fine, let's go. Hey, everyone, stop taking break. They're going together. Don't know. Help each other. Come on, guys. What about in the books of drawer? The books of drawer. What is entry for sake? Draw it to. Anyway, everyone should say it loud. Okay, quick, fast. If you guys respond faster, we can go ahead faster. Draw E to sales. In the books of draw E for purchase. Purchase to draw. When the bill is drawn and accepted, what is entry in the books of draw? Bills receivable to? Very good. In the books of drawing for accepting. Draw to bills, pay. On the maturity date, bill can be honored, bill can be dishonored. If it is honored, what is entry in the books of draw? Drawing. Dishonored. If it is dishonored, what will be the entry? Whenever the bill is dishonored, voting charges will be getting notarized so that you can sue the other person in the court. So, who will incur voting charges? Voting charges will be the person who holds the bill on the date. On the date of dishonor, whoever holds the bill. Now, on this date, who holds the bill? The bill is held by drawer. He has not discounted it, not endorsed it. He holds it. So we incur voting charges. Voting charges is expense. Voting charges is because voting charges is expense. We write voting charges account debit to
but it is not our expense. Who did the mistake? Roy. So expense also should be borne by Roy. So we'll later pass on that bill and notice. See that bill, they should have given money, no? He has given money, would have done cash to bills receivable. He did not give money. So he should give money, but we'll give the bill back to him. What will we do? It's an outdated paper. So we'll not keep that paper with him. We'll give the bill back to him. So instead of writing cash to bills receivable, we'll now write draw into bills receivable. Draw account debit because you need to receive money from drawing. Bills receivable account because bills receivable asset is going out, you credit it. And this time when you do it, you debit your drawing account, you don't just debit by bills receivable amount, you debit including noting charges because you need to pay that noting charges amount also to you. Now tell me what is the entry in the books of drawing for bills dishonored? Bills payable account debit to noting charges. Very good. And to draw. So you should pay the bill money and noting charges money together to draw. If he pays it, the journal entry will be draw to cash. If it doesn't pay, draw to insolvency or what is it, deficiency. And the other way will book bad debts entry. And noting charges being expense, it will be transferred to P&L. You get that? Very good. So let's see the next case. Next case that we have is with regard to okay. The file is not selected. You can get the bill discounted with the banker. If you get the bill discounted with the banker for drawing the bill, for accepting the bill and all same. When you discount the bill with the banker, draw should write an entry. What entry will draw write? Bank account debit, discounting charges account debit to why? You receive money from the bank. So bank account debit. And you credit bills receivable because bills receivable is going out. You don't receive the full money. You receive only part money. Such amount what you don't receive is discounting charges. Such amount what you don't receive is, and this discounting there is no entry in the books of drawee. Drawee is not affected by this transaction. You will not write any entry. Will you write entry? You will not write any entry. You will write it only when it is honored or dishonored. On the maturity date, drawer will not write any entry if it is honored. Why? Bill will be collected by whom? Banker. Paid by whom? Drawer is not affected. Will not write it. However, if it is dishonored, no, banker will give the bill back to us. And then banker will collect full money. Because banker will collect full money, we will credit our bank account. We will credit our bank account with full money. Have a look here. We will credit our bank account with full money. And banker will give us the bill. So we will write bills receivable to bank. After that, we will incur noting charges, for which entry is noting charges to cash. And then we will give the bill and pass the noting charges to drawee and ask money from it. So we'll ask drawee for noting charges and bill. So we'll write drawee to noting charges to bill. Opposite entry will be done in the books of drawee, and this entries in the books of drawee, same entries what we discussed previously. Because whether you discount it, don't discount it, drawee will not have same entries. Same entries will not change. You get what I'm trying to tell? The third case is endorsement. In the case of endorsement, the entry that you should see is, what is the entry when you give the bill on endorsement? Have a look here. This is discounting. Oh, sorry. Endorsing. Yeah. So on the in the case of endorsement, what is happening here is you are giving the bill. Okay, you are here. Bill endorsed to supplier. You first received the bill, no? Bills receivable to drawee, you write. Later you give the bill to supplier. Supplier is your creditor. That creditor balance will decrease. So you debit creditor account and you credit bills receivable because bills receivable is your asset. What you give out. If this bill is honored on the maturity date, you will not write any entry. Why? Your creditor will collect money from your debtor. What will you do? Nothing. If in case it is dishonored, your creditor will give the bill back to you. Reverse entry that you previously passed. Previously you gave the bill to your creditor, no? What did you write? Creditor to bills receivable. Bill is going out, asset going out, credit. Creditor debit because liability is decreasing. You wrote creditor to bills receivable. Now you reverse it. You will write bills receivable to creditor. Creditor is giving you bill. Bills receivable account debit, and you should pay money to your creditor account credit. You will throw it back on your debtor's face. So debtor should pay you money. Debtor's account debit. Bill is going out, no? Credit. So debtor to bills receivable. Frankly speaking, what's happening? You took the bill from here, you gave the bill here. So debit credit will get. Only thing is, if you collect money from your debtor, give it to your debtor. So debtor account debit to creditor. In between the carrier is bill. Noting charges also will come. If this guy pays, will collect, but this guy we have to pay. That's on endorsement. Got it? Now the beauty of the chapter
The repetitive questions come from here. How to settle the bill? You know that you need to settle the bill on the due date, you need to settle the bill on maturity date, you know. But you can actually settle the bill before due date or after due date. To settle the bill before due date is called as retirement. Is it called as retirement? Retirement is stopping towards before someone takes. Sorry, what do you mean? You need to pay the money before the bill actually matures. Renewal means like the maturity date has come, but you don't have money to pay. Seek some extra time. Bill is for 3 months, third month end you don't have money. You will ask for additional 1 month. When you ask for the additional 1 month, there is delay in payment, you will compute interest for that 1 month. So when they compute interest for that 1 month, you can either settle that interest amount right now in cash and only keep that bill amount for that 1 month later date. Or you can include that interest amount also in the old bill value and draw a new bill for a new amount. And there are also some questions where the bill will be retired, the bill will be renewed, part of the money will be paid, only the balance part will be renewed into a new bill. That is also a possible case. So this depends upon case to case. There is no pre-decided amount, there is no pre-decided entry. See the question, understand and then write your entry. You get this? Retirement and income. In the case of retirement, I am drawer. I am receiving money before the maturity date. So I am happy. I am happy because he is giving money before the due date. So I should keep him happy now. So I will give him rebate. I will give him discount. It is income to him, but to me it is expense. If the bill is retired, it is expense to drawer, income to drawee. If the bill is renewed, new period, additional period, I will ask him for extra money. It is income to drawer and expense to drawee. These questions have been questioned in true or false 2-3 days of the examination. If you skip this topic, you might end up skipping this one. Don't do that. Based on income and expense for that interest no rebate part. Based on this, the questions had come. I will share the true or false answer sheet on Microsoft Exchange also. Please do that. And another thing is the last day or the day before the exam should not be wasting time doing true or false, capital revenue and all. And all is logic. That's gone into your brain. So don't waste time on that. Only do the rest of the part. And yesterday at 12 o'clock I did not. I did not. I will be there. Today is what day? Friday. So tomorrow by 12 o'clock or 1 o'clock I'll close. By then you finish everything. So why you are supposed to give extra time? If I say we will finish by tomorrow 12 or 1 no, you will sit and do today tomorrow. If I say it will be there till the exam date, you know, there no, we do. It will never finish. That will never come. So today you are running, no, doing so much. Today after the class only, whatever we learned in the class is more than sufficient to attend those two. Take it out. Finish it one shot. One thing will get over, no, 12 marks, at least we'll have that confidence like okay, 12 marks pakka it will come. There's no way that I lose it. You get this? Yeah. And then keep that file with you. You will read it whenever you are like now you study, you sat for 3 hours, 4 hours, you read the subject. Now you want a short break. So you get up and then go away from books, then open your phone, no? Then open this and then read it. There is no break. There is no break. You guys and all, no? See, try and understand one thing. Don't ever take break. People don't take break. People don't take break. This is not the age at which you guys should take break also. In fact, I am also not in the age at which I should not. No. So there is a point of time where you can't work. Then you are forced to take break. There is a point of time where you can work. You can work. Can work. Because no, very unfortunate that if no other being on this planet has to pay. Every other animal on the planet lives on the planet for free except human beings. We are the only people who need to pay money to live on this planet. We are the only people who should pay money to eat food. Dog gets food free. Bees get food free. All other animals get food free. Only we should pay. In fact, we should pay for the food of the dog also at times. sad word. So you have cursed to be born as a human being. So no option but work. No option but to work. So don't take break. Not just now. For the next 10 years, don't expect to take any break. Work as much as you can. So that when you are forced to take break, you can take actually break. Not like a shoe. What to do now? Break. You get that? Yeah. So the discounting amount, retirement amount done. Interest I just explained to you. If the drawer doesn't pay money, call it what? Insolvency, and it will be recorded as bad debts. There are questions where part amount is bad debts and part amount is not. Whatever is bad debts, see now for example I am drawer. I am supposed to receive money. If that guy doesn't pay, to me it is bad debts. To me it is bad debts, expense. But to this person who is supposed to pay money and he doesn't have money, if it is income tax. but we don't call it income. We call it deficiency. What is it? Yeah, it's not efficient. It's deficient. Yeah, it's vitamin deficiency, something like that. And then combination of all of this together comes your amazing case of accommodation. What is it? Extra questions and all we have done. You remember so many extra questions we did in bills of exchange. Yes, sir, you have done all of that. That's the reason you sit comfortably today. That's it. So then last concept is accommodation. Accommodation will be combination of more than one thing. There will be drawing, discounting, sharing of that, and then dishonor, and then retirement, and then renewal, one more bill, and then one more bill sharing and everything. It's basically financial adjustment. Short, if I have to tell you, you just need to get one thing in your mind as to how does accommodation of the bills works this way. Now, I want money, my friend wants money. Both of us go to bank, ask for money. Banker will say, get out. It's not giving us money. We both remember the concept of accommodation, concept of bill of exchange in class. So we both will say, I have an idea. I will draw a bill on you, you accept it. But you didn't sell any goods to me. Say, hey, keep that aside. Don't tell anyone. That I know you know. Nobody else knows. So I will sell goods to the other person. He will buy the goods from me. Sorry, I will not sell the goods to the other person. He has not bought goods from me. But I will raise a bill on him as if I actually sold goods to him and he has to pay me 1 lakh rupees. He accepts the bill, gives it back to me. Now I have a bill of exchange worth 1 lakh rupees. I will take it to banker, give it to banker. Banker will deduct 5,000 rupees towards discounting the rest. Bank gives me 95. That 95 say you take 42,500, I'll take 42,500. On the maturity date, banker will come to my friend and ask 1 lakh. I will pay 50,000 from his pocket. He'll put 50,000. Will pay the bank 1 lakh. Close it. This is accommodation of bill. It's a financial adjustment between parties. Do you get this? Now, what if on the maturity date that guy doesn't have money to pay? He doesn't have money to pay. I will give him 50,000, but he should, for his side, he should put 50. No, that money is not there. Simple. He will draw one more bill on me for 1 lakh. Will discount to the banker. Banker will give him 50,000. We both will share 42,500, 42,500. You get that? And from that 42,500, you put another 7,500, you give 50,000 and close. Again, on the maturity date, bank will come and ask me 1 lakh. Then I should have put 50,000. He should give 50. Then I'll ask 50. That guy doesn't pay. Again, simple. I will draw one bill on it. You get what I'm done. So there are questions where 2 bills were drawn. One was dishonored. Again, on the dishonored date, they drew another bill type. So it needs to be seen as a separate concept. Break it into smaller pieces. You will find it very, very easy. It's the same thing what we read till now. Accommodation need not be read separately. Accommodation need not be read separately. It's only simple drawing the bill, retiring the bill, renewing the bill, dishonor, and then bad debts. Same entries. But when they get that bill discounted, what is the ratio in which they need to share that? So that computation becomes little interesting, not tricky. Little interesting. If you can do that computation in the form of a working note, rest of the problems become easy. If you remember, we used to do working note like this. Everything should be shared in the same ratio. Write the amount, write the party, share it in the same ratio. Put that ratio, then discounting charges, bill proceeds, maturity proceeds, discounted proceeds, everything same ratio. Just that ratio may be split, it becomes easy. Once you do this working note, no, this is like very easy question to do. But drafting the working note, we need to understand. And we didn't do different types for everything. For every problem, working note was same kind of bill. Please do solve a problem on bill of exchange today, and you will understand how to go about it later. So can I say that the topic of bill of exchange is Kadam? Pakka? Yeah. If I would have had more time, I would have spent more problems so that. Okay. Promisor note is simple. See, I am drawer, he is drawing, I am seller, the other person is buyer. I draw the bill, give it to that person signs the bill and then gives it to me. That makes me drawer and the other person drawing. I am seller come drawer, the person who buys the goods is buyer come drawing. Now, I am giving him an unconditional order which you should accept. Do you agree with me? When I am giving him unconditional order to sign, this guy will like, hey, don't order me. Parents only don't order. What you are order? I don't feel good listening to orders. I have trauma and all. Yeah, don't do that. I don't take orders. I become angry. So you tell like, take order. So when he tells that, no, so then what do you do? So this is, I will only make one promise. He will take one paper. In that he writes, I promise to pay you 10,000 rupees. And then he'll hold like this and then, hey, you are keeping your fingers closed like this. No. People do when they make promise, they keep like this and then they say like this, and the promise is broken. Nothing is. And bench wood it ಕೊಡೋದಾ ಮೆಟಲ್ ಇಟ್ಕೊಂಡಿದ್ರೆ ಅದು ಪ್ರಾಮಿಸ್ ಕೌಂಟ್ ಆಗಲ್ವಾ ಕಬಣ So like that, he only makes one promise. He only makes one promise and then gives. So listen, if seller prepares a document and then gives, and the buyer accepts it, it is bill of exchange. Now, if buyer only prepares a document and then gives, it's a promissory. In a promissory note, there is no order, there is only promise. In this, no, I am maker. I am maker. The buyer, I am maker. Buyer is maker and promiser. Buyer is maker and seller is the one who is receiving the promise. Come here, Sarvesh. Now he is the buyer. Okay, you stand here. You are making the promise. How do you make the promise? You will pay. You promise that?
I will pay the money.
You will pay the money. Have a quick. So he is making the promise. See, he is giving the promise. Give the promise and he is giving the promise. I am collecting the promise. So he is promiser. I am promisee. And he is putting the promise. He is the maker who made the document. I am the makee who is receiving the document. And who should pay money? Who should pay money? He should pay money. He is payer. He is payer. I am payee. One was receiving the money. Do you get what I am trying to tell? If it is bill of exchange, if it is bill of exchange, I am drawer. I draw the bill, give it to him. I am. He is drawee. Now after that, he should give me money. He is payer. I am payee. So I am drawer and payee. He is drawee and payer. With regard to bill of, with regard to promissory note, I am promisee and payee. He is maker and payer. Get the difference? Very good. And the point is, now listen. Difference between bill of exchange and promissory note. I gave him goods, he signed the bill. That bill is with me. I can keep that bill with me. I can discount it with the banker, or I can go give it to somebody and say, okay, I'll give the bill to you. I should give you money now. I'll no more give money to you. You collect money from him. I can do that. I can do that. Endorsement. Endorsement. Is that possible? Yes. Holder in due course. Holder of the bill. You read Negotiable Instrument Act. Foundation. Not there. There. Inter, okay, fine. Foundation, you don't have it. So that's possible. It's a negotiable instrument. What is it? Negotiable means what? Transferable. Negotiable means what? Whereas if he makes a promissory note, can I give it to anybody else? No, promise on matter nanige. He made the promise to me. He touched my hand, not your hand. So I cannot promise. Okay, fine. He gave me promise. Take that one. I can't pass that promise to you. Promise is between two parties. It will be between two parties. I can't pass on the promise that he made to me to somebody else. Okay, what I'm trying to tell, yes or no. So promise is person specific. Can't pass on the promise. Get this? So promissory note is not a negotiable instrument. Promissory note is not a. Bills of exchange is a negotiable. Thanks. Get that? Very simple. And whenever the question is on promissory note in average period or account current chapter, don't add 3 grace days. If you want to add 3 grace days, you do add, but please do write a note saying that it is considered that promissory note has 3 grace days, and then you just write. Yeah, because some questions in ICA material they have added 3 grace days. Some questions they have not. In the class when we did, I think I added 3 grace days. In one of the 10 and 10 when I gave, I did not add 3 grace. Yeah, I also did once like this, once like that. I am sorry, but I think hardly people do. Except for people from Shisha. People did. Did? There are reasons why you couldn't take. Yeah, so what was I trying to tell? Only thing is, whenever there is promissory note and you need to compute average with account current, you can consider 3 grace days or you need not consider 3 days. Whatever you do, just write one note and then do the same. You get that? Usually they mention in the question only whether to take or not. Done with promissory note. Shall I go to the next part? Bills of exchange done. Then shall we finish goods sent on return or approval now? Small topic but effective. You know why? See, this is a small topic. People think of skipping this topic. Yeah, small topic, sir. This is more important than bills of exchange. You know why? Have a look at it. 5. Whenever it comes, it's come for 5 marks. And it's come very often. And this is a topic which you can finish in 1.5 2 hours. Not now. Now we will not spend 1.5 2 hours. Usually, even if you do end to end, no, all the types of problems, all the past exam problems, RTP, MTP, and exam problems, so you can finish it all in less than 2 hours. This specific topic. And when it comes for 5, and it is not been optional question. It's always been like question number 3 there will be option. Meaning question number 3C1, 3C2 one of it you can write. So average unit account current, whenever account current has been asked, it was optional question. But the question on goods and return of role was not optional. So it's one place from where you can get easy marks, full marks, and not much time to be spent to read the chapter. Get that? One a good sent on return or approval. We'll finish it but quick. So 5 marks is where it's come, and every time they've asked it, they've usually asked journal entries, but they can ask multi-column journal also. If they ask journal entries, you'll be little worried. If they ask multi-column journal, it's even more easy. Question table, you just present it differently, your answer is over. Yes. And how many of you finished that topic? That actually 1.5 hour, no, entire video. Half an hour's 3 video is what we've updated. I'll take a minute. Hey, rest of you have not finished. How many of you have finished? We did not do this topic in class. We gave this topic in recorded format. Not many. Okay. What speed may you saw the video? 1.5x? Normal speed only. Usually people watch YouTube videos at 1.5, 1.7. I myself went fast so people would not be I take a short break of 2 minutes and people start talking. Start talking so loudly. So bad. Yeah. Come on, let's get going. Let's discuss goods and return or approval. Don't worry. It won't be visible very clearly. Yeah. Okay. We were discussing. Wait, wow. Hey, why everyone's taking break? Topic is not interesting. I thought I'll come there behind. Okay guys, come on. Let's quickly discuss the topic of goods sent on return or approval basis. My remote is not working. Okay guys, listen. We'll now discuss goods sent on return or approval basis. So usually you have a buyer, you have a seller. Listen, stop talking, respond, stop talking. Yeah, there is a seller, there is a buyer, you give the goods to that party and that person gives you money immediately. Over, no? But maybe because of the fact that the product is very new or the seller is very new to the market, it's not easily approachable and then sell so many products to the market. So what you do is, you don't really sell the goods to the person. You give the goods to him. He's not willing to buy. So what you do is, you give the goods to him and then say, hey, you don't have to buy. You keep it with you. Just see. If you feel like buying, then you pay me money. Or it's not actually for the room consumption. It's for further sale. So you give the goods to the party and then say, you don't sell it to anyone. You keep it in your shop. If in case you sell the goods to somebody, then you give me money. If you cannot sell these goods to anybody, give the goods back to me. Take it. If you sell, you make profit. If you don't sell, you'll take the goods back. So there's nothing that you're losing. Get that? That's how we convince the party to basically take the goods. So sale of goods on return or approval basis, man. You have the ownership of the goods and you only transfer the possession of the goods. Goods are sent, not sold. Goods are not sold. And the person who has received, no, he has only received the goods, not purchased the goods. Goods are received, not fantastic. Then after this, the ownership of the goods is still with the sender. Sender has not the possession. However, the person who has received the goods has the possession, not the ownership. Get that? Now, who should record these goods at the year end in their books of accounts? sender, not the buyer. Now this sender, the person who sends the goods, no, he can account for these kind of transactions depending upon the quantum of transactions. Depending upon the quantum of transactions. Have a look. Should he pass the sales entry when he send the goods? No, he need not pass. He should actually pass the sales entry when the other person accepts the goods. Get what I'm trying to tell? But optimistically, this person might choose to write the entry. So should he write the sales entry? Answer is no. You should write the sale entry when the goods are sold. But in this case, goods are only sent. It is not sold. And now tell me, this guy, should he, what to say, as he received the goods, no, can we call it purchase? No, he has an option to purchase it. So he can either approve it or deny it or return it. He can either approve it or deny it. However, it is not being provided with too much time to do. He can given with a specific time frame. So what if I give the goods to him? He keeps it in his shop. He neither sells it nor returns it. My stock is getting blocked. No? If he returns it, I'll try to sell it elsewhere. If he accepts it, I'll receive money. He is not giving the goods back. He is not accepting it also. So my stock is getting dead now. So I would say I'll give you 1 month time. How much time? 1 month time. Within 1 month time, you return the goods to me. Or after 1 month, I will not accept returns. You get what I'm trying to tell? So it gives a specific period. So you can either accept it or return it within the specific period. Within that specific time period. If the time has elapsed, then it is assumed to be accepted, or it doesn't have an option to return. If the time lapses, then such a person doesn't have an option to return the goods. Get what I'm trying to tell? He has no option but to accept. Now, when should the sender write the sales entry? When the other person has accepted it or the time to return has lapsed. Now, assume that I send the goods to him on 15th of November. Do I send the goods to him? I will write the sale entry when he accepts it. That might be 20th of November, that might be 30th of November, that might be 10th of December. If he doesn't accept and he doesn't return, 15th of December I will write my sales entry. Why? Now he doesn't have an option to return. Do you agree with me? So as a sender, I will write my sales entry when he accepts it or when the time to return has. The time to return has. Very good. Now going further ahead, the accounting for this can be done based upon the quantum of transactions involved. Now if you very rarely, avaglo, amavasage, unimige, ondondu you are sending not return on approval basis. Very few transactions. Then you can do normal sales book entries. When you have frequent transactions, get that? Means like weekly 1-2 transactions or daily 1-2 transactions. You have quite a good number of transactions happening. When a good number of transactions are happening, then you can prepare a multi-column journal. What can you prepare? Whereas if the transactions are too frequent, too many, numerous transactions, you do a lot of transactions, then you need to maintain one separate day book, sales day book and separate returns book. Yeah, everything is in fact easy. In fact, the first one is only little tricky. Very few transactions are there, no? That is only tricky. Multi-column journal and numerous transactions are more easier to account. I'll show it to you. Don't worry. When the transactions are very few, it will be treated as what sale? Ordinary sale. When I told frequent, what do we prepare? Multi-column journal. You get that? Then numerous transaction, we prepare a separate day book, sales book and return book. Come on, let's see. What is the entries that we should write when the goods are sent very rarely? We have two options. One, we can be very optimistic or we can be very, what do you mean by optimistic? Optimism. Optimism is a positive attitude, positive thinking. What is positive thinking? Like when you show a bottle of water and then ask what is it, then you say it is half full. You are positive attitude. If you say half empty, then it is. So now chance. So we'll keep it a secret whether we are optimistic or pessimistic. But I should know whether I am optimistic or pessimistic. I should not know. Half full, half empty. 1/4 full, realistic. So let's see. So the sale entry is passed at the time of sending the goods. So this is optimistic case. So in this case, no, the sender is optimistic. It's like our goods, no, they'll accept. Yeah, they're like that. They're very optimistic. So this time, no, you will pass the sale entry when the goods are sent. When the goods are sent. When the goods are sent, what is the entry that we should pass? What is the entry that we might have passed? Sales, debtors account debit to sales or trade receivables account debit to sales. Now when these goods are sent and then you recorded it as sale, then there are two possible scenarios that can happen. One, these goods are approved. Two, these goods are not approved or denied. If it is approved, what is the entry? Rishabh. If it is approved at the same price, do we write any entry? Why? No entry. Wait, we already wrote entry. No? When we sent only, we wrote the entry. When they accept, do we write entry? No, we will not write. We say, I told you no, and now again you will there. So we just tell that you already written the entry. If it is accepted but at a higher price, accepted but at a you sent it at 100 rupees. Get that? You didn't know the value of your goods. You sent it. That by the time before that guy calls up and then says, yes, I accept the goods, you had huge demand from everyone for the goods. When that guy calls and then says, yes, sir, I accept you. No. I accept the return marketing. Why? I have another person who will accept it for 150 rupees. So return the goods to me and sell it to somebody else. Then that guy will say, oh, sir, why you are giving to one and some other person for 150? I will only give 150. So now he's giving 50 rupees extra. Previously, when you wrote the sale entry, trade receivables to sales, what is the amount at which you have written this entry? We have written the entry at 100. Now it's accepted. Accepted at a higher rate. So we have written the previous entry at 100 rupees. Now we should increase that sales entry from 100 to 150. So what should we do now? We will pass the same entry once again. Same entry, trade receivables to sales. But we'll pass this entry only for the differential price. Previously, we recorded sales for 100. But accepted price is 150. 50 rupees increase price is there. For the differential increase in the price, we'll pass this entry, trade receivables. You get this? Next, another case is I call up that person to ask, sir, did you accept? You say, no, sir, return ಕಳಿಸಬೇಕು ಅಂತಿದ್ರೆ. Sir, please, sir, don't do like that, sir. Goods you kept for so long. Send it back home, send it to, please don't do that. Okay, I can accept it, but 100 rupees, I think it's little too much. Can you make it 90? Can you make it? And Amazon 90 rupees. 90 rupees, no, it's okay, fine. I accept. So if I accept at 90, what has happened? Previously, you written the entry at 100. You get that? So now is accepting it at what rate? 90. So this entry, whatever I have written at 100, should be revised to 90. So what did I reverse that entry? For 10 rupees. What? So that the net impact will become 90. See this, I'll write sales to trade receivables for the decreasing price. So that the net effect will become 90. Sorry, this is not corrected. Sorry, not yet corrected. Not yet. It is sales to trade receivables. It is sales to trade receivables ಬರಬೇಕು. Then ಅದಾದ್ಮೇಲೆ ಚೇಂಜ್ ಮಾಡಿದೆ. ಆ ಚೇಂಜ್ ಮಾಡೋದು ಇನ್ನೊಂದು ಲ್ಯಾಪ್ಟಾಪ್ ಅಲ್ಲಿ ಇದೆ. ಅದನ್ನ ಎಕ್ಸ್ಪೋರ್ಟ್ ಮಾಡಿ ಈ ಲ್ಯಾಪ್ಟಾಪ್ ಡ್ರೈವಿಗೆ ಹಾಕಿ ಡ್ರೈವಿಂದ ಡೌನ್ಲೋಡ್ ಮಾಡಿ ಇದರಲ್ಲಿ ಅನ್ಲಾಕ್ ಮಾಡಿ ಓಪನ್ ಮಾಡಬೇಕು. This is a little complex. It's not I can double click here, edit it. It will not work. It's a little complex software. Too much of headache it will give. Small things is also very irritating. One font size will not be same. Every item when you enter, font size will be different. Font style, font size, font color, alignment, line wise, everything. So everything is little irritating in this. But this is a very nice place for you to pitch your entire presentation. Whatever you want to do. It's like a kg cardboard. You take one big kg cardboard. It's like that empty canvas. You can write anything from anywhere. You can write here first item and first item to second item. You can connect here. Here you can put something inside this, something outside this, zoom out. So you can put anything anywhere. It's a very nice presentation software, but very irritating to use. Very irritating, not very user friendly. Yeah, because smallest of the changes if you have to do now, it will take a lot of time. Now I can't do this change. I need a lot of time to make this change. Entire presentation has to be redrafted, and file size is also very big. But you guys like it, no? It's good. I'm just trying to do the entire sentence. I did a couple of chapters from Inter also already like this. 3 chapters from group 2 done, 2 chapters from group 1 done. Now once today's class is over, foundation for now I'll keep it aside. I'll not do anything for foundation. Try to start working on some Inter presentation. Yeah, let's go to denied, shall we? Yeah, okay. Now if it is denied, then what should we do? We should reverse the entry that we have passed through. Previously we recorded as sale, no? But is it sales? So we'll reverse it. Shall I write sales to trade receivables as the denied sales entry? That's it. Denied at lower rate. Denied means denied. Lower, higher, nothing. Over. This is the entries that we should pass if the goods were sent, and sale entry is recorded when the goods were sent. Next case is when the goods are sent, no, then you didn't write the entry. But before this, at the end of the year, if the goods are neither accepted nor returned and the time has not lapsed, you need to pass certain entries. I'll tell this. So we sent the goods with the period to return for how many months? 1 month. I sent the goods on 15th of March. When did I send the goods? When I send the goods on 15th of March, the other person has the time till 15th of April to either return or accept. Do you get it? Now he has not accepted it. He has not returned. We're on 15th of March. So we're on 31st of March. What should I do on this date?
On this date, I need to prepare my financial statement. I need to prepare my, if I don't do anything about this goods return or approval basis, you know what would happen? I have previously passed the sales entry. I have previously passed the, but is it sales? It is not. So I have wrongly recorded sales. Because I have wrongly recorded sales, my sales has gone up, my profit has gone up. This is incorrect. So I need to rectify my sales. I also need to rectify my profit. So what do I do? The sales entry which was passed previously is incorrect. So we should reverse it. Correct or not? We don't possess the goods. Correct or not? But own it. We have wrongly recorded as sales. These are the points that we should remember. We don't possess the goods with us, but we have ownership. And the next point is we have wrongly recorded as sales in the past 12 bits. So first we'll reverse the sales entry. What will we do? What is the reversal of sales entry? The sales entry is trade receivable to sales. Reversal will be sales to trade receivables. We'll write the entry sales to trade receivables. This will be done at selling price. The next thing is we should start including the stock into our books of accounts. We'll start including the stock. When we actually count the stock, no, our godown on 31st of March. Is it in our godown? It's in the recipient's godown. It's not in our godown. It's in recipient's godown. But the stock will belong to me or him? Belong to me. I should include it in my inventory. So valuation of inventory we do now. We count it and then include it in our stock. Do we do that? For that, what would be journal entry? There is no journal entry for that. It's part of reconciliation statement. But if you want, we can write one entry. What is it? Stock with customer is our asset. Stock with customer is our in trading account credit side closing stock we had no. So we'll write two trading account. So this is like a entry, not actual true entry, but we can still write one. Stock with customer account debit to trading. This will be the entry. Understood? But this entry should be at. This entry should be at. I should write this entry at cost price. You guys get that? Everyone. Great. Fantastic. Now, sale entry is not passed at the time in the books. They are very pessimistic. Let him say yes. Only then we will write the entry. Only then we will write the first case may we send to the goods. Then only we wrote the entry. First case may be somewhat like this. Yeah, you will write the love letter at the end. When you go give it now, immediately you go book the marriage hall, caterers, decide the optimistic. Get what I'm trying to tell? You decide the names of the kids also, everything very optimistic. But second case, it's not like that. What will that person? You are waiting. Will it be a yes? Yeah or no? You just wait for it. So this is the pessimistic case. So when the goods are sent on sale or return basis, you don't write entry. When the goods are sent, no entry. Entry is not written when the goods were sent. However, if it is approved, what should we do? We should write the entry. If it is approved at a higher rate, we don't care higher rate, lower rate, whatever rate they are, that rate may write entry. Simple. Write the sales entry at same price, higher price, lower price. At that price, you write the entry. Trade receivables to. Understood. Next one. What if it is denied? Accept Matila. Then no entry. Very good. No entry. Hey, there are those two guys who didn't come back here? Dhanush? Breaking over 5 minutes, 10 minutes. My God. Okay, pa. Shiva, I saved you both, Sarige, kashtapat sulle ಹೇಳಿದೆ ಗೊತ್ತಾ? Yes. So at the end of the year, what should we do? Listen. At the end of the year, we need to do some adjustment. Now listen to me. We own the goods, but we don't possess it. Have we written the wrongly sales entry? No, we have not wrongly written sales entry. If we had previously written sales entry, we were supposed to reverse that sales entry. Because we have not previously passed sales entry, we don't have to reverse it. However, that inventory still belongs to us, but not in our stock. So we include it into our stock, for which we need to write the stock with customer. It's actually not an entry. That's just an adjustment that you need to do in the books. But in this chapter, they expect you to pass journal entry. So we do this. What is the entry? To reverse the sales, there is no entry. However, to recognize the stock, we'll write stock with customer account debit to trading account as the entry. Got it? Yes or no? Answer? Yeah, we'll write the entry in the exam. The question comes, we'll write the entry. Got it? Yes?
No. It's not actually stock with customer account. बोल के there's no ledger account. We'll straight away adjust in books of accounts in practical. Exam में when they ask questions, there is marks assigned for this. You would have to write them. Got it? Okay. This should be at cost price. Now listen to me, please. Stop talking. In the next year, if the goods are, we'll say as of the year end, the goods are neither accepted nor returned, and the time to return has not lapsed. For this, no. What did we do? We reverse the sales entry and we wrote the stock inclusion. The next period, what will be the entry if the goods are accepted? Should we write sale entry? Yes. If it is accepted, we should write sale entry freshly. Why? Previous sale entry, whatever we returned, you reverse, no. So now we should freshly write a sales entry. What if the goods are returned? No entry. Why? Though they have returned or not, we already reversed, no, then only. At the year end, we have already reversed. So if they give it back to us, whatever entry we did, that actually came true. So we don't have to do anything. And this is same in both the cases. This is same in, see, both the cases are there, no? See, for both the cases, it is together. Jote yali. For both the cases, there's nothing specific for each case. So either of the cases, whether you are optimistic or pessimistic, next year you will become a realistic person. If the sales are made, you will write sales entry. If the sales are not made, returns is made. You will not write any entry because it's already reversed. Now let's see the next part, sale or return journal. The most easy part in the chapter. You know what? Simple. You prepare 3 columns. One is goods sent, one is goods accepted, one is goods returned, last one is goods balance. Meaning either accepted nor returned, time has not lapsed. As simple as that. See here, first one will be goods sent on return or approval. Next one is goods returned. Amele goods approved. Lastly, balance. Each of me will write date, particulars, amount. Date, particulars, amount. Date, particulars, amount. Last one may only amount. What date was it sent? To whom was it sent? What is the value of the goods? What date was it returned? Who returned? How much is the value of it? What date was it accepted? Who accepted? How much it did? What is it that is neither accepted nor returned and time has not? To write this, the problem is over. Then you have one more thing called as what? Our goods sent on return or approval, daybook or ledger. So this is even more simple. You prepare one ledger. Debit side, credit side. Sale or return journal. Credit side, you will write sales. Date, particulars, amount. Date, particulars, amount. ಇದಕ್ಕೆ ಸ್ವಲ್ಪ time spend ಮಾಡಿ. I spent little time on this, so this presentation is better than anything else. Yeah, there is one journal entry error, but otherwise the presentation is nice. So date, particular amount, date, particular amount. First you will write the goods sent on return or approval. If it is accepted, you write sales. If it is not accepted, you write returns. If it is neither accepted nor returned, the time has not lapsed, you will write balance. Same you will write on the credit. Accepted on the debit, not accepted return on the debit, balance also on the debit. That's it. This is even more simple. What if there are 4 parties, A, B, C, D? You will write here 2 sundries, goods sent on return or approval, A, B, C, D. Individual amounts in either column, total. If it is sold, A and B accepted. It is sold to A and B. You will write on the debit side 2 sundries, sales A and B. C return, you will write 2 sundries. Sundries means there are like 4-5 people. All the people's name together, we call it sundries. You will write 2 C account and write the C amount. C has not accepted, not returned. Time has not lapsed. Balance carried on, D, whatever the amount, and then write it. Garage? Yes or no? That's it, guys. By this, we are done with sale of goods on return or approval basis. I'll show you a couple of questions. How will it look like? Hey, these questions, all the 10 solutions I've updated in every sheet, okay? Morning batch people, morning batch, evening batch people, evening batch, Jayanagar people, Jayanagar, Sheshadipura people, Sheshadipura, every place. Yeah. See, first set of entries, debtors to sale, sale entry, reversal, sale to debtors, and then year end approved, no entry, and then year end may reversal entry, and then stock entry. You get that? Next year may accepted, no separate entry. So you've done problems like that, and I'll show you multi-column journal. See, multi-column journal. P, B, Q, D, E, R. You send it to all of them. P and Q has returned the book. So you'll write P and Q column return. B, D, E as accepted. You'll write B, D, E. And then lastly, R as neither accepted nor returned. Dates are not given as to what dates will be accepted or returned. This can become a little tricky because
certain times you need to also remember the time period added to the date on which you sent to identify whether they are accepted or not. Let's say it is sent on 1st of October with 1 month time. So they won't give any information. And you are asked to prepare this account on 30th of November. Then what will you do? On 30th of October, you will call it sold. Because the time to return has lapsed. So that's the only thing that you should remember. Otherwise, it's quite easy. And for the same thing, now tell me PBQDER, total goods sent is there, total goods returned is there, total goods accepted is there. You write it in the form of a ledger that will look like this. Credit side, you will write everyone's name. Debit side, you will write accepted, returned, and balance will be balance. R will be balance. Right or no? One are accepted. BDE accepted. Have a look here. BDE accepted. 23-1. P and Q 15 plus 18 returned. So that's it. Doesn't it look very simple? Isn't it actually simple? In fact, it is simple. In fact, it is simple. As simple as that. Can I close this? Shall we go ahead? Yeah. So examination problems are also covered up in this. So one question where they had asked, once when they had asked me, they had asked for multi-column journal. And once they had asked a book. So you can prepare it either ways. Not difficult. Easy to do topic. That is the reason I don't want you to skip. Takes very less time to read. Very easy to do. Exam also takes very less time but gives good 5 marks in the exam. Gives good 5 marks in the exam. Will you do this? Yes. So what do we start with next? Average rate account current. I tell you some important points to remember with average rate account current. Yeah. Before that, will you take TOEFL on consignment? Yeah. Consignment over, no? So what should you take on? Bills of exchange. Bills of exchange. I'll also get a short break. I will not go sit. I will just run around and then see what are you all doing. This is bills of exchange. Are you getting the text bills of exchange or no text? Text is not there. So I don't know why. Panta. I thought he's using some bulletproof jacket like this. You know, right? When chief minister and all are walking, they take one briefcase next to them and walk. No, that's actually not briefcase. You open it like this, it will be shield. Someone starts shooting, they open it, it becomes 3. Hey, I did till break to you people. Everyone's taking. How can you people take more breaks than me? I don't understand. Welcome back to post-break session. And in the pre-break session, we discussed consignment में few questions. We also discussed bills of exchange and goods sent on return or approval basis, or goods sold on return or approval basis. Let's do the other two topics that is there in our chapter 6. The other two chapters what are there are average due date and account current. If you observe, average due date has come in every attempt for 5 marks. Every attempt itself 5 mark question. But if you remember, so if you observe that May 19 to January 21, it was optional question. So you usually know that there are 6 questions. And then first question is compulsory. You need to write 4 out of the next 5. But one of the question will have internal choice. One of the question will have, by internal choice, what I mean is, they give 5 sub questions and ask you to read any 4. They give 5 sub questions or 4 sub questions, and one of them will be choice. Some attempts may what they do is 3A, 3B. 3B के अंदर they give 3B1, 3B2. There will be 2 options. You can either answer 3B1 or 3B2. You cannot write 3A and then 3C, 3D and then skip completely 3B1. Within 3B they have given 1 out of 2 questions. Such kind of a choice was basically given. And usually this was a part of the optional question. Get it? And what is surprising is June 2022, what attempt happened recently. This is the first attempt where there was no question on average rate. And this is the first attempt where there was no question on average rate. Otherwise, every attempt there was there. And in December 21, they asked average rate purchase and sale. Like 2 people are there, you purchase goods from that party and you also sold goods to that party. So you prepare two different tables, take difference in total product by difference in total amount. Such a question was asked the attempt before that. Talking about account current is asked like it's a different pattern. There are two times where this question has not come, but majority of the times whenever this question has come, it's again optional question. It's again optional question. So usually the option was falling between average due date and account current. So what I would say, in case in this attempt, so looking at the pattern, average due date or account current question it comes, it will be part of chapter, sorry, it will be part of question 3. And previously what we discussed, consignment was also usually part of question 3. So now we are easily able to place a pattern in our mind that when we get the question paper in the exam, you see question number 3, it will be from this chapter, the special transactions only. And bills of exchange when we discussed, that was also basically from, see, goods sent on return or approval also usually 3. And then bills of exchange also usually 3. So question number 3 is special transactions. Question number 3 is, so you cannot, this should not be done. I would definitely not recommend anyone to skip any chapter. But if you skip consignment but you are good at average with account current goods sent on return or approval, that will be like waste. Because you cannot skip that but write the others. You have to skip an entire question that way. So when you choose the questions or when you choose your topics also, you need to do it little wisely. You can't randomly skip some this topic and that topic and skip. No, you can't do that. So if in case anyone is planning to skip chapter of consignment, no, you will lose out on marks from average rate, account current, goods sent on return on approval basis also. The other easy units also you lose mark. Do you get that? Yes. So on one side you might feel like skipping consignment. But the other side, average with account current goods sent on return or approval will force you to study consignment. So I will not tell skip anything, but plan it wisely if you are planning something. Yeah, account current recently whenever 2 attempts was asked, it was both attempts that asked product. Whether, yeah. So let's quickly understand or revise the topic of average unit account current and then go to the remaining topics. Guys, I hope you are happy with the coverage that we're doing. I totally say that my plan was like to finish all the topics, all the 10 chapters, but pretty unfortunate that we have not come to a place where we can touch all 10. We can touch all 10, but I'm not able to do exactly what I initially planned for. There's a little bit of loss of hours, not your mistake. I'm not blaming you people. I'm telling you not to blame me. Not my intention that we lost. I didn't intentionally plan it in such a way that we use that 1 hour today, 1 hour yesterday, 1 hour in the morning. Yesterday we last about 2 hours. First 1 hour we couldn't take. The session beginning got a little late. I was here by 8, but we couldn't start on time. Little technical issues anymore. And little later also we lost about 35-40 minutes. Sad. And then today again we lost about an hour. Not intentionally. I didn't plan for it, but it did happen. So sorry from my side, but don't look at me like I did that loss of hours for you people. Yeah. But I hope it's fair enough, whatever the coverage is. Yeah. So we'll first do average due data and then we'll come to account current. So there are multiple bills which needs to be settled on multiple dates. We're trying to find the average of these due dates in such a way that if we settle the bills which are due on multiple dates, multiple amounts on one day, such that there will be no interest payable or no interest receivable. There are several bills, several due dates, several amounts. We have to pay different amounts on different dates. We don't want to make so many different payments. We want to make all the payments on one day. And that date should be in such a way that there should be either an interest payable nor an interest receivable. Because if the date of payment is beyond due date, you need to pay interest. If the date of payment is before due date, you should receive interest. So we want to pay on one day, but don't pay interest, don't receive interest. That's what gives the origin of the concept of due date. So in order to take due date, see if you have to take average of anything, average of 5 numbers, add everything, divide by 5. You get it? But if you have to take average of 100 numbers, what do? You check if there is any repetition in the numbers. Then you write x and then frequency, how many times does the number repeated. And then do x and summation of x by n. Capital N is total of f. That's like total numbers, basically 100. You can do that way. But if you have to take average of dates, no, you can't add all the dates divided by months, we'll add and then divided by. That's not possible. It's a different metric altogether. Get what I'm trying. That is where we see what amount is due on what date. Take the product of a common date to the due dates with the amounts. Take the total of the product and then divide by total of the amount. Whatever we get, we add it to the base, whatever we kept, so that we'll arrive at the answer. So the basic formula that you people must be aware of. I usually teach the concept, but unfortunate that we don't have much time to. The concept that we use or the formula that we use to arrive at the answer in this case is base date plus total product divided by total amount. So base date is the earliest of the due dates available. Base date is the earliest of the due dates. Because you have 5 due dates, among the 5, what is the earliest of the base date? Earliest of the due dates. You will pick that as the base date, and from that base date to each of the due date, you will identify what is the period. What is the period? Against that period, you will multiply the amounts and you will find the product. Take the total of the product, take the total of the amount, divide one by the other, and add it to the base date to arrive at the answer. That's what we do. Let's get this. Now, sir, can we pick a date other than the earliest due date as base date? Absolutely yes, you can do. So, but why is it that we take the earliest date as base date? The reason why we take the earliest of the due date as base date is if you take a date other than the earliest due date. For example, the due dates are 1st of April, 1st of May, 1st of June, 1st of July. If you take 1st of May as the base date, you compute period from 1st of May to 1st of April, period will be minus 1 month. And for 1st of May due date, period will be 0. 1st of June, 1 month positive. 1st of July, 2 months positive. So your period will be negative for some, positive for some. Product, negative for some, positive for some. Why? Chuma irritation. So take the earliest April 1st as the base date. So for April 1st base date, no, due period will be 0. For May 1st, it is 1 month. For June 1st, 2 months. For July 1st, 3 months. So you can take the product is all positive. That's the only intention. And whenever you take due date averages, no, always remember to take the maturity date. Though the name of the chapter is average date, what we usually refer to is the maturity dates average. Get that? So sometimes in the question they straight away give you maturity dates. Sometimes in the question they will give you the bill date and also provide you with bill period. They provide you with bill date and bill period. It is your responsibility to find the maturity date and then take the period base date and then find the period product and then the amount. In certain cases, it will be purchase sale transactions and all. If it is purchase sale transactions and all, you don't have to take the bill period or anything. Straight away, whatever the transactions are there, those are the due dates. From the due dates you identify. But in some cases, for purchase sale transactions also, they would give credit period. They will tell 1 month credit, 2 months credit and all. Meaning the purchase is made today, but the amount is not due today. Amount is due after a month. So for the purchase date, you add a month and then from that particular date you start computing your averages and then what is the period and total product total amount whatever. Get it? Yes or no? Very good. So this can be done in this way. See, basically, if you take the earliest, this is a basic question. This is question number 1 from your ICA material. 3rd July, 2nd of August and 7th of September are due dates. We take 3rd July as the base date and then find the proportionate period. Take the product, total product by total amount, then you will arrive at the average due date. Now, an important part that you need to remember here is when you arrive at this, okay, base date is 3rd of July, you need to add 40.86 days. Always remember 40.86 will be rounded to 40. What if it was 40.25? 41. 40.25 also will be rounded to 41. What if it was 40.2? 41. Why? See, it is days. It is 40.2 days means 40 complete days plus 0.2 of the next day. So you should always round up. This is not money. So I should give you 2 rupees 40 paisa. I give you 2 rupees. You are fine with it. But I want 2.4 days to finish some work. You will finish only on 3rd day, no? You will finish only on certain things you can't do round up. You cannot do round up. You should only do round up. Round up means rounding to next number. Even if it is 0.1 to the next day, it is next day only. Get what I am trying to tell? So always round it up to the next number. And when you have to add 3rd of July plus 41 days, I don't know how you do. I'll tell you what is effective and easier method. Always write this DD YY format. Date, month, year. 3rd of July 2022, add 41 days. If they give days, add it in days column. If it is months, add it in months column. Add 41 days. If you add 41 days, what does it become? 44th of July 22. Do we have 44th of July? We don't have 44th of July. July has how many days? So deduct 31 from that. And you will be left with 13. So after 31 days, it becomes August. After 31 days in July, it is August. When you deduct 31 days in the month column, in the day column, add 1 to months column. This will become 13th of August 2022. You get this? Some people remember like this, right? 31 days minus it. You do all that calculations. It will actually become little irritating and might create some element of
probability of doing an error in your answer. So let's not give any room for that. So always write it like this. So if this is not part of your answer, you don't have to show it in the exam. But I would say whenever you're stuck, better off do it like this so that you end up getting the correct answer. And yeah, this is a better one. Have a look here. 23rd of December is the base date. We need to add how many days to it? 37.76. We rounded it to 38. When I add 38 days, 23rd of December plus 38 comes to 61 days. Is it 61st December? After 31st of December, December is over. So I will add 31 from 61 and add one to months column. So it will become 30th of 13 month 2007. But is there 13 months in 2007? No, there is only 12 months. So after 12 months, it will become next year. So I will do minus 1 in the months column, then plus 1 in the year column. So 2007 will become 2008. It will become January 2008. Get what I'm trying to tell? So you carry forward days to months, months to year. We tell no 1s to 10s, 10s to after 1, 2, 3, 4, 9 as well as 10. 19 and then 100. So we do it for 1 digit, 2 digit, 3 digit. Here we do dates, months and years column. Once the dates in that month is over, we'll put it to month column. When the months is exhausted for that year, we'll put it to next year. So this is what you should do. You guys get that? And the other kind of question, I'll show you the question. There will be purchase sale, 2 sets of transactions with a specific party. Have a look at this. So they will give that amount is receivable as well as amount is payable. Goods have been purchased from X and also goods have been sold to X. So whenever they give like this, so pick one person, then X or Y. Red and green one pronounce either red or green. Pick one person, take their perspective, and then from that perspective you start solving. So in this problem, if you pick X, so if you pick Y as our perspective, let's say amount receivable from X, amount payable to X, goods sold to X, goods purchased from X. We'll segregate the transactions and then write them. This is very important because language will become tricky in the question. Sometimes they'll give from the perspective of X. They'll say X sold goods to Y and then write Y purchased goods from X. Both actually means same, but they played with it. You think sales alone, purchase alone, but its perspective is important, not the word sale purchase. You get it? They will say X purchased goods from Y. X and then Y sold goods to X. Two different transactions. So when you segregate them, you tell first one is sale, second one is purchase. No. Pick one perspective, X or Y. X is purchase and all, you write one table. X sales and all, you write one table. When you write them in two different tables, then you should find common due date. You should find both the tables together, whichever is the earliest date that you take as a due date. And after you consider that, find out period, find out amount, find out product, difference between total product, total amount. With that, we should take, we get the answer. One last important point is when you do difference in product and difference in amount. Now, whatever you pick. Now, for example, table number 1's product, you did 6,760 minus 2,110. You should do 210 minus 102. You get that? If you take 6,760 minus 2,110, you should do 210 minus 102. Just imagine in the below table it is 220. 102 is there, no? It is 220. So then, sir, it will become negative. Let it become negative. Meaning, the average rate is before the base date. Get what I'm trying to tell? So don't get into that zone. So remember, whatever product you take first, find the difference. Same corresponding amount has to be taken first. This is one small point that people forget. So far, that much tricky has never been asked in CA Foundation exam. But you never know how lucky you are. If it is your exam is exam in which they ask, and certain questions, no, they would give date of purchase. Certain questions they'll give credit period. So listen to this. If they give bill date and if they give bill period, we'll add 3 grace days. If they give purchase transaction is this date and 1 month credit period alone, no grace days. No grace days. See, they will purchase of goods on 15th of November, credit period 1 month. 15th of November say 1 month. 15th of December is the due date. Don't add 3 grace days. You will add 3 grace days. That is bill. When it is bill, that to bill with specific period. Bill with specific. Don't ever take grace days for everything. And you know to add 3, so add 3 everywhere. Don't do that. Don't do that. If you do add 3 everywhere, they'll do minus 3 in your answer paper. Got it? Great. So there is application of this topic. We compute interest on drawings using product method. You can actually compute interest on drawings using average due date method also.
can compute interest on drawings using average rate method also. How? There are several drawings, several dates. What we do under product method, write all the dates, write all the amounts. From the date to year end, we find the period, write it, take the product, total product into interest percentage into 1 by 12. That's how we find interest on drawings. Under average rate method, what you can do is, several drawings are there. Take one of the earliest drawing as base date. For that date, you find the average due date. So average due date is the date on which if the partner repays the drawings to the firm, he doesn't have to pay interest. But you have not paid interest from the average due date till the year end. From the average due date till the you compute the. I'll show you. This is a question where partner has made drawings on several dates. This is the one. No, not this, not this. Nilita. See, you give me little time and all of this starts happening. Have a look at this. So this is your drawings. Partner has drawn these monies on different dates. So product method may we do like this, correct? 1st of July, 30th of September, 1st of November, 20th of February. Year end is 31st of March. From each date of drawing till the year end, find the period. For the period, for that amount, we multiply, take the product, total product into 1 by 12 into rate of interest. That's how we find interest on drawings. We done this in partnership chapter. And tell you how can we do this using average rate concept. What will you do using average rate concept is the same data 1st of July, 30th of September, 1st of November and the last one being 28th of February. The earliest is 1st of July, started accountant's day. Take that as the base date and then you find the period between the base date to the due date for every transaction 1st of July to 1st of July, 1st of July to 30th September, 1st of July to 1st of November, 1st of July to 20th February. You will find the period. Take the product, total product, 9,600 by 2,700. What do we get? 9,600 by 2,700. We get 3.5 months. Everything is months here. To taken period months. If you have taken days, it would have been days. So 3.5 months, if you add to average rate, you get 16th of October as average rate. 16th of October is a date on which if you pay the money. 16th of October is a date on which if you pay the money, you don't have to pay interest. But what is the date of payment? 31st of March. Interest on drawings is not paid till year end. No? Interest on drawings is not paid till year end. So between 16th of October and 31st of March, 166 days. For these days, if we compute interest at 60, interest at whatever the 6%, get interest as how much? Same answer you would have got here also under product method. So whatever you do under product method, whatever you do under average rate method, you will in fact get the same answer. You can use the concept of average rate there as well. Are you getting it? Will not use, but you can. But all the accounting machines, accounting softwares what used for computing interest on drawings, they use the same thing. Application of this unit. And by the time I've told this, I think now it's time for me to move to the next topic. Last words on average rate, simple. If the date of payment is after average rate, you will compute interest. If the date of payment is before average rate, you will save interest. Sometimes what they do is, they will tell that the party is paid on this date. Average rate is 15th of November. Payment is made on 10th of December. How much money should they pay? Then you know the amount to be paid, bill amount. You will compute interest, add interest to the bill amount, find the total money that should be paid. That's one type of question. In another type of question, they will say the party is willing to, the party wants to save 50 rupees by interest. How much does he want to save? Then what do you do? Interest is equal to principal into time into rate. Correct? Interest, you know, he wants to save how much? 50 rupees by interest. If the interest is 50,000, principal is whatever, 10,000, 15,000. We need to know, we know the rate is 10%. We'll identify that time. You want to save so much interest, when should you pay? To do that, interest is equal to P into T into R. We'll write interest, we'll write principal, we'll write rate of interest. And find time as the answer. This is the date, this is the time period you should pay before this due date. Meaning, this many days before average rate, if you pay no, you'll save so much interest. So we compute average rate separately. Using the interest, principal and interest rate, you will find the time period before the average date which he has to pay. You deduct so many days from average rate, you will arrive at the date on which he is supposed to pay. This is called savings in interest. One of the exam, the question was like this.
Savings and interest. Let me know if you see somewhere. This is amount to be paid. Have a look. In this question, we computed average rate. What is average rate? What is average rate? 21st of May. If they pay on 18th March, are they paying before or after? Before, correct or not? How many days before? 18th of March to 21st of May. March has 31 days. 18 days to subtract, we get 30 days. April 30. 30 plus 30, 43. May, what date are they paying? Okay, 30. What is it? How many days? 64 days. Did you understand? 13 plus 30 plus 21. 13 days in March plus 30 days in April plus 21 days in May. 64 days. 64 days. Do that 8,500 is the amount that is due. 8,500 into 64 by 365 into 8%. 190. This much money is saved. Meaning the party who has to pay now, he need not pay 190. Amount due is 8,500. Amount due is how much? When he is paying on 18th March, he should pay 8,500 minus 190. Or you can call it like that retirement, paid before the due date, so that other person will give us discount. Or he will. Get this? If you pay late, what will we do? If you paid on 14th of July, average due date is 21st May. We paid on 14th July. We paying late, how many days? 10 days in May, 30 days in June, 14 days in July. So do 9 plus 30 plus 14. 39 plus 14, 43, 53 days. Correct or not? 53 days, sorry, 54 days of delay. 54 days के लिए interest you find 101 should pay 8,500 bill amount plus 101 extra. Together 8,601 needs to be paid because you paid late. Everyone, great. So this is with regard to average due date. Average due date also, all the true or false questions have been compiled. The QR code is ready with me. I can show it to you all. But I think it is good we take this up later. I'll share the link with you all on the Telegram. Is that fine? Let's not spend time now. Everyone will take a phone, everyone will scan and then listen. I thought this would be like a small break. Like if I actually want to walk around and think, then I thought I'll show. Whoever has missed any of these links, don't worry. What I'll do is I'll share all the links with you all in the Telegram group. You just have to join the Telegram group and it will be shared with you all there. So what you need to do is you just search for the word accountsman, ACCOUNTSMAN. You search, you will find one Telegram group. That's a public group. You join that group. That's an announcement group, wherein all the announcement with regard to your admit card issue, date change or whatever is there, I just announce it. That is not a place for you to take step. There is one link pinned called as CA Foundation discussion group. To join that, there you can post any query that you have on CA Foundation file address. Don't send a message on WhatsApp. I would not see. Telegram group, you send a message, I will reply to it. That's one place where you can expect replies. And any information about any other further updates or any classes, any video, any topic, which will definitely come there. And all the material that I used in today's class, yesterday's class, whatever I could, I'll share it there. You guys get that? So you can use that place. And if you have any doubts also, please keep texting. You have did too far. One question you have doubt, send it there. One question is you think answer is wrong, put it there. I'll accept my mistake. If I have done any, and I'll correct it. Yeah, and there's a lot of content. You just need to scroll few there. There are a lot of links, there are a lot of PDFs. All the batch files are there, regular batch files, all free to share. You guys can definitely access the same and then read from this Excel sheet what I'm using now. You can see every page notes is there. Ouch. This here see consignment, goods and return or approval, bills of exchange, and account current, average due date, final accounts, introduction to partnership, admission, retirement, everything. HS material, all the question solution, majority of them. Every chapter maybe one question or two questions are very rarely few questions solutions are pending, which will surely update. So you can find all the solutions in here. And the entire file comes to be how much? 2 MB, 1.5, 2 MB is max. All the solutions. If it is a handwritten file shared, even single days file will come to 20. Yeah, so one file full everything. And whatever is there in the future, I'll update it into the same one, however. And when the new batch starts, we already started a new batch, November 10th is started. Accounts class is not started. So when the new batch classes will start, I'll share the new batch file also in the same group and then add new foundation people also to same group. So that group will be flowing. But by then, you people should go to inter group. Inter, there is a separate group. So don't stay in that group for long. Get what I'm trying to tell you? Yeah. And next batch ke liye whatever we schedule and then plan is also will be there only. You can use to share with your juniors. I was in fact happy. Couple of them who I spoke to today, they told like they got to know because they have a friend who was part of the Telegram group. This friend pushed that friend to the group and then that friend got to know about it. So, wow. Okay. This friend got that friend. Let's go to the next topic. Shall we discuss account current? Okay. Account current is actually not a lecture. Account current is actually not a, it's a running statement. It's prepared with an objective. And this is not supposed to be seen as a separate unit. This is not supposed to be seen as a separate unit. Account current as a topic is extension of the topic of average unit. It is extension of the topic of average unit. See, average unit may we write no transactions and then identify the average of it. So if there are 4 transactions, 5 transactions, 6 transactions, what do? You do average unit. If the number of transactions becomes way too many, there are 100 transactions over 3 months, you can't do average unit. And even if one transaction comes in, period will change, product will change, total product will change, total amount will change, average due date will change, interest will change. So much of change, too much, no? We want to see. There are 4 transactions. You found average due date for that and you found interest. I'll add one more transaction at the end. If I add one more transaction at the end, your product will change. Total product will change. Total of the amount changes. Average due date computation will change. So interest that is computed based on that period will change. It's too much change. You can't accommodate changes in average due date. So the same average due date concept, you prepare 2 tables, purchases one and then sales another. Get that, you bring one next to the other. One call it purchase, one call it debit side, other call it credit side. That becomes account. That becomes, and average due date we take base date as one of the earliest date. Here we take base date as the date of account current, the date on which you prepare. So that the base date, whenever it is the last date, from till that date interest is automatically computed. So you don't have to find the average of the due dates and then separately compute it. For example, if there are 4 transactions, we found some 30th of August as the average due date. And then we are closing the accounts on 30th of September. 30th of August, entire money was supposed to be paid, but it is paid on 30th of September. On the total amount from 30th of August to 30th September, we found interest. The example that we saw in average date. Account current, you don't have to do that. What is it? There are 2 tables. No, one is purchase, other one is sale. You make them one next to the other. Debit side, credit side. One is receivable, debit. One is payable, credit. Get it? And if we take the earliest of the dates, it's little difficult. So what we take? We take the date on which we prepare the account current. Get it? From that date, we start computing. Why do we do this? Very simple. We take the earliest of due dates as base date. We arrive at average due date. From average due date to date on which the amount is settled, we should find interest. Here what we do is, we take the date of settlement itself as the date of account current. We will find it for that period. So we'll automatically not find product but find interest for each transaction. So presentation of average due date differently is nothing but account current. But it should not be seen as a different unit. You see from this perspective before? You should. So going ahead, in a regular class we discuss why is account current prepared. I tell you a story, purchase goods, you told you don't have money, some funny story. We don't have time for that. So account current is a very important thing. This is part of examiner's comments. Examiners will write comments as to how did people perform in the exam. So in the examiner's comments, very rarely account current question has come. But whenever it's come, the examiner's comments is majority of the students have failed to solve the problem on account current in the correct manner expected because of choosing the wrong perspective for solving the problem. Meaning, A and B are in account current. They were expecting account current from A's perspective, but you mistakenly did the problem from B's perspective. So people get the perspective wrong. They don't say perspective. They'll say who should issue and to whom it should be issued. Using that, you need to get the heading of the account current correct and then solve it. If you don't get the heading of the account current correct, your entire problem will be a mess up. So the important part that I want you to remember is ABCD. So if you say A, B, C, D, E, F, G, H, I, J, K, L, M, N, O, P. You say L, M, N, O, P, Q, R. L, M, N, O, P, Q, R. First comes R, then comes yes. First comes R, then comes yes. So first we should write receiver's name, then we should write yes. Very good. So whenever we write account current, the heading of the account current is receiver in account current with sender. What is it? Receiver in account current with. Remember that. Okay. Recipient in account current with sender. Now if I am sending an account current to somebody, I should write that person's name first and then write my name. First you should write to, then you should write signature. So your signature at the end. So when I am sending my account current to somebody, I should always write their name first and then write my name. And I should prepare it from my perspective. It is like my friend's account in my books. It is like my friend's account in my books. In the books of sender, we prepare recipient's account. In the books of sender, we prepare recipient's account. So that's what is important to be known. So this is a question where Shyam and Nath brothers. This is first question in your ICA material. So when they say prepare Shyam in account current with Nath brothers, who's preparing this? Nath brothers. Whom is it sent to? Shyam. In whose books are we preparing? Nath brothers. Whose account? Shyam account. So in the books of Nath brothers, Shyam account is what you should remember. And do the entire length. So don't do anything first, okay? You write your usually particular amounts, 2 extra columns you keep. One for period, one for product. One for period, one for product. Keep the 2 columns extra and write all the ledger transactions. Opening balance, closing balance, purchase, sales return, cash received, cash paid, everything you write. After you write everything, you find period. From the date of transaction to the date of account current, you find the periods. Fill in the period columns, multiply the amount with period, take the total product, difference of the products into rate of interest into 1 by 12 or 1 by 360. You multiplied the period in days, 1 by 365. You multiplied the period in months into 1 by 1. Why? Very simple. When they say interest rate is some 9% or 6%, no, it is 6% per annum. 6% per, you are multiplying by 365, 18, 20. If you do into 18, it will become 18 years. It should be 18 days. So it should be 18 by 365. Get what I am trying to tell? So instead what we will do is 6% per annum is there. We will divide by 365 to convert interest rate to T. Got that? So this is the first method, interest table, where individual transaction schedule will find interest. This is never asked in the exam. And this is more time taking. So but you teach this only first. I teach. That is different. A class may you learn. Exam may you get marks. I don't teach it for the sake of marks. But these 2 days are exclusively marks oriented. This is little different than what I do in class. I personally don't like this, but this is the need of the hour. Yeah, a lot of things that I did know that marks assessment chapter wise. I don't like that. Now next batch what I start there I don't show that in class. Just because I know it doesn't mean I tell it. When people learn something, you should not learn it based on the marks. Yeah. Great. So see this is product method. What is this? Product method where we don't individually find interest. See if you have to find interest, you should do principal into time into rate. So for this 200 rupees first transaction, what should I be doing? 200 rupees into 123 by 365 into that 6%. I should identify interest for everything. Correct or not? So I should do 200 into 123 by 365 into 6%. Next one, 330 into 92 by 365 into 6%. So everything I should do divided by 365 into 6%. Isn't that common in every transaction? Divided by 365 into 6%. Divided by 365 into 6%. So I will not do it individually. So I will do everything date into period, date into period, date into period, date into period. Take the total. Once for all, I will divide by 365 and multiply by 6%. So it's actually not a different method. It is just shortcut. It is just to do the shortcut to find the interest. It is called as, what is it called as? Product method. And there is one last method which was examiner's favorite when this chapter was in CA Inter. Before November 19, before May 19, this chapter was in CA Intermediate. CA Inter mein account current and average rate was it. Then account current they used to ask product of balance method. I think you people also like product of balance method. When we did in class, every question we did under 2 methods, no? Yeah, but exam mein account current has been asked. Didn't show that to you? Okay. Account current has been asked almost every time, but wait. Yeah, product method is asked. 2 times it was not asked. 2 times it was not asked. But every time they ask, no, they usually ask product method only. The balance of product method never asked. Interest table method never asked. But why do you do like that? So that you get confidence in doing that particular topic. Have a look here. So this is same thing. Instead of writing what to say, individual items and then finding the balance at the end. But please, for each transaction we find the balance. We do running balances. This is usually used in banking system. Because bank may you deposit 1 lakh rupees today, it's there only for 2 days, you get 2 days interest for 1 lakh. For every transaction you have to do till end of the period, it will become very complicated. When the transactions are too many, then you follow this product of balance. So each transaction period will find the closing. After each transaction you will find the closing balance. That closing balance you will find till the next closing balance. Meaning if the balance is changing every day, daily interest will compute. Daily averages will compute interest. Usually followed in the banking system. So one last question, only one question is there in your LC material on this topic. You can definitely try and do this. Got it? One last point I want to tell, and then we'll go ahead away from account current topic. Let me tell you what is it? Heading interest. Heading interest. Average rate ಬರುತ್ತಲ್ವಾ account current ಅಲ್ಲ. ಹೇಳ್ತೀನಪ್ಪ. Darshan wants to venture into teaching. Okay, guys. Now the last part, important part. Please listen. Stop talking. Now, why is it that we compute heading interest, or what is heading interest in the topic of account current? Now, for every transaction, I think something is happening here. What word, please? Yeah, please listen. Focus. So, what is heading interest, and why do we compute heading interest? So, we know that in the account current topic, from the date of transaction or the due date of the transaction till the date of account current, whatever period is there, no? For that period we prepare account. For that period we compute interest. Am I right? From the date of transaction till the date of account current, we compute interest. For example, today is 18th of November and our account current is prepared on 31st of December. Now we prepare account current. If there is a transaction happening on 18th of November, for that transaction, what we prepare account current on 31st of December, we compute interest for 12 days in November plus 31 days in December. So that is 43 days. We compute interest for 43 days. So if there is a bill of exchange, what do we receive this period? What we receive today's date? When do we receive it? Today's date. So I'll write that bill in today's date in my account current, but it is maturing after 2 months. When is it maturing? After 2 months. So in the due date column, the due date will be not 18th of November. 2 months from 18th of November. 18th of December, 18th of January, plus 3 days, 19, 20. When I say 21st of January is the maturity date for such a bill? Yes. Now, when I prepare account current on 31st of December, if there is a bill which will mature on 21st of January, what will be the period that I'll write? Minus 21. And I'll compute interest as negative. That is called as heading. You all know. My question is, why do we compute as negative? Because the date was after. Then compute it in the next year. This year is that money, did we receive that money? No, don't compute interest at all in this period. Why do we compute interest as instead? Rather than computing negative, don't do it. Did you get it? Money will be received next period, no? Next period, why don't we compute interest? Why do we include our computing? The answer is very simple. See, you might say maths, sir, plus means plus, minus means minus, minus interest. That's it. That is answer. Correct? No. They're maths students, so they laugh. So, the answer is very simple here. Now listen to me. The bill is received today, 18th of November. On 31st of December, when I find the balance carried down, it will get included. Cheaper. On 18th of November, whatever the bill is received, that balance will get included on 31st of December. I can see everyone, don't worry. So on 31st of December, whatever balance figure I find, would that bill be in play? Listen, please. On 31st of December, when I find balance carried out, would it be included or not? Yes. But that money is actually received on what date? 21st of January. So for January, February, March, when you prepare account current. For January, February, March, when I prepare account current. You know what will happen? January 1st opening balance rate, no balance brought down. The January 1st opening balance brought down will only include that 21st of January's transaction. And in the next period, money is received on 21st of January. Account current will be prepared on 31st of January. So it actually compute interest for February full month, March full month, and 9 days in January. That is 31 plus 28 plus 9, 40. 68 days interest should be computed. In the next account current period, January, February, March, for the bill which will mature on 21st of January, interest should be computed for a period starting from 21st January to 31st March. That is about 68 days. But that balance is already including opening balance. Opening balance, you compute interest from beginning of the period till the end of the period. You compute interest for 90 days or 3 months. So in the next year or in the next account current period, we will compute 21 days interest extra on that bill. That bill will mature on 21st January, but interest will be computed from 1st January. So 21 days ke liye extra interest will get computed in the next period. To compensate that extra interest that is computed in next account current period, in the current account current period, we will do minus 21 days interest. Do you understand? Because that will get included in the closing balance on which we compute extra interest in the next account current period. To compensate that, we will do negative interest in the present account current. Okay, remember the story that there was a thief in the court. So the king calls everyone, gives them all the sticks and says, who is the thief? It will grow by 2 inches. So the thief at home breaks the stick by 2 inches so that tomorrow it will grow by 2 inches, it will become fine. Next year only interest excess. So yearly interest cut now. You understood what I am trying to tell? It is actually not perfect. It is not the right way. Because why? Matching concept is not followed. Matching concept is not, but still no other way out. No other way out. If not, no opening balance. You know how do we do? Opening balance, you should write 100 items separately. What and all is included. Until each item we should compute it. You know how messy that will become? Oh my god, it will become very, very messy. So that's the reason we do that. We understood account current mein heading interest? Yes or no? Yes, sir. Fantastic. Okay. So average rate account current. Can I say chapter 6 ka now? Shall we quickly run into chapter 7? 7, 8, 9. Okay. 7th chapter. You want to go now? Wash your face and come. You might just fall. You will sir, how did you notice? I in fact can tell you how long did she go out for a call. Second time when she went out. Yeah. You went second time, no? Second time also emergency. Everything fine? Seriously emergency or you thought it's an emergency but it is not? Lot of times people in the class like, sir, emergency, sir, mom is calling. They go out and they come back. Later I ask what? Yenila sir, ratri and mandi uttu can't kill. Yeah, literally people. Yes, every person, whenever you see your phone ringing, emergency. And Ravi told so many times, sir, mane pika yellettidini anta helake. Adu mundegade iro tulsi gide pakkade iro pot hindegade ittidini. Yeah, onagakiro pant table ittidini. This all. Chalo, let's quickly start with summary of our final accounts for manufacturing and non-manufacturing. Shall we? Okay. In your entire syllabus, if you see, no, to start with, you first have non-manufacturing unit, and after that you have manufacturing unit. But when we read, what do? We first read manufacturing unit and then read non-manufacturing unit. If you guys don't know how to manufacture units and how to record for manufactured units, how do you start accounting, trading, and then? So in your syllabus, the unit 1 talks about non-manufacturing unit and unit 2 talks about manufacturing unit. When we read, we will always read manufacturing unit first and then read non-manufacturing unit. Get that? Yeah. So I have a small question for all of you. Well, is it manufacturing account or trading account? Or is it manufacturing account and trading account? Manufacturing account and trading. Is this being there? All done. Everything done. Yes. Okay. See, listen. Okay, listen. Manufacturing account is to be prepared by a manufacturer. Manufacturing account is to be prepared by a trading account is prepared by trader and manufacturer. Trader and So you can be a manufacturer. Instead of buying the goods and then selling them, you can manufacture it in-house and then sell it. If you buy the goods and then sell, you are a trader. If you manufacture the goods and then sell, you are manufacturer come trader. Manufacturer come. See, you cannot just say only manufacturer. What do you do? Manufacture and then keep. You should sell, no? So manufacturer will prepare manufacturing account and trading account. A trader will prepare only trading account. So you prepare manufacturing account. Prepare manufacturing account. The trading account on the debit side, you wouldn't write purchases. The trading account on the debit side, you wouldn't write. So the purchases in the trading account debit side will get replaced with manufacturing account. The objective of preparation of manufacturing account is to determine the cost of production. The objective of preparation of manufacturing account is to determine cost of 1 second. Objective is what? In the purchases, in the place of purchase, you write goods manufactured. What is the cost of? That's determined here. So in manufacturing account, what we do is we write opening work in progress on the debit, closing work in progress on credit, and on the debit we write consumption of raw material. What do you write? See, you can say, sir, I write opening raw material, debit, closing raw material, credit, purchase of raw material. No. Our intention is not to hold raw material. Our intention is to manufacture finished goods. So when opening stock of raw material plus opening stock of raw material plus purchase of raw material minus closing stock of raw material, this will help us identify how much of the raw materials are consumed during the period. And we write opening work in progress on the debit, closing work in progress credit, and debit our consumption of raw material and manufacturing expenses. If we eliminate the sale of scrap, which is our reduction in cost of production, we will arrive at balance figure by trading account. What is the balance figure? By trading account is the cost of finished goods manufactured during the period. This will be posted to our trading account. In our trading account on the debit, comes opening stock on the debit side, closing stock on the credit side, and also write purchases. If you are only trader, if you are not a trader, if you are a manufacturer, you will not write purchases in trading account. Instead of purchases, we write manufacturing account. What do we write instead of purchases? Very good. Any other trade expenses, what is there will be written in trading account, and we'll write sales in the credit side of trading to find gross profit. Now, there are expenses which will appear in manufacturing, there are expenses which will appear in trading, there will be expenses which will appear in P&L account that we'll discuss next. The question is, what expense will go to manufacturing and what expense will go to trading and what expense will go to P&L. You need to see the organization. Number one, the factory and setup. Factory and number two, warehouse. Number three is showroom, administrative office and everything. Whatever is incurred in the factory, may it be rent, may it be electricity expense, may it be wages, may it be any other expense, it will all go to manufacturing. There is expense incurred at the warehouse rent, warehouse may some salary, warehouse may movement, warehouse may storage, insurance, whatever nonsense. That will all come in trading. Any expense incurred in the office salary, salesman salary, commission, showroom expenses, all of this will come in P&L account. And you understand how to segregate an expense between manufacturing, trading, and usually we of this up to like mindset that whenever there is depreciation, we write depreciation. P&L account. But it depends on what is the asset that is depreciated. If the asset that is depreciated is a machine that is used in manufacturing, such depreciation on such machinery should not come in PL, it should come in manufacturing account. And rent, usually say P&L account. It depends. If it is factory rent, manufacturing account, warehouse rent, trading account, office rent, electricity expense, again depends where have you incurred this electricity expense. Do you get that? But only once in so far the examination they've asked manufacturing, trading, PL. Once they asked manufacturing, trading, PL for 15 marks. This was not the June attempt, November or December attempt. In the June attempt they asked manufacturing, trading, P&L and balance sheet. They get 20 marks. One big question. Better full bit. No. It's a possible one. You can do. We've done that in class. In fact, that is also there on YouTube. You can see that it's called master problem on final. Because everything is there. Manufacturing is there, trading is there, P&L is there, balance sheet is there. This is that one simple question. Stop talking. So that's how we basically do. Do you guys understand like when should an expense go? Now this is one thing practically incorrect. But you need to do the exam. Whenever they give wages, whenever they give manufacturing expenses, where do you rate manufacturing expenses? Manufacturing account. Some questions would not need manufacturing account. They give finished goods opening stock, finished goods closing stock, purchase of finished goods. So if they give manufacturing expenses, factory rent and all of this, no, you end up rating it in. Hard say it is incorrect, can't do anything. but you have to pass the exam, you have to write it trading. But actually it should be written in manufacturing. There are some instances, so don't cry, but just do that. Got that? Yes or no? So whenever the question is there, basically you would have to prepare trading P&L balance sheet. Remember that items in the trial balance have gone through double entry system. Items in the trial balance. How does trial balance appear? Journal, ledger, then trial balance. Correct? No? Journal. When journal is prepared, already you written journal entries. Meaning like double entry system is come to ledger. It's come to trial balance. It will be posted to final accounts. If an item is given in adjustment, it means it is not part of books of accounts. You have not passed journal entry for the same. You have not prepared ledger accounts for the same. It is not included in trial balance. So we need to introduce it into our final accounts under double entry. In simple terms, how I should tell how you people know it is the trial balance will bandre one sati, adjustment will bandre ಎರಡು sati. When you say 2 times, you should take care of debit and credit aspect. Don't just write 2 times. Don't just write 2 times. Debit and credit aspect needs to be taken care of. For instance, closing stock will never come in trial balance. Closing stock will come in adjustment. When the closing stock comes in adjustment, it is not part of books of accounts. That is the reason we don't learn it in chapter 2. Chapter 2, accounting close, you don't have closing stock. You have a separate chapter, valuation of inventories, what we discussed yesterday. Because inventory is an event, result of a transaction. Purchase and sale are transactions, result of it is inventory. Inventory is not part of regular books of accounts. You compute inventory separately by doing all this stock reconciliation. We did know physical inventory is so much, this you add this, deduct this, they take this at cost, goods sent on return or approval, consignment stock, goods sent and sold at higher rate. We did all those adjustments yesterday. That way we arrive at stock. That is not part of books of accounts. Now we should introduce it into books of accounts. So we should take it at 2 places. One, take it in trading account credit side as closing stock. That is credit aspect. You take it to balance sheet asset side. Balance sheet asset is debit aspect. So you need to introduce everything in. Bad debts is given in adjustments. What do? You take it in 2 cases. P&L account debit, reduction from debtors. Why? P&L account debit side, debit aspect. Balance sheet debtors reduction, debit aspect. So taking both aspects. I was getting into taking both aspects. So any item in the adjustments, we have not introduced it into books of accounts. We need to give both debit and credit aspects to it to be introduced into books of accounts. Yeah. So after that, we'll quickly go into our P&L account. So whatever gross profit that we get in trading will be posted to P&L and then we'll record. Forgot to mention. Sometimes no closing stock will be given in trial balance. Sometimes closing stock will be given in. When closing stock is given in trial balance, then purchases in the trial balance is already adjusted. Purchases in trial balance is already adjusted. So adjusted means instead of writing opening stock purchases separately, they would have an opening stock plus purchases minus closing stock, meaning COGS. What have they taken? So already COGS is given in the trial balance, correct or not? So closing stock need not be written to trading account. Closing stock need not be written to. Closing stock will be taken only to balance sheet. So answer is this, okay? Should we write closing stock in trial balance? Answer is, if you take closing stock into trial balance, you should write both debit and credit. Write both debit and credit of closing stock, debit of opening stock, debit of purchases. Muru mix maadu, they will write adjusted purchase. They will write adjusted. So adjusted purchase may credit of closing stock is already considered. Only debit of closing stock will be there in trial balance, which will be taken to balance sheet side. Totally, thumb rule is very simple. Closing stock should not appear in trial balance. If it appears, it should appear both debit and credit of closing stock in trial balance will be adjusted with debit of opening stock and debit of purchases to find adjusted purchases. You go to trading account debit. And the credit of closing stock, what is in trial balance? Sorry, debit of closing stock, what is in trial balance? Go to balance sheet, asset side. Very good. So P&L account mein, it's very easy. Take gross profit, add indirect income, deduct indirect expense, and we'll get net profit. But in computation of indirect income and indirect expense, you need to be very clear and very sure about prepaid and accrued items. Some items will be prepaid, some items will be outstanding. Prepaid can be expense or income, accrued can be expense or income. So what is this prepaid and accrued? Very simple. It doesn't relate to current year. It doesn't relate to. It relates to either previous year or next year. If it relates to next year, it's called as prepaid. If it relates to previous year, it's called as outstanding. You get what I'm trying to tell? P&L account is prepared based on matching concept. Remember in yesterday's session, day one, what did we tell? I told we need to match current year expenses with current year incomes to arrive at current year profit, or we need to match current year incomes. Now you paid rent for 18 months. How many months rent did you pay? 12 months in current year, 6 months next year. 6 months next year you paid rent. So cash account credit side rent paid will be 18 months. P&L account debit side rent should be 12 months. P&L account debit side rent should be 12 months. 6 months of rent for next year, whatever you paid, should be taken away from P&L debit side, should be done in balance sheet side as prepaid rent. Get that? So only current year items should appear. Prepaid accrual adjusted or prepaid accrual outstanding should be adjusted from our expense and incomes to find current year expense or current year income, which should appear in P&L. Here, that's one set of adjustments. And the second set of adjustments, what you need to know it is managerial remuneration. What is it? This is common for final accounts as well as partnership. We'll discuss both of it together. Whenever there is managerial remuneration, can be given as a percentage of profit. They give it as percentage of profit. Sometimes they mention the word before, sometimes they mention the word after. If they mention the word before, simple. If they say 10%, you do 10 by 100. Profit into 10, you by 100. They say after. What does it mean? See, there is profit. From that you deduct commission, manager's evolution. After that, there is what is that is net profit after. So if they say profit is 100 or profit is 1000, commission is 10%. What do you do? 1000 is 10%. 100 rupees you give to manager. What are you left with as net profit? 900. So I am the manager. This is profit before giving me commission. This is profit after giving me commission. I am saying I want 10% of this. If I want 10% of this, this is no. Gross profit plus all the indirect income minus indirect other expenses. From this I will take 10, I will give here 90. Correct? No? I am taking 10% of this. So what is here is 100. What I will take is 10. What I will give here is, so this we know, right? So what will we do? 10 by 100. Do 100. 10 is 2. I will compute. I will deduct, you will find 90. Sometimes as a manager I will say, I want 10% of commission after charging my commission. Meaning, net profit is there. I will take 10%. After that, something is left. No. In this 10% I put. How to find this? From this, I should deduct my commission. How much do I want? On this 10%. Let me repeat. There is profit before commission, commission, profit after commission. From profit before commission, if I deduct my commission, whatever profit after commission is there, on that I want 10%. But to find on that, we should know that. How much is that? That is 10% after taking what is that? How do we find? Simple. This is 100. This is 10. This is 100. On that, this is 10. So what is this? 110. This is? This you know. So if whatever you know is 110, how much is 10? Do into 10 by 110. As I answer. So in simple terms, you can say before charging this is say do x by 100. X by, let's say after charging this, do x by 100 plus. But did you understand the logic? Why is it 100 plus x? Same like we do cost profit. Same like we do for cost profit on cost, profit on sale. That is this. Then I'll discuss the last part. I want to say is our bad debts. Bad debts. Your favorite, no? Bad debts. We have a separate discussion on this topic called sundry debtors and family. I made you do plenty of small examples. You remember small cases? Yeah, about 7-8 of them. 7 of them. Now concentrate. Shh. In the sundry debtors family, there is sundry debtors, the head of the family, asset, balance sheet, and there is bad debts. Bad debts is expense. Bad debts is, and there is provision for bad debts, which is liability. Which is provision is a liability. Remember, provision is a liability. When you create provision, it is expense. Provision is a liability. When you create provision, it is an fantasy. So debtors is asset, balance sheet, asset side. Bad debts is expense, P&L account, debit side. Provision, bad debts, balance sheet, liability side. You understood this? Where will debtors be written? Balance sheet. Where do we write bad debts? P&L, debit side. Where do we write provision? Balance sheet, liability. For no, it will be. So debtors, it's a balance in the debtors account. That's not a problem. Tell me what exactly is the journal entry for bad debts. Bad debts account debit to, why bad debts is expense, it should be debited. Debtors is asset decrease, it should be credited. So can I say that the journal entry is bad debts account debit to debtors account? Okay. If bad debts is appearing in trial balance, bad debts is appearing in, this entry is already passed. If bad debts is appearing in trial balance, then what does it mean? This entry is already passed. So they have already deducted from debtors. Why there was no bad debts to debtors? Debtors is already deducted. The second entry for bad debts is because it is expense to transfer to PL. Because it is expense to transfer to, when you transfer to PL, what is entry? P&L account debit to, very good. P&L account debit to, that entry is not passed. So what will we do? We will pass it. We will write bad debts to P&L. Write bad debts to. So if bad debts is appearing in trial balance, write it to P&L. If the bad debts is appearing in adjustment, what does it mean? You have not yet deducted from debtors. Freshly deducted from debtors from the balance sheet asset side and also transfer it to P&L. Yes, understood everyone? Okay. Great. Similar, it is the case with regard to provision. Provision for bad debts. Provision for bad debts. What is the journal entry for provision? Remember, I don't want to waste time asking you and then your answer is wrong. Provision for bad debts will never have debtors account. Provision for bad debts will never have debtors account involved in it. So provision is a liability. Provision is a when you create provision should be and creation of provision is an expense. Creation of provision is a provision for bad debts means one fine day there will be bad debts. One fine day there will be, so one fine day there will be expense. You are recording it now. What is conservatism? What is it? So it is expense. No, we should debit P&L account. So P&L account debit to provision. P&L account debit to, that is it. So P&L account by debit side will relate to provision. Correct or not? If provision appears in trial balance, provision appears in, this entry is already passed. This entry is already, we don't have to pass this entry. What will we do? We will write it in liability side of balance sheet. We will write in balance sheet. Sir, but liability side how to budget sir provision for debts. This is because provision is created on debtors. So instead of writing debtors 1 lakh in asset side and writing 10,000 provision on liability side, we deduct that from debtors. For deduction, no, there is no journal entry. It's only presentation. It's only presentation. Okay, now assume debtors is 1 lakh. Debtors is, provision is 10,000. Provision is, closing debtors will be how much? Next year, how much will you rate debtors? No. Next year, again, debtors is 1 lakh, provision is 10,000. So, debtors will not become 90. Debtors is 1 lakh only. Debtors is not decreased. Presentation will be deducted. Next year, assume that 10,000 provision is not required. You reiterated the provision to 12,000. Now, what you do? Next year, balance sheet will write 1 lakh minus 12,000. The year after that, assume provision of 12,000 is not required. Provision of only 4,000 should be maintained. You know what you do? 1 lakh minus 4,000. Debtors will remain at the same amount. Because of provision, debtors will not decrease. Provision is deducted from debtors in the balance sheet only for the sake of, very good, only for the sake of presentation. Got that? Everyone? Yes. So, if provision is appearing in trial balance, journal entry for provision, P&L to provision entry is already passed. We don't have to pass this journal entry. Right? Provision in balance sheet liability side. However, as a matter of presentation, we deduct it from debtors. However, if provision is appearing in adjustment, if provision is appearing in, then what do? We have to now create provision. We have to now create provision. But already there is some provision. For example, assume that provision is there 1,000. Provision is there. They wanted to create provision for 1,200. So already 1,000 is there. Only 200 is to be created. So we write journal entry P&L account debit to provision for 200. And for that existing provision of 1,000 balance sheet liability, you add 200, making it 1,200. And that 1,200 will be deducted. Get that? Yes or no? That's with regard to provision. And whenever provision is given as percentage, such percentage of provision is applied after deducting bad debts. After deducting bad debts, you apply. That's what I wanted to know. If there is provision for discount, that is applied as a percentage after doing provision for bad debts. Clear? This entire thing is there in this Excel sheet. You will get the access to this Telegram group, and there are a lot of cases also individually. See example one, simple one, and then we'll make life little complicated. So many cases. So these are all not there in ICA material or HS material. We've done it so that we get conceptual clarity for those who come from science background or those who come from commerce background, but COVID batch, all that. You guys get it? Yeah. So you can do that little later. But one last part that I want to tell before is bad debts recovered. Listen, listen, listen. You wrote off some expense as bad debts, but now you recovered that money. The bad debts previously recorded is now recovered. Your journal entry will be cash account debit to bad debts. You received money, you will not write it to debtors. It will not be written to debtors. Entry is cash account debit to, and entire bad debts record will be transferred to PNL. You will write bad debts record account debit to PNL and go to PNL. It will not affect transaction. Got that? If you can know this much, you can solve the rest of the problems on final accounts. At any point of time, if you come across any small glitch or any small doubt, you can definitely get in touch with me. This is what people have been asking for a while now. Where are you guys going? Are you going to be sitting here? Excuse me, where are you both going? Aren't you sitting here? Class ma, not no, we go sit there, sit next to them, talk for some time and then go out again, come back. Sit. What's wrong? It is not funny. You were confused, but I knew where you were sitting. Please go, sit. Oh my God. They were confused. I knew that they should sit here. I am in the wrong profession. I think I should. I think I should become watchman in parking lot. People will come from left, like yellow hoಗ್ತಾ ನಿಮ್ಮ ಗಾಡಿ ಈ ಕಡೆ ಇದೆ. Yeah. Sir, ನಿಮ್ಮ ಹತ್ರನೇ ಮಾತಾಡಿ. ಇಲ್ಲಿ sir, your ಗಾಡಿ white color. My God. Yes. I'm feeling. मेरी शक्तियों का गलत इस्तेमाल हो रहा है माँ. Okay. Shall we move on to the next topic? But before that, let me show the marking schema from this topic. Have a look at it, guys. See. Last time, 50 marks question had composed very long ago. Okay, guys. If I stop talking, you start talking. What's wrong with you all? Maintain some silence. Yeah. So everyone is taking the phone down to take. Some people are like, "Aage phone hi text text ಮಾಡ್ತಾರೆ." Hi. Sir, I'm taking pictures, sir. All this will stay in your gallery. What will you do? Will you really ever open it? When you're trying to upload some picture to Instagram and you're searching like, what is this something and all, and then your phone will say, okay, all these screenshots mark them to archive or something, then you once for all delete it. I'll tell you something. Whenever you see something important, no, don't click a picture. This is what I'll say. When you're walking, you see some pamphlet, you see some invitation, or you see something important on some wall, you see some quote in some cafe or something. What you do, instantly you click picture. Why? That is with the intention of I'll read it later. This I'll read it later is a killing attitude. Whenever you have an option that you have saved it, you can read it later, you will never read it. Instagram, how many people have started saving, like you see something like this is nice. Save. You saved it. When you save things, no. Do you read and then say, or do you read little and then save? You read little and then say, why it's nice, interesting, let me read it later. You go on saving, you will never open it. So the point is, listen please. Shh. Live the moment. Stop saving things for later. Every time when you come across something, assume that there is a wall, on the wall there is some quote written. You click picture, don't click a picture. Keep your phone inside and just think that this will be the last time you will read this. If not now, you will never get to read it again. You will not come to this place, you will not have a photo as attachment. You know that, no? The way you read it will be very different. You get what I'm trying to tell? So that's what something that you need to inculcate. your exam preparation also. Shh. Now just imagine, we are at the time of around like 4:30, 4:30, 4:40. Just imagine that your examination, now right now assume that the time is around 1:30. What is time? 1:30. 2 o'clock is your exam. 1:45 you will get the question paper. 1:45 you will get the question paper. Now at 1:30 you carry your books with you and then flip pages. No? Imagine how you read. How do you read? You will read it as if this very question will come to the exam. Or assume that okay, 1:45 I thought you are walking in the corridor, they started issuing the question papers. You just by mistake you saw it through window and you saw one question. You saw one question. You saw the question now. Now you open the book. You'll open that question. How do you read? You'll read like this will pakka come in the exam. You'll read it in such a way that you'll write. Every time you read any specific topic, no, the class right now after class today, tomorrow, no, the attitude what you should inculcate into is this question will pakka come. See, if you don't have that, no, when you read it, you ask yourself, will this come? If it doesn't come, the time that I spent now is waste. See, you have so many questions with so many self-doubt, so you'll never ever read it wholeheartedly. So, in order to read it wholeheartedly, read it as if this will come and read it as if this is the last time that you're going to read and you'll never read it again, but you still remember. That's the attitude. You want to read it? Yes or no? And second habit that we need. Now, 1:35 is the time. 1:35 is the time. You need to quickly revise the topic of partnership accounts. What should you quickly revise? If you have not revised partnership accounts, you should revise partnership accounts. So, you are reading your long lost friend whom you saw in foundation class, whom you did talk to for last 1 month, who had gone back, village comes back. Hey, hi, how are you? So long we didn't talk. So that person is talking. Do you respond? Shut up, we'll talk tomorrow. Let's come on. So you don't get distraction with you know because you know that it is 1:37 and you have another 8 minutes left. And in 8 minutes you can actually flip through the pages and then finish. So tell me, it's about like 35-40 pages in your notebook. Wherever you attended class, whatever notes you've done, make your self-study notes. It is about 35 pages. 8 minutes before exam. In 8 minutes before exam, can you revise 35 pages? Actually, yes. Just think, okay, just think. 1:37, 8 minutes. You can read the what is important. You can do that. Now assume that now I will give you 130 pages material. Now if the moment I say now 130, you're like that. Now I give you 30 pages material and I say 15 minutes time I'll give reading. You read? No. You know why? Because we don't have that such attitude. We feel like plenty of time. If not now, I can read after 50. I can read after 15 minutes also. That is a very bad attitude. So every minute now, after this session today, when you read, what I want you to feel is like that is the last 15 minutes left. That's the last 1 hour left. That's the last 2 hours left. You get what I'm trying to tell? When you bring in that small change in the attitude, the way you read will be very different. Small distractions and all will not affect you. Even if you get a call, you cut and then read, then last 5-10 minutes. That's what you should do from now. Now you are in the class, you are waiting for one call. If you get the call, even if it is not important, you tell that it's a very important call and then get out of the class. Because everything now is a priority other than subject. But if you do this right now, 7 minutes before the exam, you don't mind talking to people and then you don't mind calling because they need to be chill. So what you're doing is, what needs to be done, you're doing that day. What needs to be done that day, you're doing now. Get what I'm trying? So this is small change. It's not a big change. I'm not asking you work 10 hours a day, wake up at 4. No. Every minute that is spent to read, no, read it as if it's like you keep very short target. I told this to you yesterday. Keep shorter target. But I'm going to tell it to you a little different because the secret to success or the thumb rule to pass the exam is very simple. Study. Simple study. No matter different people tell it in different ways. Different people tell okay, strategies to crack the exam, tips to crack the exam, hacks to crack the exam. Different ways to say. But at the end of it, it all goes down to one simple rule. What is it? Study. But how to study is the small points that are very different. So you need to break the target on the smaller targets. But when you sit to study also, now you should have a target. Okay, next 10 minutes I'm going to finish. The next 15 minutes I should finish. So you should keep. As if like if you don't finish it in 15 minutes, someone will kill you. Someone has kept gun here and then say 15 minutes if you don't read it, I'm sorry. You will be killed. Get that? Just feel that. Just feel that invisible gun right here stopping you from doing anything else. And trust me, the way you study will be quite different. But then, get back. I told you, no, in the attempt just before they had asked only manufacturing, trading and P&L And in June 22, they asked manufacturing, trading, P&L, and balance sheet based question. The video on this is there in the YouTube channel. If you just search for master problem on final accounts, you'll get it. We put plenty of master problem videos. We'll also put few more. There is one master problem on visa. There is one master problem on valuation of inventory. There is master problem on NPO. There is master problem on final accounts. There is master problem on what is VRS. We will put one. So all specific topics, mein maximum coverage based master problems are there. If in case you can solve the problem on your own, just compare the answer. If you don't get the answer, only then you see where you've gone wrong by looking at the video. Got it? Hello, let's get started with partnership now. Padafat. Yep. Inaito. Huh? Break up. Huh? I'll share all of it at the end once. I'll share it in the Telegram group. Not waste time now. Yeah. So in a month. She's searching where to go. Go like this only. Swalpa move ಮಾಡಿ. ತುಳಸಿ ಜಾಕ ಮಾಡ್ಲಾಕ ಕೂತ್ಕೊಂಡ್ಬಿಟ್ಟಿದೆ. ಅದು ಎರಡು ಚೇರ್. ತಗೊಳ್ಳಿ ಸರ್, ಕೂತ್ಕೊಳ್ಳಿ. Comfortable. You should be comfortable. That is important. Very important. Shall we go to partnership? Introduction of partnership. May the questions can come based on interest on drawings. Silence, guys, please. See, if you guys are finding it difficult to sit, just imagine. At least you have exam to write in next one. I don't even have exam to write. My exam is over. My foundation, inter, final, everything is over. Yeah. Please listen. Listen. You guys should not let me talk anything else. Like, sir, come on, next topic, please, sir. Fast, really, sir. You should do that. You guys are in a state of mind where, okay, shall we skip partnership? No one will treat you to comfortable. Ah, yeah, sir. You are so excited and happy about it. Chalo. See, first I'll show the examination paper pattern so that we'll get some idea. Have a look. Small questions have not been asked. Usually questions are full-fledged big questions only. The questions on come on retirement account, the retirement with preparation, admission, death 2 times, retirement come admission once, death once, and the 17 marks ka I didn't see. I should see that and then put. I was doing all this the day before exam. I had some silence. I had some 10 tabs open of all the last 9 examinations, and then I was looking to each file, question number 1, 2, 3, scrolling down, and then putting it. So I put few and then I didn't put few. But in the last 2 attempts, what they've done, no, they've asked 2 questions from partnership. One is 3C, other one is 4B. 2 times they did it. So it wouldn't be surprising if in this attempt also they ask question number 3C and 4B. I'm not telling you. Okay. So if it doesn't come, then they'll say, sorry, No. I'm not telling you that it will come. So it's happened in the last 2 attempts. And listen to me carefully. Admission question was asked for longer marks, 10 marks, and 5 marks for rectification question. Rectification question in the sense, you know what is the question again? Please. They had wrongly given higher profits. Without paying interest on capital, interest on drawings and everything, straight away they distributed the profits. But we should first give interest on drawings, then give interest on capital, then share the remaining amount as in PSR. No? So we need to recompute it. Then a very similar question. In fact, same question we've done in class, 1 question in the introduction chapter. But did you understand what it would? That rectification entry, partners capital, few partners capital debit, few partners capital credit. That's a rectification entry. That question has been asked in December 21 and June 22. They asked you to compute goodwill under super profit method and also asked you to do accounting for retirement of a partner. But in the case of partnership deed should be there. If there is no partnership deed, profit should be shared equally. Correct or not? I will not waste time on a lot of theory. Interest on capital, interest on drawings and everything. Interest on capital will be computed only on the fixed capital, not on the current capital. Interest on drawings, if it is same amount at the beginning, then we do it for 6.5, same amount at the middle of every month, 6 months, same amount at the end of every month, 5.5, and then beginning of the quarter, middle of the quarter, end of the quarter. There is a shortcut, average method. Remember to use this shortcut and then identify the interest at these amounts. I show. See, remember to use it at these average rates 6.5, 6 and 5.5.
for beginning of the month, middle of the month, and end of the month. And if they give similarly beginning of the quarter, mid of the quarter, end of the quarter. Beginning of the quarter, if you withdraw the same amount, you will find for an average period of 7.5. If you do the drawings at the middle of every quarter, you do it for average period of 6 months. And if you do the drawings of the same amount at the end of every quarter, you do it for average period of 4.5 months. And beginning of their, half of their also we've discussed. So this is one kind of a question that can probably come, which should be little aware. And if they give it on random dates and random amounts like this, we'll apply product method. I already showed one product method question to you in average rate topic. Something similar is what you should be doing here. So this with regard to introduction. Introduction means there is nothing much to remember other than the fact that P&L appropriation account is prepared to distribute the profits to partners. Transactions between the firm and partners like interest on capital, interest on drawings, salary or remuneration paid, distribution of profits, all of these are appropriation of income and not charging. Because these are appropriation of income, this should come in P&L appropriation account and not in P&L account. We identify the profit and then give interest on capital, charge interest on drawings, then we'll find the net profit and it will be appropriated between partners. If in case the profits of the firm is insufficient to even pay interest on capital, then what do we do? Did you get my question? If the profits of the partner is insufficient to pay even interest on capital, then what do we do? Then we should divide the profit in capital ratio and not in proportion. Why? First we should pay interest on capital. Only then we can pay profit. However, if interest on capital as an amount is greater than profit, then what do we do? We pay proportionate interest on capital to partners. Interest on capital is dependent on capital, so we share the profit in capital. It's actually not profit. It is proportionate repayment of interest on capital. Do you get this? This is one important part. And another thing that we should notice, there can be partners with minimum guarantee. There can be partners with, there can be a special clause where one person is guaranteed with a minimum amount. That is like even if you do the profit into their share, that doesn't come up to that minimum amount, that is contributed by other parties to pull up to the case. So in that case, first distribute the profits in the ratio that is agreed upon, and then check if that ratio or whatever money is given, is it sufficient or is it equal to minimum amount or not. If it is not equal to minimum amount, then such differential amount will be taken from other partners and then given to this partner. That is called as minimum guarantee. We have several small example questions which you can look into at a later stage if you want to. But we will discuss partnership over 5.5, 6 days. So I won't be doing anything, but I have covered the important parts. Then coming down to admission. In the case of admission, most nonsense understanding that all of you people have because of your 12th standard is you think goodwill will increase. What will happen in the case of admission of a partner? Goodwill will increase. Why? New partner will bring in goodwill. Correct or not? Nonsense. Wrong answer. Goodwill will not increase on admission. Goodwill of the firm is same. On admission, goodwill of the firm will not increase. On admission, you know what's happening? One new partner comes into the firm. Now, till now, the entire business is handled by 2 people. Now, one more person will come to put this nose in and then handle the business. So, he is buying a part of the business. Buying the part of the. Now, see, till now, 2 people are owners. Now, this person is also owner. 2 people own the assets. Now, this person also will own assets. 2 people add capital. So, this guy also should bring capital. This guy also should bring in. So, the capital is determined by taking assets minus liabilities. Total capital of the firm. In that, how much should be built? When you take the assets and liabilities, we need to take them at the new values. The reason is very simple. Previously, they were following historical cost concept. No, they bought a land for 1 lakh rupees. They bought a land for 1 lakh. So in balance sheet, it is there at 1 lakh. So right now, the market value of that land has become 1 crore. What is the market value of the land? So in the balance sheet, it's still at 1 lakh. You value the business based on land value at 1 lakh rupees. If you do, the value of the business should be 10 lakh. The new partner for 50% share will be happy to give 5 lakh rupees and then buy. He buys, becomes the partner in the firm for 50%. Very next day, the land is sold for 1 crore rupees, 90 profit. We share between all partners. But actually, the 99 lakh is not 1 day's profit. It is over a long period of time. Over that long period of time, people over there were other partners. Only they should get profit in it. So what we do is, in the case of admission, when a new partner is admitted into the firm, before you admit him into the firm, you revalue the entire business. You revalue the entire business. You identify the correct values. That is the reason we do revaluation amount. That is the reason we do. We find all the assets revaluation figures, and all the liabilities at revalued figures. then we will find that we share the profits to partners. So their capital will increase, and then they bring in new partner. And when the new partner comes in, the new partner will buy part of the business. See, the perspective that you need to have is incoming partner is buying existing business of the firm and will buy it from the existing partners. So the old partners are sacrificing, new partner is gaining. That's what we call as sacrifice. Got that? And new partner brings in capital, and then old partners might withdraw some, and then they get the revaluation profit and everything. So that is the reason we do revaluation amount, partners capital amount, and balance. Talking about goodwill. Goodwill of the firm will not increase and not decrease. I'll tell you why. See, goodwill will not increase on admission. Firm's goodwill is valued, and whenever you say on admission of a partner, we brings his share goodwill, he is buying the goodwill. Is what we mean. What do we mean by goodwill? We brings his share of goodwill here. It means that the incoming partner is buying the goodwill of the existing partners. The goodwill is hard-earned efforts or hard-earned and built business empire from two old partners. The new person will come and start enjoying. So that sweat and efforts of the two partners has to be bought by this new partner. So what should we do? We should pay money to those old partners and then buy it. So when he brings in money, he is buying money, he is bringing money to buy goodwill. And he doesn't buy goodwill and then take it home. He gives it in the firm only. Firm may usually it was shared between two people. When third person comes, he will also share the profits in the future. That is goodwill. And that has to be bought by this person. Firstly, what is goodwill? Name or fame or reputation of the partner, super profitable. Nothing. Goodwill is probability that the existing customer will stick to same. What is goodwill? It is a probability that the existing customer will stick to. Fantastic. You have a customer. Now all of you are attending this session here today. Foundation. Next year, 1 year down the line, in the month of October 2023, we'll announce CA Intermediate Marathon Face-to-Face Revision. How many of you will show up? That is goodwill. Hey, Sari Lagura, if you go for break also, you'll be staring at us in the time. So if you think of that and you don't come, then it is not good. So the policy, the efforts of the organization to retain the customer and the customer coming back, that's goodwill. That is the reason, my friend, when we compute goodwill under the average profit method, what do? Adjust average profit multiplied by number of years purchased. What is number of years purchased? Have you questioned it? What is number of years purchased? Number of years purchased is the number of years for which customers will come back to us and purchase from us. Because goodwill is the probability that the existing customers will stick to same business. For so many years, customers will stick to same business. Come back to us and buy food from us. If they buy goods from us for next 3 years, we will make profits for next 3 years. So that expected profit that we'll make into 3 years is already earned without even we doing business for 3 years. Future profit already earned is goodwill. Future profit already earned is rental. My friends is goodwill. So this goodwill can be computed under multiple methods. One is average profit method. What do? Adjust average profit multiplied by profit. Super profit method will say, hey, we should not take adjusted average. We'll take super profits multiplied by number of years purchased. What do we multiply? Super profits by. Okay, now tell me, how do we identify super profits? Super profit is actually whatever profit we earn minus whatever is the profit normally people earn. It is adjusted average profit minus normal profit. What is normal profit? The capital that we have the normal rate of return. How much will be expected to earn? The capital of 1 lakh at 10% return, you are expected to earn 10,000, but we earn 1,000. So our profit is 12, capital is 1 lakh, normal profit is 10. Everyone on the planet earns 10,000 with 1 lakh capital. We earn 12,000. We want super profit of 2,000. Both of you there. You're not in a movie theater. Yeah, you want profit of 12,000. Normally people earn 10. So super profit is how much? How many years can you make that super profit for? Maybe 2 years or 3 years. Multiply with that and you'll arrive at goodwill. Okay, got that? Then we have another method called as capitalization method. Under capitalization method, we identify goodwill. Same thing. Super profit did do it. Super profit mein what did we do? We earn 12. Usually people earn 10. Difference of 10 and 12 is 2,000 into 3 years purchase. 3 3 years purchase, how did we value? 3 years purchase is an accounting estimate. You agree with me? And accounting estimate need not be correct. Accounting estimate means it's an estimate. It can be wrong. So what do you do? We'll reduce our estimation error. What we do is, see, we want 1,000. How much? Sorry, we want how much profit? 10,000. How much did we earn? 10,000. So to earn 10,000, everyone would have to invest 1 lakh. Why? Usual profit rate is 10%. Usually, what is the profit rate? To earn 10,000, how much capital you should invest? But you have invested only 80. Invested only what everyone earns with 1 lakh investment, you earn with 80,000 investment. So difference is so how do we find actual capital? Sorry, normal capital minus actual. How do we find capital employed method में goodwill? So goodwill under capitalization method. Actual capital, sorry, normal capital minus actual capital is 80. Normal capital is 1 lakh. What is normal capital 1 lakh? How much should people usually invest to arrive at that profit? How do we arrive at that normal capital? Actual profit divided by normal rate of return. Actually, you want 10,000. Normal rate of return is 10%. 10,000 by 10% is 1 lakh. You should have invested 1 lakh, but you invested only 80,000. So that, my friends, is your profit. That's how we find capitalization method. Then we have one unwanted method, which is very easy. You take super profits multiplied by unwanted factor, whatever they will do. They'll give you the question 3.2645 for 5% at 3 years. Whatever the factor they give, you multiply, you get goodwill. Get that? Now, people usually do goodwill under color methods. Raised, written off, raised but not written off, adjusted through capital account, nothing required. All the methods of goodwill put together, only one table. You put one table and you are done. Yes, dabba. So all that you need to do in the dabba. See, if I had time, I would have discussed this in detail. Each method in a regular class, I spent half an hour, about like 1.5 to 2 hours we easily spent. Goodwill may we discuss every case, raised, brought in cash, written off, everything we discussed, and then finally we concluded that whatever method may you do, no, everything together comes into one box. See, I become so serious now. I didn't sing only. Time illa, sir. I'll find it. Hey, stop talking, please. Please. If you're talking, then I start singing. Yeah. So this is how we share goodwill. It doesn't matter whether it is admission or retirement or death, whether it is raised, written off, whether it is adjusted to capital account. Doesn't matter. Always remember to do this table. Always remember to do this table. First, you identify the goodwill amount under scope profit, average profit, capitalization, whatever that. Share it to old partners in old profit sharing ratio. Share it to old partners in old profit sharing. Give credit to them because it is because of them that goodwill has been there. And next, give the debit to the continuing partners in new profit sharing ratio. Give the debit to continuing partners in new profit sharing ratio. Identify the net impact. Net impact is the goodwill adjustment. Identify the net impact, and net impact is the goodwill adjustment. It works in admission, works in retirement, works in death. All the three cases may come. Did you get this? Other than this, there is nothing new to be done in admission or retirement. But I would have to mention a couple of important points. One in case of JLP and the other in case of what do you say, death of a partner. Shall I? Which one first? Okay, remember guys, joint life policy, the first mindset that you need to have for JLP is not difficult. JLP is very easy. JLP is very easy. See, JLP is policy on the lives of the partner, but it is taken by the firm. It is policy on the lives of the partner, but it is taken by the because the firm has taken the policy and firm has paid the insurance premium. The maturity proceeds will also go to firm. Maturity proceeds will also go to the money will belong to firm, not to the deceased partner. So there can be two cases: one, retirement of a partner; two, death of a partner. Retirement of a partner, or the partner retires, we receive surrender value. The partner retires, we receive. If the partner dies, we receive sum assured or policy. Get that? Sum assured or policy amount will be huge. Surrender value will be less. Whatever money is received on death of a partner,
is sum assured. Whatever money is received on retirement of a partner is surrender value. This money will belong to fund. This will be shared between all the partners in profit sharing. This will be shared between all the partners in. But always remember, whenever they say JLP money received, check in the balance sheet on the asset side if there is JLP. Whenever there is JLP surrendered or JLP policy matured, check if there is JLP in the balance sheet. Assume that JLP in the balance sheet is 2000. JLP in the balance sheet is, and JLP policy matured and received 1 lakh. So it is like this. There is an asset of 2000 in the balance sheet which realized 1 lakh. There is an asset of 2000 in the balance sheet which realized how much is profit? 98,000 should be shared between partners. However, JLP is not there in the balance sheet. JLP is not there in the, and JLP money received 1 lakh. What is JLP money you received? So entire 1 lakh is profit. You should share entire 1 lakh to partners. You get what I'm trying to tell? This is complicated with the names premium treated as expense, premium treated as asset. Premium treated as expense means that JLP premium what they pay, they write JLP premium account debit to cash account and then write PL account debit to JLP premium. Transfer it to PL. JLP premium is transferred to PL as expense. So when you receive the claim money, that will also go to PL as expense. We will not write it to PL, we will distribute it to partners. However, alternatively, instead of transferring to P&L account as expense, what they do is you pay premium, you get maturity amount. So what you pay is actually not expense. It is all accumulated. They give little more than that. Give little more than that. So you can have an attitude of not writing JLP premium to P&L account debit side. You can prefer to write it as an asset in the balance sheet. If you do write it in the balance sheet as an asset, that's what I want. 2,000 is there in the balance sheet, but you receive 1 lakh rupees claim. So 2,000 is what you paid. So you wrote it in balance sheet. But what you received is 1 lakh. Difference 98,000 is income. Share it between all the partners. And JLP reserve, if it is there in the balance sheet liability side, treat it like any other reserve and share it to all the partners in profit sharing ratio. If you do this, JLP will be cut down. Quickly, shall I recall? Now listen to me. On the death of a partner, what do we receive? Surrender, policy amount. On the retirement of a partner, surrender money. Surrender value, they have to say, and then policy amount, everything you add. This belongs to whom? It should be distributed between all the partners. In what ratio? Profit sharing ratio. If already JLP is there in the balance sheet, sum received minus balance sheet amount, difference is to be distributed. If there is nothing in balance sheet, whatever is received is distributed in all the partners. You get what I'm trying to tell? Yes or no? If there is JLP reserve, treat it like any other reserve and distribute it to partners in profit sharing ratio. Clear? That's it. That's with regard to JLP. Then comes death. Death of a partner is similar to retirement except that that person is not just retired but retired forever. Retirement can be planned. You don't retire now, 31st of March, financial month retire. Someone is dying, you don't retire now. 6 months, computation will become different. Take off the can't. Or someone is like on the deathbed, 31st of December, 31st of March, first of you die today only. If you die tomorrow, then next year's books of accounts also your partner. You can't do that. You get that? So because the death of a partner happens in the middle of the year. Sir, no sir, what if you plan it in holiday and plan for Listen, so usually death happens in the middle of the year. So because his partner till the middle date of the year, you need to give him interest on capital, you need to charge him interest on drawings, you need to give him salary, remuneration, share of profit, everything till the date of death. And for this reason, revaluation account also should be prepared for the mid-year. And whenever we give him profit, P&L account is only not prepared. How do we give him profit? So profit will be given using an adjustment account called as P&L adjustment account or P&L suspense account. This will be later adjusted at the end of the year. And in the case of death of a partner, we need to prepare capital amount only for the deceased partner. And balance to be transferred to executor's account. Same, revaluation account you do, goodwill you will compute, reserves you keep, interest on capital, interest on drawing, salary or remuneration till the date of death, and share it to that partner. Outstanding balance, either pay immediately or transfer to executor account. Same if there is any, give it that also. Got this? This is what we deal with JLP, death of a partner. Am I right? Everyone's getting this? Now, listen to me. Little important part. Little important. There is one question in your ICA material where the partner dies in the middle of the year. But in the question they clearly mentioned, it is agreed by the partnership firm that they will provide share of profit, interest on capital and salary till the year end. They've already agreed. So we'll give interest, share of profit, everything till end. Don't do it for half year. Get what I'm trying to tell? And next important point is the sum that needs to be paid to the deceased partner or dead partner, deceased partner or retired partner, is governed by section 37 of Partnership Act 1930. Because of which, if some partner retires, should give him his money or should agree as to how to give this immediately, installment, after 1 year, how much, now how much rate of interest in that, everything should be discussed, detailedly accepted. If you don't agree upon the same on retirement, or in the case of death of a partner, you need to transfer entire money to deceased partner and then pay him. Deceased partner's executor. If you don't pay, at least the executor should have a term sheet. Okay, we'll pay 50% now and 50% in 1 year. Should agree upon something, decide it, and then put it on paper. You should say something and they should agree. If it is not decided, and not paid, then it will attract section 37. Then what will we attract? Section 37. Yeah. What does section 37 say? It says the retired partner or deceased partner's portion, which is neither agreed upon and not paid, will carry interest at 6% per annum. Will carry interest at or proportionate share in the profit, whichever is beneficial. Assume that 1 lakh is a deceased partner's share. Other two partners have 1 lakh each. So 1/3 is the capital contributed by deceased partner. You get that? If they don't give that money to the deceased partner's executor, and they don't even agree upon how to settle, so then you know what will happen? At the end of 1 year, the deceased partner's executors will get interest on that 1 lakh at 6%. Interest on that 1 lakh at, or 1 lakh is the capital contribution by deceased partner for 3 lakh rupees total capital. So profits, whatever they make in that year, 1/3 profit should be. Whichever is higher, meaning whichever is beneficial to executor. You guys get this? This is the important points that you need to note with regard to partnership. With regard to partnership. So we are still left with depreciation and company accounts. NPO part also. Okay, we'll do that. I want to go to work. I will be back in 2 minutes. Which day? If you all go, you will not come back for 5 minutes. I do know that. So it is very. Get going. We were discussing the topic of partnership accounts. Am I right? Now we'll move on to next one. We'll quickly see NPO what is the examination paper pattern. Every attempt in this question except the very first attempt, no? Very first attempt of CA function, except that every attempt there is a question from NPO. So simply it leaves you with no choice but to no choice but to study this chapter of NPO. But you can slowly observe that usually it was part of question number 5, but it's come to question number 4. The last 3 attempts they've consistently asked it as a part of question number 4 only. So hopefully in this attempt also question number 4 will be NPO. Question number 3 will be average rate account current goods and return or approval and consignment. Question number 1 true or false and chapter 1. Question number 6 will be company. So sir, question number 7 sir yaad I don't know. Sir, ಗೊತ್ತಿದ್ರೆ ಹೇಳ್ತೀರಾ ಚಾನ್ಸ್ ಇಲ್ಲ. I won't tell. Why would I tell it to you? Write the exam and then pass. Yeah. So in this chapter, this is very similar to your final accounts of company. People see it very different. I'd say it's no different. It is no different. The organization is doing things for the sake of profit. You prepare trading plan. If the organization is doing for the sake of promoting an objective, promoting an art, culture, promoting a social cause, fighting against the social evil, like poverty, correct or not, like corruption, or like say discrimination of specific category of people, gender, race, or anything, or fighting against the social evil like illiteracy. Start one college in view. Fighting against depression and then mental sickness of people. Why entertaining them? Why entertaining them? Like IPL in view. All these are not for profit organizations. They are created to promote a purpose, like promoting cricket in the country, like promoting nice culture in the country. So you do all these art and culture based companies where you promote a specific art, promote a specific culture. Those are all again what? Not for profit organizations. So in that case, we don't prepare P&L account. We prepare something like P&L but not P&L. That's what we call as income and expenditure account. What do we call it as? Income and expenditure account is, one second, I will have to open a different file for this because it's not there in this file. These people are like, hey, sir is opening our file. Hey, in our class, when you see our file, it's not like they've done some crime, we have a crime record and then you open the file. In our class, when you see our file, that their class ka file. So this. And we have that kind of record also of each student. I can show it to you. So this is the record of our Sheshadipuram morning bunch. See here. See, we have a detailed track of each student who has attended that batch. How have they performed in quiz? How have they performed in each of the quizzes? So we have a detailed track record of each student who had attended. Oh, yeah, you guys know that, no? Every batch ka. So this is one sheet which has all the data. Hey, whoever is taking access to the sheet, don't read all the names and then like, oh, should we read all these names also, sir? No. Don't go to that page where the names are there. Yeah, and one more thing that you guys can do is whenever you come to this sheet, there's something else called as APTA, Accounts Progress Tracker is what we call. Accounts Progress Tracker. So it has unit wise, chapter wise, unit wise a test model. It is there till chapter 6 couple of minutes. Last 4 chapters it's not yet used. When it's made, I will definitely share it with you. If you can take that up conceptually, you can revise the entire syllabus. Talking on call. Sleeping. He's like this. Whatever it is, whatever it is. Huh? Smelling it. Throwing it. What were you doing lying on the sleeping? Sleeping is the safest answer now. Until anything else, it's not. Sleeping. What was he doing then? No. He's sitting in the first row, he leaned on the front way, desk full on the back, and then he kept his face. I don't know what was it. Okay, done. Come on, let's go ahead. So it is not done for the purpose of profit. Shh, quiet. So the objective of this is to prepare financial statements. In a normal business organization, you prepare cash or bank account. In the case of not-for-profit organization, we prepare receipts and payment account. In the case of normal organization, we prepare P&L account. In the case of NPO, we prepare income and expenditure account. In the case of normal business, we call it profit. In the case of NPO, it is not profit. It is surplus, excess of income over expense. You cannot be using it like how you use profits. Partners will give and withdraw. You can't do it. Here it will be done by way of trust. Done by way of trust. Not trust, no. Trust. Organization will be created by name trust and the money will be there. This can be that surplus should be used only to promote the purpose. Only to promote the purpose that is created. Then we have loss. Here in normal business we call it loss. In this case we don't call it loss, we call it deficit. Excess of expense over income. And capital will be replaced with the word capital fund. And we basically run a fund based accounting. Now usually if you want to construct a building, or if you want to buy a building, what do? You infuse capital, then capital you buy building. You bring capital balance sheet liability. Cash balance sheet asset. You pay that cash, balance sheet asset, cash will go, building will come on the assets. So basically whenever you bring in capital and then buy building from that, balance sheet liability side will have capital, balance sheet asset side will have, right? That's how it works in normal business. In the case of trust, for example, religious or spiritual trust, they want to create one let's say meditation room, or they want to build one temple complex or prayer room. All that when they say, what do? Now they say Gopuram contribution. In front of the temple, they keep on only. They say we are reconstructing the Gopuram of the temple. Whoever is willing to contribute, please put the money into the only. They put them. So like that they collect contributions. That's also a not-for-profit organization promoting a specific culture, cause, art, or fighting against the social evil or promoting a social culture or something like that. So when they collect all that money, that fund, whatever is collected, Gopuram fund, they write cash account debit to Gopuram fund account, cash account debit to temple building fund account, capital account, cash account debit to Anna Satram account, whatever, the free food for everyone, whatever they're building. They write cash account debit to that fund. That fund is like liability. It will come in the balance sheet, liability side as fund. Building fund, what 10 lakh rupees. Building fund, 10 lakh rupees, balance sheet, liability side. The entire 10 lakh will be there in the balance sheet, asset side as cash. You give that cash, you purchase the building, cash building please. So there will be building on the asset side, building fund on the liability side. So usually what happens, there is one proprietor and he only contributes capital. In the case of trust, no, anybody can contribute. Some will be public trust, some will be private trust. So you can take contributions from a lot of people or you can only contribute yourself. What are people doing? Lost. I can easily understand that people are lost on phone. You guys have to use phone, please. You can go to the class and also use. Don't sit here and then spoil the ambience of the class, please. Okay? We do fund-based accounting and it will be done on accrual basis. What basis? Very good. So the must revise topic before the examination is that you need to know this. If you know this much, everything is done. Expense, no. If it is paid before you incur, it is asset. If it is incurred but not paid, prepaid expense asset, opening balance debit side. Prepaid expense asset, closing balance credit side. Outstanding expense, it's a liability. Opening balance debit side, closing balance credit side. If there is pre-received income, you received income before you earn it, it's a liability. Pre-received income liability will write on the credit side opening balance and the closing balance will be written on the debit. And if there is accrued income, meaning you have earned the income but you have not received income. You have earned the income but you haven't received it. If you have earned it, it is your asset. It is your asset. We will write balance sheet asset side. And in the asset, in that I would say income account, opening balance will come on the debit and closing balance will come on the credit. So that's the point with regard to this. So there might be questions where they give receipts and payment, ask you to prepare income and expenditure and balance sheet. Or they give income and expenditure, ask you to prepare receipts and payment and balance sheet. Sometimes in order to prepare your closing balance sheet, you don't know opening capital fund. So because of this, you might have to also prepare opening balance sheet. But there are some questions, very rare questions, where they've given us only some information and then we would have to prepare receipts and payment, income and expenditure, opening balance sheet and closing balance sheet. That's what we call as master problem. Get that? So, irrespective of what type of question, people see these questions as types of questions in NPO. I would say no type. There are no types. Whenever we approach NPO chapter, I don't want you to judge the question as this type question, that type. Simple. They've given no, check what have they asked. Check what have they asked. And then all you need to do is items which has appeared more than once in the question, open ledger. Open ledger account. Read that item, identify asset liability, opening credit, right? Debit, credit balance. And later when you read adjustment transactions, think about the journal entry, post them into that ledger. Close the balances, put them to receipts and payment, income and expenditure or balance sheet, variable. That's so simple this to be done. If I take up a single problem of NPO now, it would take minimum of an hour to finish it. So it would definitely not be possible to do much of NPO here. But all the types or varieties that you people call, like receipts and payment given, income and expenditure and balance sheet to be done. Income and expenditure given, receipts and payment and balance sheet. Or nothing given, receipts and payment, income and expenditure and balance sheet opening and closing, both to be done. With the BRS related adjustment, without BRS related adjustment, all of it, no, one of each kind. 4 questions. It is there on Ishis Academy's YouTube channel already. So just search for NPO master problem and then put my name, accounts man or CA Rajavardhan. You will find that if in case you would need help on NPO chapter, you can watch that. But NPO is a specific topic what cannot be revised in a small span of time, considering that we are at 540 right now. So I would want to go to company accounts, finish that, and then show you that students' answer sheet and finish the presentation that we discussed half of it. Can I do that? Yeah, but if you want me to do NPO my one problem, I will do that, but we will be able to do only NPO my one problem. Company accounts we will not be able to do, we will not be able to see the answer script of that one student. Yeah, and that answer script of one student will not be posted on the YouTube channel, it will not be shown live because the code of conduct of the student, whatever is given to, is that they are not supposed to share the answer script on a live platform like that. But if you search on YouTube, you will find plenty of videos where answer scripts are discussed live on a public platform being shown. But that's against the code of ethics. It should not be done. I'll adhere to rules, so I'll not make it live, but I'll however show it to people and then discuss it. But that will not be live. Whoever watches the session live will not find it. It's not like nobody does it. A lot of people do it. On YouTube only, if you search paper analysis, there are a lot of faculties who've done that. But I would follow to the rules because I want to follow, not because someone has broken. I will also break it. I'm cool. No, get that? So I not show it publicly on the live platform, but I will be discussing in the class pausing the live video. Is that fine? Yeah, great. Let's quickly discuss our company accounts part. Shall we? Give me a moment. And this part, whatever we discuss now, please cut money. Hey, there was one file, no. Company accounts. Guys, silence, guys. Please don't talk now. Please don't talk. Be good now for some time now. Okay, Pani, maatadtira. Okay, now stop talking. Company can raise money by way of two methods. Company can raise money by way of, okay, one by way of capital and the other by way of loan. Whenever we say company raises money by way of capital, we call it share capital, and the loan is called as debentures. When the company raises money by way of share capital and shares are to be issued, we need to learn how to do accounting for issue of shares. That is what is part of our second unit. First unit is completely theory, company, types of capital and everything. So the first thing that you need to know in issue of shares is nominal value and issue price same? The answer is no. Nominal value and issue price are two different items. Nominal value and issue price are two different items. Nominal value is the value quoted on the face of the share. Nominal value is the value quoted on the face of the share. Issue price is the value that is the company collecting when the share is issued to some people. So do you guys get it? Nominal value and issue price difference? Yeah. Nominal value and issue price can be equal. Issue price can be greater than nominal value, and issue price cannot be lesser than nominal value. Issue price cannot be lesser than nominal value. So shares can be issued at par or shares can be issued at premium. Shares cannot be issued at. Very good. You cannot issue shares at discount. It can be issued at par or premium on the other case. Now, what will happen if you issue shares at discount? That will be nothing but non-compliance of section 53. So section 53 of Companies Act 2013 says that shares cannot be issued at discount. It has to be issued either at par or at premium. The people to whom you issue shares, you can call them into, you can categorize them into two. One is good, other one is bad. Who's a bad shareholder? Bad shareholder is a person who doesn't pay money even when you ask for. We call it calls in. The person who pays the money even before you ask for. Calls in advance means the person has paid the money even before you ask for. Like on application stage only you paid allotment money. On allotment stage only you paid call money. On the other hand, the bad shareholder is you made allotment. You ask for allotment money, he didn't pay. You made call, you ask for call money, he didn't pay. You will give him enough time. If it doesn't pay beyond the time, you go for phone fees. That's the last part of the second unit. Before we go in there, let's try and understand how does this topic of good shareholder, bad shareholder come in. Good shareholder and bad shareholder topic comes in because of happiness and sadness of the company. What is happiness and sadness? Happiness means number of applications received by the company is way more than applications called for. Not funny. Applications received is more than applications called for. Company is issuing 10,000 shares. Company is issuing 14,000 applications. That's what we call as a happy situation. This is nothing but a over subscription. What do we call this as? So, in the case of over subscription, wherein the company has called for 10,000 applications but received 14,000 applications, then the company accepts all the 14,000 applications. It cannot. What can it do? It has two methods to handle this kind of situation. Number one, pro rata method. Number two, lot method. Number one, pro rata method. Number two, pro rata method में proportionately they lot. You applied for 14 shares. You applied for 28, I'll give you 20. You applied for 7, I'll give you 4. You applied for 4, I'll give you 3. So proportionately they'll allot shares. Would have applied for higher number, you will get lesser number. Get that? Whenever they do such proportionate allotment, now someone applied for 14 shares, they've been allotted 10. So only 10 shares application money should be retained by me. 4 shares excess application money, whatever you collected, I should return it to them. Am I right? So instead of returning that 4 shares excess application money back to the applicant and later again asking for allotment money from such applicant, what I do is 14 shares application money received, 10 shares allotted, 4 shares excess money is there. I will not give it. I'll keep it and then adjust it against allotment. I'll keep it and then adjust against. That is how this calls in advance will get created. That's how calls in advance will get. How will calls in advance get created? Calls in advance will get created because company has collected excess applications from the applicant, and because of pro rata allotment, the number of applications accepted is less. Such excess money previously collected will not be refunded but retained and adjusted towards further calls. That's what we mean when we say, what is it? Calls in advance. Calls in when we make the call but the person doesn't pay money. That's what we call as calls in arrears. With regard to calls in arrears, now tell me, calls in arrears is asset or a liability to the company? To the company, calls in arrears is, and to the company, calls in advance is. Very good. Calls in advance is an asset. Calls in arrears is an asset. Calls in advance is a liability. See, bad shareholders are asset. From them we are supposed to receive money. So for being bad, we charge them interest. Charge them, and few people are good, such nice shareholders. So we have a liability towards them. We owe them money. We would have to pay them interest. We would have to. So we pay interest on calls in advance and we receive interest on calls in. Company is always big. Company will pay more. Company will collect less. The company has to pay. Company will pay more. And the company has to collect. Company will collect less. So company will pay higher amount of interest. That is 12% per annum. Interest on calls in advance is 12% per annum. Interest on calls in advance is. However, interest on calls in arrears is 10% per annum. Company will collect lesser amount as interest, but end up paying higher amount as interest on calls in advance. Do you guys get that? Very good. So I told you just now that in the case of allotment of shares, company can either do pro rata allotment or lot allotment. Pro rata we do proportionately allotment. For these many shares, we got this much applications. Proportionately we allot and excess money we keep it with us for allotment stage or next stage, call stage. The other option is lot method. What we do is we take lucky dip of the applications. Whichever application comes, we'll allot them shares. Whichever lucky dip application comes, we'll allot them shares. 1,40,000 applications is for 1 lakh shares. 1 lakh applications will be accepted. This 1 lakh will be randomly lottery wise accepted. You get it? Practically, what do you think is actually followed? People think pro rata, but actually speaking, lottery system is followed. In the practical world, whenever IPO happens and people apply for shares, the allotment will happen by way of lot method. Application will be accepted based on lot. Statistically, lots will be picked. Then the next thing is SAT. This is where number of applications that we call for, no, we don't get so many applications. We get less than what we call for. We call for 1 lakh applications. We get some 80,000, 50,000, 60,000 applications. So it is sad. So whenever number of applications received is lesser than number of applications called for, called as under subscription. In the case of under subscription, companies under an obligation to return and refund the entire money. They will have to repay the entire application money that they previously collected. You get it? But they get to keep that money with them and further closes the issue only and only if the minimum subscription of 90% is met. Only and only if the minimum subscription of how much is met? If minimum 90% shares are subscribed, we go ahead with the issue. If minimum 90% of subscription is not done, then we return and refund the application money previously collected. Here, okay. Fantastic. Then going ahead. Whenever there is calls in arrears, we don't keep that money waiting for long. The company will go ahead and forfeit the shares. For that, let me discuss. Yep. So before that, the journal entry for application allotment and call is like this. Firstly, you need to collect the money. So you'll write bank to share application first, share application to share capital. With regard to allotment, first the company needs to make the allotment and then collect money. Application stage, you receive the money, then transfer to share capital. So in the application stage, the journal entry is one. See, there is bank account in the middle. So there is a bank account on the right, and then share capital account on the left. Bank account on the right, share capital account on the left. From bank, money should go to share capital. What are the ways or installments through which you go? Application, allotment, and call. Firstly, through application. First we receive money, bank to application. Then we transfer to capital, application to capital. In allotment stage, first we transfer to share capital. Then we receive bank to allotment. Same with the call. Call stage, first you transfer from share call to share. Then you receive bank to share call. You get it? So you basically do like this. Like that. So you receive and then transfer. Here you transfer and then receive. Application stage you receive and then transfer. Allotment and call stage first you transfer and then you receive. If you don't receive, then what do we do? See, these are the entries. Same, no entries, sir. Bank to share application to share capital, share allotment to share capital, cash account to share allotment, share call to share capital, cash and bank to share call. Correct or not? So we'll do plenty of those. Now we'll quickly get into a situation where, what if we don't receive the money that we call for? Yeah, so you ask for money and if you don't receive, you will forfeit the share. What would you do? So forfeiture of the share is the thing that the company does whenever there is calls in arrears. The process of calls in arrears, you have called and you have received the money and you have given the share. What have you done? You received the money and you have given the, but they didn't pay some money. On forfeiture, you know what do? Take the share back. It will not be the money. Money will be with you. You get that? You will keep the money with you, but you will take the share back from you. And you give the share to somebody who will give money. This is called as forfeiture and reissue. Unlike normal issue, reissue can happen at par, reissue can happen at premium, and reissue can also happen at reissue can happen at discount, conditions apply. The discount on reissue cannot exceed the money previously collected. So it cannot, the discount on reissue cannot exceed the money previously collected. Correct. Meaning, there is a share of rupees 10. There is a share of rupees. Previously, a shareholder paid 8 rupees. He did not pay 2 rupees. So 2 rupees is calls in arrears. You forfeited the share. When you reissue this share, minimum reissue price is 2. Minimum reissue price is, but you already collected 8 from old shareholder. New shareholder pays 2 rupees. Together it becomes 10. 10 rupees one is start. Can you reissue that at 3? Yes. Can you reissue it at 4? Yes. 5? Yes. 6? Yes. 7? Yes. But can you reissue it at 1? No. Why? If you reissue at 1 rupees, 1 rupees you collected on reissue, 8 rupees you collected previously, together it becomes 9. 9 is less than 10 rupees nominal value. Shares cannot be issued. And you collected 8 rupees from the old shareholder. You had forfeited that share. On reissue, you gave it at 3 rupees. How much did you give it at? Previously collected 8. Now collected, together collected, nominal value. You have collected 1 rupee profit, transfer to capital reserve. Transfer to, you get that. What if you reissue the share at 4 rupees? Previously collected, now collected, together, nominal value, profit, 2 rupees. Get that? Okay. Can you reissue the share at 9 rupees? 9 rupees. Yeah, minimum reissue price is 2. Previously collected 8. Now collected. Total. Nominal value. Profit. Can you reissue the share at 10 rupees? Okay. How much did you previously collect? Now collected. Together. Nominal value. Profit. Transfer to capital. Can you reissue it at 11 rupees? Yeah. Previously collected. Now collected. Together. Nominal value. Profit. You know what? You reissue at what price? 11. You reissue at what price? What is the nominal value? Before you count anything, you collected 11 rupees against the share of rupees 10. 1 rupee security premium. Side. 1 rupee security premium. Side. Then you have 10. 10 is towards nominal value collected now on reissue. 8 was previously collected. 80 is what you collected. 10 rupees nominal value. 8 rupees profit. So you should be able to differentiate between profit and premium. You should be able to differentiate between profit and premium. That's what we have discussed here in 2 cases. So we need to see that the reissue price, if it exceeds the nominal value, remember, reissue price, if it exceeds the nominal value, it is premium. Reissue price, if it exceeds the nominal value, it is premium. Reissue price, if it doesn't exceed nominal value, reissue price doesn't exceed reissue price plus the previous shareholder collected money in excess of nominal value is profit. And such profit should be transferred to capital reserve. You get this? On share forfeiture, the entry is very simple. You are taking the share back from the shareholder. So share capital will reduce. So you should debit share capital account. And you are making some profit because you have collected some money against the share, that will be credited to forfeiture account. And previously you had asked them for money but they had not paid. Calls in arrears was there. Calls in arrears is asset. You will credit it now. So we will credit calls in arrears account. So the journal entry for share forfeiture will be share capital account debit to calls in arrears to share forfeiture. Share capital account debit to the extent called up. Share forfeiture account credit to the extent of amount paid up. Calls in arrears to the extent amount is unpaid. After that, when you reissue rate entry bank account debit. Sir, application allotment call, you already did that mistake once. Why did you issue share to some idiot who didn't pay money? Because you didn't know that that person is an idiot. You gave him share thinking that he is a good guy. He made application money, he paid allotment money. He didn't pay call money. Correct or not? Call money So very bad. So what did the company do? Company did forfeiture of the share. Next time company doesn't want to repeat the mistake by giving shares to somebody, again will pay application allotment but not pay call money. So straight away will say no application, no allotment. Full money you keep, take the share and go. That's what you say. So once for all, you will not do any application allotment, write bank to share capital as one single entry. You get that? If you collected excess money, you will transfer it to security premium. If there is discount, it will be debited to share forfeiture. If there is any profit, excess money in share forfeiture, we will be transferring it to capital reserve. For this entry, share forfeiture to capital reserve. A very important point to be noted is, if you forfeit 200 shares, but reissue only 150 shares, amount to be transferred to capital reserve, the amount that is related to only 150. Let me repeat. If you forfeit 200 shares, how many shares? 200. And you reissue 150 shares, how many shares you reissue? Amount to be transferred to capital reserve is the amount related to only 150 shares. Don't transfer entire 200 shares portion to capital reserve. Only relating to this share you transfer. Get what I'm trying to tell? For the shares which are neither reissued nor cancelled, the balance collected against those shares arrears will remain in share forfeiture account only. You will not transfer them to capital reserve. Based on this, the questions are there in the material. Please do solve them and don't skip. And that's with regard to our forfeiture and reissue. There's nothing else that you can expect. There can be one set of questions where assets are purchased from a person and then you give them shares. That's another type that you need to be little practice about. One thing that I would say with regard to company accounts of shares is always do working note before you start with something. You feel like journal entries are so easy and nice, and second piece you might have practiced writing journal entries today, jump into the question and then start writing. Don't do that. Here the journal entries you will be able to write journal entries, but the numbers in the journal entries are not so easy. Numbers in the journal entries are not so easy. So always do a detailed working note before you start with solution. Leave little space for journal entries, do the working notes, and then
the figures into journal entries. That's what you should do. If you don't do that, it will be, let us say you start journal entries, put a number, then you start computing. You have two things running on your mind, numbers as well as data trade. Let's not do that. Finish off numbers. You have the entire data ready. Then start with journal entries. I show you the model working note that we usually do. So that nothing, every number would be basically required. Whatever is required is basically be available. This is a simple question. I tell you the most complex questions working note, how can it look? One of the most complex questions, which has too many shareholders. There is calls in advance, there is calls in arrears, pro rata allotment. Working note will look as detailed as this. Application stage mein how much money is received, how much is to be received, how much is calls in advance, how much is refunded. Allotment stage mein how much is to be received, how much is calls in advance available, how much is utilized, how much is excess, how much money received in on advance. Call stage mein how much is receivable, how much is received, how much is balance, calls in advance, calls in arrears. All of this is detailed. If you do a working note as detailed as this, no, all you need to do is look at the total column and then go on writing journal entry for the 7 lakh, 10, 2 lakh, 4 lakh, 30, 80, 5 lakh. For these amounts, you will go on writing the journal entry. Doing the working note will actually take little time. But the whatever times working note takes, no, so much time will be compensated by saving time or doing the answer faster with write journal entries. Don't ever start counting the time for a working note when you start doing it, because whenever you spend time on working note, it will give you good returns and save the time in the main answer. Yeah, all working notes should be part of the answer, and always try to keep the working notes detailed, complete, and clear. You start following shortcuts in your working note, that's where you get into trouble. If you don't follow shortcuts, you will excel. The moment you start following shortcuts, you are in trouble. You're doing mistakes. You get that? So that's with regard to issue of shares. Then comes debentures. Shall we quickly discuss the debenture part? Maybe this chapter 8, 9, 10, no, we would have done little more slow. If it was packed like we wouldn't have lost 1 hour and then little bit of time yesterday. But I didn't want to leave it at a point like we didn't do 2-3 chapters. It's okay if we rush, but we did. Yeah, I hope you're happy. Come on. Quickly let's discuss debentures. Debentures can be issued at par, can be issued at premium. Debentures can also be issued at discount. Debentures can also be issued at. Similarly, redemption of debentures can happen at par, can happen at premium, can also happen at. You don't have debenture redemption in CA foundation syllabus. Debenture redemption is there only in CA intermediate. But what we need to note is, at the time of redemption of a debenture, at the time of, if you pay extra money, isn't it loss? 100 rupees debenture, you are paying 110 rupees on redemption, isn't it loss? The 10 rupees extra premium what you pay on debenture redemption is loss on redemption. But going by conservatism, going by, you should provide for expected expenses and so what do we do? We should provide for such premium payable on redemption of debentures at the time of issue. We should provide for such premium payable on redemption of debentures at the time of, what do we call it? The name that we give to this is called as LOI, loss on issue of debentures. What is it? LOI, loss on issue of debentures. Very good. Loss on issue of debentures is two things. One, DOI, discount on issue, plus POD, premium on. Let me repeat. Loss on issue of debentures is discount that we gave on issue, premium that we should give on redemption. Discount means we have not collected. 100 rupees nominal value debenture. Should issue at what value? 100. We should at 90 rupees. 10 rupees we didn't collect only. That is loss for us. No? Plus 100 rupees debenture. At the time of redemption, when we take the debenture, how much we should give them? 100. Give them 120. Oh, we pay them 20 rupees extra. That is again loss. So loss on issue of debentures or LOI is DOID plus POD. What is it? Loss on issue of debentures. LOI is DOID plus POD. DOID is discount on issue. POD is premium on redemption. Premium on redemption plus discount on. Got that everyone? Next, loss on issue of debentures, whatever is here, no, it should be transferred to P&L account. It should be transferred to. We transfer this to P&L account over the debenture period. If the debentures are at for 10 years, the debentures are at for 10 years. We transfer this over 10 years. The debentures are at for 5 years. We transfer this over 5 years. This is transferred to P&L over the debenture holding period and debenture holding ratio. Now we issued 10,000 debentures.
All the 10,000 debentures we hold for 5 years. So every year number of debentures we hold is 10,000. So we transfer equal amount over 5 years. What if 10,000 debentures are issued and we did 2,000 debentures every year? First year we had 10,000, second year we have 8,000 debentures, third year we have 6,000, and then 4, and then 2. So debentures are entering decreasing ratio. This loss on issue of debentures will also be transferred to P&L account in such decreasing ratio. Do you get this? This is a point on which the questions can come. Only one so far debenture issue question has been asked. I'll show it to you. The examination paper pattern for say company accounts. So this is it. Sorry, twice it's been asked. Debenture 5 marks ke liye they've asked 2 times. One was December 20 and the second time it was July 21. Otherwise, usually it will be questions on issue of shares only. Last 2 attempts mein questions were having calls in advance, calls in arrears along with interest component. Once it was calls in advance, calls in arrears, forfeiture and reissue based question. But the most recent attempt it was calls in advance, calls in arrears and interest. You got that? Everyone? Pakka? Very good. So going back here, debentures was asked only twice. Let's however finish debenture part. Yeah. So I told you how to treat that loss on issue. This should be the entry. Usually we write bank to debentures. We write the same thing. If there is discount, it will be debited to loss on issue. If there is premium on adoption, again you will debit it to loss on issue. If there is premium collected, you will credit it to security premium, and such loss, whatever is there, will be transferred to P&L account. See the entry? You will write bank account debit, loss on issue debit, to debenture, to security premium, to premium on adoption. And that loss on issue of debentures, whatever is there, will be transferred to P&L account over the debenture period. Clear? Yes or no? Otherwise than that, issue of debentures, the entry are pretty much same like how we read for share. You write no bank to share application to share capital, share allotment to share capital, bank to share allotment. Same thing you do with debentures also. We write bank account debit to debenture application, debenture account, debenture application account debit to debenture account, debenture allotment to debenture, bank to debenture allotment. So we'll write similar entries. Get that? But usually they would question you on a little different part. And last thing is debentures issued for non-cash transfer. You can issue debentures against an asset to a vendor. You purchase building from someone, land from someone, furniture from someone. What is the entry? Furniture, land or building account debit to that vendor account. To that vendor you need to pay cash, no? Vendor to cash is the entry next. Am I right? Instead of writing vendor to cash, you can choose to write vendor to debenture account. That's one thing. Second thing is you can issue these debentures as collateral security. You can issue these debentures as, you get it? Now what do we mean when we use the word collateral security? Like you borrowed loan from some bank or some financial institution, against which you need to give some charge or you need to give some security. But pretty unfortunate that you don't have any asset to give as charge. When you don't have any asset to give as charge, what is it that you do? What do you do? You give debentures to them, but tell them not to tell anyone that it is debentures. You give debentures to them, but tell them that it is not debentures and don't tell anyone that I gave you. So what do you do in that case? You give them debentures, but tell them not to tell anyone. They will keep it a suspense. They will keep it a suspense till the time you repay. If you repay, they will tear the debenture papers. You kottilla and iskondilla. You get what I'm trying to tell? Debentures. So we'll also act like this. They'll also act like this. What is it? We take loan from them. We write bank account debit to loan account. We write bank account debit to loan account. Cash account debit to loan account. We give them debentures. So we credit debentures, and the debit will be suspense. See the debit. What is debit? We call it debenture suspense. We will not tell anyone that we have given debentures, and they will not tell anyone that they have taken debentures. And just in case we repay the loan, what do we do? We reverse the first entry. Bank to bank loan is there. That will be reversed. And they will clear the debentures. So we will return X% debentures to debenture suspense. Sorry, debenture suspense to X% debentures is there. They will reverse that. If in case we don't repay the loan, in case we don't, what do? They will not keep this suspense anymore. This suspense is the debenture suspense. That will be credited and this loan will be debited. Have a look. They will write bank loan to debenture suspense. Meaning it is no more a loan, it is no more a suspense. That debentures will get materialized. They will now have this is with regard to the topic of issue of debentures. Get that? Any specific part of the topic that you would want me to run you through? Now, I'll tell you one last analysis that I have. You people saw so far the analysis chapter wise, correct? One moment. I'll close all these files. There are too many tabs open. This is attempt wise. You see all the past attempts. No, June I have not updated. June I have not updated. Don't look at the June column. Sorry, Jan and June I have not updated. That will take a little time. I'll do that. But do you see this? This is how it's come so far. Chapter wise. I don't know what decision will you take out of this data. But this is one kind of analysis, like chapter wise allocation of the marks. The same data presented in different format. And if this doesn't, I don't know if this makes sense or not, but I'll tell you what will actually make sense. Okay, so this is our analysis question wise. Have a look at this. December 21, question number 1A was true or false. Question number 1B is valuation of inventory on weighted average method. And this question number 1C is short note based question. 2A was preparation of trial balance. 2B is depreciation under WDV. 3A bills of exchange. 3B average due date. 3C account current. And then we have partnership rectification. I told you that partners capital wrongly distributed. We need to rectify that question. And NPO admission. And then 5A is rectification. 5B was final accounts, manufacturing trading PL. In the attempt after this, they asked manufacturing trading PL and balance sheet. And lastly, there was short notes questions after company note. So this is each chapter wise. So each attempt wise. This is December 21 paper, and then we have another paper, July 21 examination. Question number 1, 2, 3. You can see this. You should observe a couple of things here. What is it that you observe? Tell me. Some things are red. Why? See, in this entire paper, no, all other questions are easy. The ones in red are the tricky ones. If you solve the red ones, it means that you almost solved this entire paper. So now, considering the fact that how many days we have for an exam? 15 days? 20 days, 22 or 23 days here. 25 days. 25 days, if you say that you solve all the 9 attempts paper of accounts, no, it's little ridiculous. Because you need to revise the topics also, and you need to read other subjects also. I'm not so selfish, I'll not say only read accounts. I understand, I'll let you plan it in such a way that you need to read other subjects also. Because you need to read a lot of other subjects also, it is ridiculous and impossible for you to solve all the 9 papers of accounts. I will share the solutions along with the questions. But this is an Excel sheet where I have solved all the questions, not all the attempts, maybe last 4 attempts or something, and it is there in the Excel sheet format. Now, you want December 21 question paper. Click on this December 21 exam paper. Is the link active? I think this one is active. Wait. Hey. Hey, this was working actually. This should work. There is an hyperlink connected. I think now I am not able to do that. All that you need to do is you need to come over this link and then click on this blue color text. If you click on the blue color text, it will open the November 2020 exam paper. So the hyperlink is made that way. And if you click on this link to class, see all the links are actually active. I don't know why it's connected to too many things and it's not getting detected. It's showing a very different kind of icon. But usually the link will work when you open on the phone. So you just need to click on that link. It will take you to the video wherein these solutions are discussed. So assume that you want valuation of inventory stock reconciliation question solution. You just need to go to this paper. So which is it? May 2022 RTP. So May 2022 RTP, if you go each question solution, in our format, in our working mode style is there. If in case you don't understand that specific answer, you want that video, you don't have to watch the entire video. All you need to do is come to index, click on this link to class here. It will take you to that class video. You can watch just that class. But all these links are actually for a paid subscription, which people don't have. But very soon I'll be making all these questions into YouTube. Now I've started doing it question wise. I want to dump all the videos at once. I don't want to just push. Now if I upload one question number 2A, what nonsense? What is this? So what I'm going to do in the future is I'm going to upload answer to each of it. 1B, question wise. And I'll make all the links into this kind of issue. So wherein if anyone wants, they don't have to watch the entire video. Right now, no. The only crunch to you people is time. Time that you have is very less. And you end up wasting the time in watching things that you should not watch, or you're watching things what you already know. So you should get help for only that thing that you want to the extent you want. So what we'll do is we'll make it active in such a way that whichever question you don't know answer, you can see solution to only that video. Solution to only that video and only from that part. So that's what I'm trying to make it possible with this sheet. So there's a lot of other more work needs to be worked on this. I need to say a lot of sleepless nights will go in, but we'll definitely make it. But to the extent it's available, you can use it for your exam preparation. All the solutions are there, and I'll go on updating the rest of the question paper analysis, and I'll mark some questions in red. Whatever I mark in red now, only those questions you solve. That is more than sufficient. You don't have to solve all the questions from that paper. You guys get that? That's with regard to this paper analysis, and you will also get to see the pattern, which question has been asked in which attempt. If I do any further analysis in the upcoming classes, I'll definitely share it with you people in the session that I'll tell you. See, something is wrong. Whatever I tap, see, you know, see if I type control S, save, save after. So, but those links are active. Whatever it, you can get the paper also from there only. Now what we do is, shall we finish off that little bit of presentation, exam paper preparation, and the rest of the links I'll share with you people guys. Consignment, company accounts, NPO, partnership, all of the links are there. I'll share all of them to you people on the Telegram. You take it. So I've not counted the number as to how many true or false questions are we coming down the total number, but it comes down to be a very huge number. You only saw some chapters has 60, some chapters has 50, some has only 15, 20. So I have not counted put together how much is it come, but it will come to a very huge number. You can easily say about 350, 400 plus true or false questions. You can finish all of them. Trust me, nothing can stop you. Nothing can stop you. All the way right. I'll pause the recording for a time. Till where had we discussed yesterday? Are you a student or evaluator? Done. Whether to read in the night or the day, done. Night or day, done. Okay, this part. Okay, now see. Listen. How to kill the boredom. You guys will be bored when you're studying. So when you're bored, now what do you do? That's when you start taking break. You initially make a plan of taking a break for 5 minutes. But when you get up and then take a break, by the time you come back, it will be an hour. Because you never feel like coming back and then sit. So remember that you don't have an opportunity to feel bored. You don't have the liberty to feel bored at any point of time. You can't afford to feel bored. So only way to kill boredom is not by taking break. So the way to kill boredom will be change of something. What is the only way to kill boredom? When you're bored of accounts, read math. When you're bored of math, read law. When you're bored of law, read BCR. When you're bored of reading, start reading. When you're bored of writing, start reading. When you're bored of writing and reading, start watching a video. Get what I'm trying to tell? When you're bored of writing, reading, and then watching, close your eyes, sit, and then try to recall some subject for some time, and then you can come back. So I tell you, there is no point in resting. There is no point in. From now, you can never ever become. You don't have enough time to rest. So press the pedal really hard. Accelerator ಮೇಲೆ ಕಾಲಿಟ್ರೆ ತೆಗಿಲೇಬೇಡಿ. ಹೇಗೂ ನಮಗೂ ಸಮಾಧಾನ ಇಲ್ಲ. Go full fledged, full swing. Straight inter volley go ಬಿಡ್ಬೇಕು. You guys get it? As simple as that. So remember, we usually tell people to slow down. We tell people to slow down, take breaks, take a day off, or say do something other than studying. We tell all of this. That's when the approach is 6 months, 7 months, 9 months and all. But considering the fact that you hardly have less than 30 days left for your examination, you don't have any time to be bored. So never ever you will be bored. If you're sitting and then you're bored, you feel like getting up and going, ಕೂತ್ಕೊಳ್ಳಿ ಏನಾಗುತ್ತೆ ನೋಡೋಣ. Maximum you might pass ಅಷ್ಟೇ.
You get what I'm trying to tell? So this is what we used to do. Okay, when we used to study for fun, we used to sit for 10 hours, 12 hours, and then study. But the only point is, if we get up, no, like we used to not let the other person get up and like, oh, no, and then that guy doesn't get up, I also doesn't get up. If we get up, we can't. So we always used to sit down. Let's say, see, simple, okay. Now if we are bored, we get up. What will we do? We stop studying, no more. Correct or not? Now it's another 20-25 days. If I don't study for next 20-25 days, if I get up and then waste time, then I have to study for 6 months. You have to study for entire 6 months after the result. So it is about 20 days or 6 months? 20 days. 20 days or 6 months. So sit for 20 days. Sit for 20 days. Finish it off. You get what I'm trying to tell? Yeah. So then the next point that you should remember is mobile phone and laptop are the biggest distractions that you can have on your part. You get what I'm trying to tell? So whenever you want to use phone or laptop, no, but now this is little different. 2 years ago, how we should tell students to prepare is stay away from mobile, stay away from laptop and then prepare. But now, no, that laptop and mobile phone has come into our study culture that you cannot study without mobile phone and laptop. A lot of your material is there, a lot of your videos are there. All those things are there in the mobile and laptop. You can't say that I will stay away from mobile phone and laptop and then study. But you should use mobile phone and laptop and then study. So what you need to do is you need to ensure that distractions won't happen to people when you use mobile phone. You get that? So whenever you're using mobile phone for PDF or Excel sheet or whatever it is, to the extent it is avoidable, avoid it. The extent it is avoidable, avoid it. Meaning, when you are studying seriously, don't keep your mobile phone. Keep everything, arrange printouts or write it down. If you want to see something and write down everything, keep the phone away and then start studying. If you want something on the laptop, write down everything that you want from the laptop, keep the laptop away and then start studying. Don't try to make this laptop or mobile phone as a part of your study. Or see it like whatever I want to do from mobile phone or whatever I want to do from laptop, I'm only going to do from night 9 o'clock till 11 o'clock. So any part of your study or exam preparation what needs mobile phone or laptop should happen only 9 to 11 in the night. From morning till night 9 whenever study, it should be studied without mobile phone or without laptop. So plan out as to what is it that you should study for which mobile is it. You're studying at 10 o'clock in the morning. Suddenly you feel like, oh, this one, no, I need laptop for this. Don't open your laptop. Write it down on a paper. To do this, I want my laptop. Write it down, keep it all ready. So keep all the work accumulated, which needs laptop or which needs phone. At the end of the day, you open your laptop or mobile phone, use a phone for that work that you wish. And you do it only for that list of works. Don't bring up a new work. Only those list of works. Because you should first decide what will you do with the phone or what will you do with the laptop before you take it. Don't take it and then decide. Take it and then you open some message and then you go to some Instagram link, then you go to one YouTube short, then you go to mail, then you download one application, then you'll be watching video on YouTube, some from on the internet. Decide first what are the tasks that you want to do on the phone or the laptop. Write it on paper. That also don't want to do it on the phone. Write it down on a paper. Then open the device, finish it and then close it. That's one thing. Second thing is all these nonsense things are there, no? This social media. I won't say that you stop it because if I say stop it, you will not listen to me. So it will straight away shut down on my face. So I'll say you use it. I don't have a problem. But you know how will you use it? You know how will you use it? You know how will you use it? You should use it standing. You should use it standing. One moment. Yeah, point. So what is it that I was telling? What I was telling you people is, use your phone standing. Use your phone. So don't be like sit comfortably, lie on the bed and then use your phone. If you do like that, no, you will never be able to keep a track of how much time you spend on the phone. If you and don't walk also. Stand still, hold the phone and then use it. When you stand still, hold the phone and then use it, no. At one point of time, your legs will start hurting. That means that you're starting using phone for a long time. The phone is in. You get that? Simple. You will never sit. No walking. Walking and talking, very comfortable. Very comfortable. If you do stand still, hold the phone. Stand still, hold the phone. You get that? That will ensure that you don't spend too much time on the phone. Do you guys get that? Then, so what I want you to do after that, then the last one, revision rule. So all of us need to revise the subject before we go into the examination. Do you agree with me? But when you revise, no,
I want you to revise it wisely or don't revise it. Bad revision is more terrible than no revision. Bad revision is more terrible than sometimes without revision, if you go for the examination, you score good marks. But if you do really bad revision, you might actually score lesser marks than what you score with bad revision. You guys get that? I'll tell you how does it work. Now, when you walk into your home and if it is dark, do you know where the kitchen is? Do you know where the matchbox is? Do you know where the candle is? Yes. So you can walk into the kitchen, take the candle, you can walk into the puja room, take the matchbox, lit the matchstick, light the candle and then keep it. Can you do this? Once the light comes, if you throw the candle away and the matchbox away, next time when the power goes, you will be able to find where the candle is. So why you didn't keep it at the right place where you're supposed to keep it? You didn't keep the matchbox back at the place you're supposed to keep it. You threw it. You get what I'm trying to do. So what should you do? You should keep the candle at the right place. Keep the matchbox at the right place. Your brain, is like an almirah. There are a lot of compartments. Each compartment is for subject. In each subject, you neatly align chapter 1, chapter 2, chapter 3. In the classroom, we did that. After that, when you revise also, right now in the marathon, we've done that chapters. We discuss 3 chapters together, one after that. But what you people do during revision is, you're doing chapter number 1 or you're doing chapter number 6. In the middle, someone will ask one doubt on chapter number 7. So you'll start seeing that chapter number 7 come. And then you come back to chapter number 8 because someone else is discussing. Then you come back to chapter 5. Then you know what happened? 3 different files open in your mind. And then you keep them back, you keep them completely messed up. In the examination, you search for that file, it's all messed. It's not properly aligned. So decide what you should study. Open, study that, close that, and then open something else. You're studying something, someone comes to ask something, don't entertain. Don't. I'll say no. I'll finish this, then I'll talk to you. So do a planned revision or don't do revision. Do a planned revision or don't do revision. Then the next part that I want you to note is the last one. Don't ever call up your friends to check, okay, what are you studying, how much are you studying, what did you write. This is an utter nonsense thing you shouldn't do. Because you need to remember that you are not running a rat race. You are not running a rat race. So you might be a lion. Don't get into this rat race job where you will check as to what is the other person doing. Even right after the examination, you will never ever check and call up with your friend and then ask how many marks did he attempt, what question did he write. No discussion. In fact, I'll tell you this. Listen, this is very harsh, but this is what you guys should do. What you people should be doing is, after you write the examination, when you're coming out, 2 minutes. After the entire examination, before you step out of your examination hall, tear your question paper. Tear your question paper, put it in the dustbin and come out of the exam. I'm not talking about the premise or the building. Classroom where you write the exam, no? After you write the entire answer sheet, tear the question paper, put in the dustbin there only and then come out. Because you bring that question paper out, till the time you get into the auto or bus, you feel like looking at that paper. Did I answer this? Oh, did I deal with this adjustment? What did I do with this? You start thinking all of this, which will easily mess up your mind. You might have done absolutely great, but you can sit and then look at the question paper, and for a lot of time you can mess up. No matter how big is your bill of saying that, no, I will not look at the question paper, I will not count how many marks I get. No matter what you tell, okay? By the time when you walk through that steps, one or the other person in the steps will be talking, did you answer this 3A, 4? Then did you answer? You start with. You end up opening the paper and then see. Or even if you come back at home and then sleep, or come back at home and then start studying the next paper, little later in the night, when you are done with the day, it's like, let me just see and then write marks and then total. You end up doing it. And that can ruin your next paper. That can always ruin your next paper. I have my very own friend who wrote CA Intermediate Group 1 accounts paper, felt like he didn't do great. He stopped writing the exam after he came back home, analyzed his paper. He didn't write paper 2, paper 3, paper 4. Yeah, he didn't write paper 2, he told he'll write next attempt. And when the results came, paper 2, paper 3, paper 4 absent, paper 1 63. Oh, nahi, just imagine how would he feel. Very live example, very good friend of mine. In fact, in touch, I can make him talk to people sometime. So this is how terrible it can go if people do analysis of the paper. So just to ensure that you don't tear the paper, throw it and come. You can download the paper later from ICA website. You get what I'm trying to tell? And don't carry books to exam hall. Don't carry books to... Why do you carry books? You studied for last 6 months. Isn't it sufficient? Why do you carry books to exam hall? You study in the last 15-20 minutes? Really? Yeah? See, it will not work. But how many of you really feel like that last 15 minutes also you can study and it's of great use? You don't want to waste any time. You want to use that every minute to minute. Great. I appreciate. I appreciate. So you don't want to waste any time. Carry books and fine. Carry books. But when you go to accounts exam, carry law books. By law, accounts exam will get over 5 o'clock. No. By the time you reach home, it will be easily 7. 2 hours time is there. You know what you do? When you go into accounts exam, you read accounts and go. Accounts exam, when you're coming back home, do you read anything? No. You will come baker. Then you use. No. You act differently. So if you want to read, no, stay back at home till 1 o'clock. Stay back at home till 1:50. No, where the examination all is and you can reach it. Don't go there 1:30. Don't go at 1:20, 1 o'clock. Even if you reach the exam hall, this is a very weird attitude. It works for me. What I do is I don't go to exam hall till 1:45. 1:45 they give the question paper. 1:42 or 1:40 p.m. I will not be inside the building. I will be outside the building. Except the first day. I will be outside the building. 1:42 I will start walking to the building. I straight away walk into my classroom, sit there. I don't want to talk to anyone out there. You go there, you don't want to talk to anyone, okay? But there will be 3, 3, 4, 4 people gang there. Hey, did you do this ICA material latest question? Oh, this pattern I saw. Yeah, this Hyderabad says some important question paper had come. All this will happen. You don't want to hear, but you can't close your ears. You can only close your eyes. So stay distant. Stay distant. And all your friends, you don't have to talk to them on the exam. It's exam day, you don't have to talk to anyone. You talk to them after all the papers are over. So these are few weird offbeat techniques that I would totally say that it should work to you people. I hope you would definitely follow this and familiarize yourself with the exam hall and only carry the previous year paper, the next subject's books, okay? Let's see how many of you will carry next subject's books. Don't carry that attempt's book. When you go to accounts exam, carry law. When you go to law exam, carry math. When you carry math to law exam, no, assume that you keep the books and people will get maths are not math. That's another element of fun that you can try out at the exam. That's with regard to the tips that I wanted to share. Make yourself comfortable, carry chocolate and everything. And this is the entire marathon revision that I had planned for.
Good evening, all the CS. Here. Actually, I learned it from our sir. Our sir used to wish us daily in the class in this way, so that we get really motivated through those words itself. Actually, thanks to Yashas for giving such a faculty for us. Because sir is literally, with sir I have learned many things. Actually, this is my third attempt. According to ICA, but I am attempting the second time. Due to my family situation and my health situation, I was not able to attend my attempts. But I learned everything from each attempt. Now I am health conscious, now I am very perfect to write my exam. But I am going to job also, I was not able to study. I just took book yesterday. Because I came to sir's class. I came to class only because of sir. Because it's Rajavardhan sir class. Because after 1 year I am going to... Actually, he's an inspiration for me every time. Every time I get literally depressed, I just see to sir's Instagram posts, Instagram videos which really make me motivate towards CA to achieve. And I'll be a best chartered accountant in future. I like holding some award from sir. I'll get it. I'll mark this word. Now, so Yashas has given me really very best material, very best classes to me, all the 4. And but I love accounts class due to sir only. Personally, also sir has helped me in showing the pathway of I've gone to stock audits. More than 6 stock audits have gone. It's because of sir. Sir referred me for the Big Sir's company, and they used to call me continuously by loving my work towards the stock audit. So it really helped me financial way also and in my career way also. I really very blessed. I'm very blessed to have this stage to thank Rajavardhan sir, because this is a great opportunity which I can't miss out. On behalf of everyone, I thank Yashas and as well as Rajavardhan sir for this opportunity. everyone. I'm Kushi. First of all, I would like to thank Justice Academy and a very big thanks to Mr. Rajavardhan sir because he has put in a lot of efforts, making all the true or false questions, sharing some amazing examples with us, and analyzing paper of almost all the years, RTPs, MTPs. He has put in a lot of efforts, and I would like to tell that these 2 days were very productively utilized by you also, by us also, and it's now our responsibility. Like his part of work is already done, and now it's our responsibility that we utilize these 2 days and the next coming days, and we clear our CA foundation in the first attempt, and we must be those students who Asians Academy remembers always. Shouldn't be those who come in the next attempt in the foundation as well. And once more, yes, Rajavardhan sir was very active. He made us active, interactive in class, and very lively, very good. And I loved the class, his way of teaching. Everything was just perfect. Class I loved. Yeah, thank you for the opportunity. Thank you.
Is what we work for. At the end of the day, when you hear two good words, Trilok wants to talk. Please, Trilok. No dancing, okay, Trilok? No, looking at the floor, you might feel a little excited, but expect to dance. The mic will get
First of all, hello, good evening everyone. So for those of you who don't know me, I'm Trilok. I attend classes in Zainab in morning batch. So most of you over here, I'm assuming you don't know the backstory, how this was organized, this marathon. So first of all, I remember around start of this month, sir, it was just a thought and sir said, he asked us students in class, do you guys want an accounts marathon? We were like, yeah, it would be very helpful. So he personally, he went to the Yesh's admin team, I guess, and he asked them to prepare a form to fill up a registration form. And then I think initially we were planning to charge a fees or something, a small amount to attend. But then Rajavardhan sir, like I
never
said,
an idea. The idea was to make free. At the very first time,
fees and the charge not very
a bid happened. The idea was.
So after that, we had, I think, our class was supposed to get over on 7 November, and Rajavardhan sir had a holiday the next day. But he sacrificed his holiday and he came just to teach us. So that's not his only effort, to be honest. When this marathon revision was announced and it was announced that 600 people, I was initially confused whether or not I should attend this marathon. And then the next day, Rajavardhan sir on Instagram, Telegram, he uploaded a video. Should I attend or not attend? Should I attend or not attend? I saw that video and I decided to come here, and I would like to tell you that it's definitely been worth it coming here, because I can guarantee you these 2 days are not being wasted. I could not have been more productive at my house than being here. I had a few doubts and consignments which are completely clear right now. I think most of you also who have come here would tell it's definitely worth it. And for us, it's just 2 days that we attended here. But for Rajavardhan sir, he would have taken like at least a week to organize everything. All these PowerPoint presentations we just saw. Initially, he used to teach us just in Excel, but he made all these PPTs especially for these 2 days. So yeah, he's put in a lot of efforts in the background. So I'd like to, can you all give a huge applause for him? Marathon, and other than the marathon, we all can agree that Rajavardhan sir has always made our class very amazing, very fun. I am not teaching other teachers, but every class in Yeshus has been very knowledgeable. But Rajavardhan sir's class, okay. Rajavardhan sir's class has been very friendly. He isn't like a teacher to us. It's more like a friend who's teaching. Yeah, his class has been not only knowledgeable but also very fun. And then even personally, Rajavardhan sir has helped me a lot. And when we have gone out like a couple of times, I tried to shoulder push him to the bill, but no, he didn't let me. He always paid. I think you all know, he's such a nice person at heart. So thank you sir for this opportunity. Thank you for Sir, that's not enough. not the right one. That's
Thank you. Thank you. Thank you. Sure.
Good evening to everyone. This words are from my bottom of my heart. Okay. First thing, because why I love accounts means the teacher will be like friend, like talkative. Sir will share thoughts, like feelings, what like will be like friends, not as a teacher and student. The relationship is not like a student and teacher. It is like we are friends, like more interactive. In that time, we will be more interactive, where we can share our thoughts and feelings. So we are getting difficulties in these stages. There will be like understand, because with the relation is friendship, not like a strict teacher or a student who will be fear about the teacher to do that. For that, I will be really thankful to sir, because sir is very interactive to us. That is a great thing, and sacrifice will be not for everyone. Everyone will not sacrifice for anything, but sir done very hard work for to achieve in our life. Sir will not get anything by achieving ourselves, but sir make a lot of efforts to us to do something good for, and he will be like sir will be always so should sir is more 100% effect. And okay, ಅಂದ್ರೆ ಈಗ ಅಂದ್ರೆ ಏನಾಗುತ್ತೆ ಅಂದ್ರೆ ನಾವ್ ಯಾವಾಗ್ಲೂ ಈಗ ನಮ್ ಬರ್ಡೇ ಬಂತಂದ್ರೆ ನಾವ್ ಯಾವತ್ತೂ ಕ್ಲಾಸಿಗೆ ಬಿಡು ಒಂದಿನ ರಜಾ ಆಗುತ್ತೆ ಅಂತ, ಬಟ್ ಸರ್ ಈವನ್ ದಿ ವರ್ಕ್ ಟೈಮ್ ಬಿಟ್ಟು ಕೂಡ ಸ್ಲೀಪ್ ನೈಟ್ಸ್ ಇಟ್ಕೊಂಡು ವರ್ಕ್ ಮಾಡಿ ನಮಗೋಸ್ಕರ ಏನಂತಂದ್ರೆ ವಿ ಶುಡ್ ಗೆಟ್ ಗುಡ್ ಮಾರ್ಕ್ಸ್ ಅಂಡ್ ವಿ ನೀಡ್ ಟು ಪಾಸ್ ದಿ ಎಕ್ಸಾಮ್ ಅಂತ ಸರ್ ಡನ್ ಲಾಟ್ ಆಫ್ ಎಫೆಕ್ಟ್. ನಾವು ಅಷ್ಟು ಮಾಡಿರಲ್ಲ, ಬಿಕಾಸ್ ವಿ ಆರ್ ರೈಟಿಂಗ್ ದಿ ಎಕ್ಸಾಮ್ ಬಟ್ ವಿ ಆಲ್ಸೋ ನಾಟ್ ಡನ್, ಬಟ್ ಸರ್ ಡನ್ ಲಾಟ್ ಆಫ್ ಎಫರ್ಟ್ಸ್. ಅಂಡ್ ಇನ್ನೊಂದೇನಂದ್ರೆ ಯಾವ ಕಂಪೇರಿಸನ್ ಅಲ್ಲ, ಲೈಕ್ ಯಾರು ಹೇಳಿರಲಿಲ್ಲ ಅಂಟಿಲ್ ಯೋರ್ ಬ್ಯಾಚ್ ಫಿನಿಶ್ ನಾನು ಯಾವ್ದು ಫಿಲಮ್ಸ್ ನೋಡಲ್ಲ ಅಂತ ಹೇಳಿದ್ದೆ. ದಟ್ ಮಚ್ ಆಫ್ ಸ್ಯಾಕ್ರಿಫೈಸ್ that much of sacrifice so I will be thankful for sir, and I will be thankful for SS Academy also, because the best decision in my life was to join SS, because before 5 months when the batch start I don't know anything, like now when I compare to 5 months back, now I am very improved and I consider I have self confidence. So thank you for
sure. Next one.
So good evening everyone. I would like to keep this short and crisp, but I know complimenting sir would be really tough to do it in a short and crisp way. But sir, thanks a lot for everything that you've done for our batch. You've actually gone out of the way so many times to give us guidance, not only in terms of accounts, but so many other aspects of life. You've told us stories about Mahabharat, history stories, your journey. Everyone has their own journey, experiences from that, and that helps one get perspective into what they're doing. CA, definitely you need a lot of hard work to clear it, but along with that, the icing on the cake and everything matters. And sir has done so much for us, and I think we can at least create one sort of history for him, that every student of sir clears CA foundation and give him 100% record. Okay, so that it is something he deserves, and that's the best way we can give him something. and I know the work sir puts in, like probably the amount of work he's put in, we have not even done 50% of that, despite rewriting our exams. He's doing so much for us. So, sir, thanks a lot from me, and I guess it's just me who's talking here, but everyone would also want to tell you thanks, sir.
ನಮಸ್ಕಾರ. ಎಲ್ರು ಇಂಗ್ಲಿಷ್ ಅಲ್ಲೇ ಮಾತಾಡಿದ್ರಿ, ಸೊ ಅಟ್ಲೀಸ್ಟ್ ನಾವೊಬ್ರು ಮಾತಾಡೋಣ. ಏನಿಲ್ಲ, ಲೈಕ್ ಸರ್ ತುಂಬಾ ಸಪೋರ್ಟ್ ಮಾಡಿದ್ದಾರೆ ಹಾಗೆ ಹೀಗೆ ಅಂತ ಎಲ್ರು ಹೇಳಿದ್ರಿ. ಅದು ಆಕ್ಚುಲಿ ನಿಜ, ಅದು ಇಲ್ಲ ಅನ್ನೋಗೇನಿಲ್ಲ. ಆದ್ರೆ ಆ ಸಪೋರ್ಟ್ಗೆ ಅಲ್ಲಿ ಕೂತಿದಾರಲ್ಲ, ಯಾಕಂದ್ರೆ ಅವ್ರ ಸಪೋರ್ಟ್, ಬ್ಯಾಕ್ ಸಪೋರ್ಟ್ ಸರ್ ತುಂಬಾ ಇಂಪಾರ್ಟೆಂಟ್. ಸರ್ ಯಾವಾಗ ಬರ್ಬೇಕಂದ್ರು ಲೈಕ್ ರಾತ್ರಿ ಲೇಟ್ ನೈಟ್ ಏನ್ ಕೆಲಸ ಮಾಡ್ಬೇಕಂದ್ರು ಮ್ಯಾಮ್ ಸಪೋರ್ಟ್ ಇಲ್ಲ ಅಂದ್ರೆ ಸರ್ಗೂ ತುಂಬಾ ಕಷ್ಟ ಆಗಿರೋದು. ಸೊ ನಮ್ಗೆ ಇಷ್ಟು ಇದಾಗಿದೆ ಅಂದ್ರೆ ಲೈಕ್ ಸರ್ಗೆ ಬ್ಯಾಕ್ ಸಪೋರ್ಟ್ ಮ್ಯಾಮ್. ಸೊ ನಾವ್ ಆಕ್ಚುಲಿ ಅವ್ರಿಗೂ ಲೈಕ್ ಕ್ಲಾಪ್ ಮಾಡ್ಬೇಕು, ಬರೀ ಸರ್.
So we have January, it's her birthday itself. We have January and it's her birthday today. So happy birthday, birthday, birthday to you.
Thank you so much everyone. I'm Janvi. I am studying in Safe Foundation evening batch, Jayanagar. So I guess everyone are elder to me right now. I'm studying second year. So everyone would have written second year exams and came here. I was in a state of mind 5 months back. One, I don't know anything about Safe Foundation. But if you don't know anything, you have two states. One, you're scared. One, you're happy like me. Because I don't know anything. I guess I was a bit serious when I came to classes. Starting only I missed some 2-3 classes due to some family issues. And then accounts class started. Then I realized the meaning of the word consistency. Thank you so much, sir. I never knew how this CA course will be. I opted CA because my dad said, yeah, I can help you. But I really started building up respect for everything, every single thing. Whether it is institute, teachers, everything. All these students have this bad attitude of calling teachers in a very singular manner. But now I started calling whichever teacher, whether I like or not, I'll just call them sir or madam. Thank you so much, sir. I thank my parents because they sent me here. Otherwise, I wouldn't met such a wonderful teacher. Thank you so much, sir.
So three of them are going in as a team.
Teamwork, sir.
Yeah.
Yeah, teamwork. Okay.
Good evening, everyone. Good evening, sir. Time of clock. 2 minutes. First of all, ಹೇಳ್ಬೇಕಂದ್ರೆ was a great session. ಎಲ್ಲರೂ ಬಂದಿದ್ವಿ ಇಲ್ಲಿ ಮಾತಾಡೋಕ್ಕೆ. ಎಲ್ಲರೂ ಸರ್ ಬಗ್ಗೆ ಹೇಳಿದ್ರಿ, ಕ್ಲಾಸ್ ಬಗ್ಗೆ ಹೇಳಿದ್ರಿ, ಬಟ್ ಮ್ಯಾರಥಾನ್ ಬಗ್ಗೆ ಯಾರು ಹೇಳಿಲ್ಲ. It was a great marathon and I seriously thank HS Academy. Sir, hats off to your teaching, sir. You are really great, sir. And guys, I guess even you have enjoyed the session. Ashit.
Good evening, everyone. My name is Sneha, and we all three are from online batch. We are not offline batch. Yeah, he is offline, sorry, but we both are from online batch. And most of them, I think, sir knew the name because they are from offline batch. So I'm Sneha, he is Harsa, he is Pankaj. So we three are friends from since very long, and we started CA together, and we are doing it. And when I talk about marathon, it was great, sir, because I have never heard you live. I only heard you online, never heard you live. And my friends used to say, CA Rajavardhan sir's class have gone live, and it's very great. I never experienced it. So I came here 2 days. I didn't get bored at all, and it was great. And I got a very big clarity that how I should now make a timetable to study accounts, especially because I was very much confused, and I got a clarity. And marathon was great. Thank you, sir.
First of all, it was a great and amazing session for me. I'm actually not from USS, and it was my first class of sir. And second, I have a lot of stage fear, but still I came here to show my concentration. When yesterday I came, I saw sir and I thought, this young boy is a sir. Really, I was like, he might be one of the students, but teaching really proved me wrong. He was really great and amazing session.
Thank you guys. Thank you for everything and thank you for being there all this time. So shall we wrap it up for the day? Last. I don't want to make him go home sad.
Hi, hello, namaste. My name is Ramesh from. I am a student of online. Actually, I am from Anna Academy. Starting, I started that it is with SAR classes, but don't know for what purpose SAR has cancelled his teaching for us. But SAR has provided efficient and can't. But SAR has provided a lecturer named Hardik Thakkar sir, who is from Mumbai. You can't expect any more from sir, because Rajavardhan sir, due to Rajavardhan sir, we have got Hardik Thakkar sir name. So very much thankful for sir and mainly for HS Academy.
Yes, guys, shall we wrap it up for the day? I'm not really old enough or wise enough to bless you all, but will definitely include you all in my daily prayers to ensure that you do really well in the examination. Yeah, that's the least I can do to all of you, because the first phase of efforts is wherein you work hard. Second phase is where you let the superpower work. So I've done what I could do. I think this would be our last interaction. But what I can do after this is pray on your behalf, which I would do. And one thing that people have been asking after is like, stay little in touch. So for that, what we do is, in the breaks time, I'll be like little active on Telegram to ensure that people, if you have any doubts, and we can interact there as well. So that's the last part, and I'll take up a small 10 to 15 minute session the day before your examination, or the morning of the examination day. A small interaction session, just to give my last best wishes to you people before you go into the game. So that's it. So how was it last 2 days? Have you guys done anything new? Yes. You guys have little fun? Yes, sir. That's it. Remember, life is not a battle to be struggling, it's a game to be. Every time you're learning something, you're having fun, it's all good. The day you guys either stop learning something new or stop having fun, trust me, you might start. Because you might be in a battle. So the thumb rule to stay happy is pretty simple. It is to stay in the game. So for one last time on this day, I have just one simple question for all of you. Are we in the game? Yes. Are we in the game? Yes. Are we in the game? Yes. On the top of your voice, are we in the game? Yes. See you all very soon in CA Inter. Till then, tata, bye bye, take care and get lost. Bye guys.